reported a downtick of 3% in its production and a downtick of nearly 9% in its total sales. They've also gone ahead and cut iron ore lump and iron ore fines by nearly rupees 500 per ton. Order wins galore for Welspun Specialty Solutions. They've received contract worth 117 crores. DCX Systems has received an order worth 1,250 crores. KPI Green has received Chief Electric Inspector's approval. This is for a couple of solar projects. Carousel has, the QIP has opened for this counter yesterday. The floor price has been set at 837.89 per share. Patanjali Foods will be acquiring entire non-food business undertaking for Patanjali Ayurved for 1,100 crores. And lastly, let's focus in on IOCL Chemicals, and that is because China's Drug Regulatory Authority NMPA has approved the company's product phenylfibrate, and this approval in turn will enable the company to export its API in the Chinese market.
Plenty of stocks as always, Vamakshi. Thanks a lot for that update. And lastly, Nigel is joining in with cues from the FNO space. Nigel, good morning. Close to a record high now. What's the setup looking like?
Well, that's right. Flows seem to be very solid, Hormuz, particularly from the domestic flows that we're seeing. And that's the reason why the market continues to climb. Any kind of, headwind that comes in front of it. Just one point out here, the RSI is moving up. And in fact, it's moved to those levels where, you see some bit of a pullback. So let's see how that pans out. And with regard to the US market, so the headline index ended in the green. Yeah, the Russell 2000 that actually ended in the red. So the broader markets didn't really participate overnight. Let's get straight to the FNO cues then. The FI as well, they added, some mild long positions in yesterday's trading session. And now the positioning is such that the net longs are around 3.5 lakh contracts. In percentage terms, the long positioning is at around 83%. And you pull up a chart of the FI and the client positioning, well, they are on opposite ends of the spectrum. The FI is a net long with 3.5 lakh contracts. The clients are net short with around 2.6 lakh contracts. That's on index futures. But on stock futures, both of them are on the same side. So that's telling you that, in fact, we like to see more stock-specific action from here on, because on stock futures, both of them are net long as the screen is telling you. Now, in yesterday's trade, we ended higher and you saw some bit of writing, 24,000 put, 24,100 put, which is telling you that at around the 23,800 odd, which we were at just a couple of sessions or so ago, went to around 23,805. That should be the first reference point on the downside. For those who are holding long positions, you want to mark that, that particular level, 23,800. On the upside, 24,250 could be a near-term resistance zone. If we get past that, then maybe, in fact, we get a couple of percentage points as well that move up. And since it's Tuesday, we'll be looking at the Nifty Financial Services Index because that plays out the weekly expiry. So that will be the mover in the last hour of trade. Back to you.
That'll keep the Nifty Bank in focus as well. Nigel, thanks a lot for that. The time for a short break. Up next, when we return, we get your excerpts from our conversation with the founder and chairman of Narayana Health, Devi Shetty. Stay tuned. Back on the other side.
For this particular year, our target is to achieve about 10,000 crores in terms of pre-sales, of which, this project already has contributed about 2,700 odd crores. In Sector 71, per se, we'll have like a sustained supply over, a few years to come. This year, our overall target is to launch about 3.5 million square foot in Sector 71. Sector 71 is going to be one of the significant geographies for us, micro markets for us. This lies on the southern peripheral road, which is up to a lot of development work by various agencies. So we have about access to about 90 plus.
Welcome back to Power Breakfast. And now Narayana Health has forayed into the insurance sector, launching health insurance covering 1 crore rupees in surgeries for rupees 10,000 a year. My colleague Ritu Singh caught up with Devi Shetty, the chairman of Narayana Health, to get more insights on its new venture. Listen into some excerpts of that conversation.
Today, the patient and the hospital interest are at conflict. Because when I tell a patient you need a bypass grafting, first thing what comes to your mind is it really required, or this man wants to make some money out of me? Whereas when I become a health insurance company and I tell you need a bypass grafting, right? You have no conflict because I'm going to pay for it. We want to cover working class people for 1 crore rupees of health insurance with a premium as low as 10,000 rupees. which is unthinkable. And we know we will succeed because we are healthcare providers. We know, and we are not going to make them wait for 2 years, 3 years. We are going to cover them from day one because we know how to screen people.
So, is that going to be the strategy to sort of capture more of the market? Because there are several players in the healthcare insurance space already. What is going to set you apart? Is it just going to be the affordability factor?
See, when you talk about the market, the health insurance market, India is very, very tiny, right? It is hardly anything. So our desire is that we should offer healthcare to at least 100 million families who are the so-called missing middle. If we can cover that missing middle, we would have transformed the healthcare of the country. And this is our strategy.
All right. Could you tell us a bit about, what next? You've started with a pilot project in Mysuru. How soon do you plan to expand to the rest of the country? And you're saying you have global ambitions as well.
Our desire is to come to Bangalore in the next few weeks. Then we want to launch it in Calcutta, where we have a large presence. Then we will go to Delhi. And you see, we want to be launching health insurance where we have a presence so that we can control the quality of care. So this is the aim. Hopefully within a few years, we will be across the country.
Ritu Singh there in conversation with Dr. Devi Shetty. Now, time for a short break here on Power Breakfast. Up next, we get you cues from the commodity space. Stay tuned, we'll be right back.
And which will provide us development potential in excess of 17 million square foot. Of that 17 million, we launched about 2.1 million square foot about 10 days back. The response was very good. We've sold almost 85% plus, the units which we had put on launch.
Electric is in the fast lane after receiving the market regulator's go-ahead recently. Ola is racing towards its IPO. It is going to be the first Indian electric vehicle company to go public on the Indian bourses. But before that long-awaited IPO, we're here at Ola's future factory in Krishnagiri in Tamil Nadu.
Back with us here on Power Breakfast, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Harma, thank you for that. Well, I'm looking at all the commodities actually behaving quite well today morning. We've seen buying across board, and this is ahead of the Powell speech today. Ahead of that, we also have seen the U.S. factory activity shrink for a month-on-month basis and below the forecast, and that has led to the U.S. dollar declining, quite supportive for various commodities. So I'll start with the crude oil prices, which are now trading at a 9-week highs. We've seen prices gain up by 6% in the month of June, and July has started quite on a positive note. This is also because there is high summer demand from U.S., there is conflict in the Middle East, and Hurricane Beryl is now moving towards the Caribbean islands, and this is the first of the named hurricanes. It's a Category 4 storm, and the markets do believe, with the kind of lineup that we have, that you could be looking at a 16 to 18 hurricanes in this season. That is a premium that you've seen come in for the prices. Not just crude, gold is trading on a firm note as well. Among the metal prices, zinc is trading at a 4-week highs. Copper prices gained 1% overnight. And you also have steel rebar, which was trading at a 7-year lows, also rebounding quite smartly overnight, as markets have seen stronger Chinese data come in as well. So as I said, most of the commodities trading in the positive in Asia right now.
A positive start for commodities. Manisha, thanks a lot for that update. Now, as the United Kingdom looks to vote for a new government on the 4th of July, the Labour Party is looking to return to 10 Downing Street after a 14-year exile. Now, as per pre-poll trends, the Conservative Party is staring at a crushing defeat. The Liberal Democrats and Nigel Farage's Reform Party are expected to eat into the Tory vote bank. Now, my colleague Sanjay Suri filed this story on the battle for Westminster.
A contrary pattern is beginning to emerge through the campaigning in the British elections underway. Face to face with Labour leader Keir Starmer, Prime Minister Rishi Sunak is coming across as the more forceful, even the more convincing candidate. We saw that in the first debate between the two leaders, and we saw that again in the last one just days before polling. There's just a glimpse that last round where the two leaders clashed over immigration, among the other usual issues.
And that is the choice for you. Do not surrender our borders to the Labour Party.
Steve, this is complete and utter nonsense.
On the numbers.
Why are record numbers still coming under your watch, Prime Minister? How on earth can you say it's working? You put the scheme in place. The flights could go off. I noticed you called the election, by the way, before any flights could actually get off, and it could be tested. An interesting timing. But if this was such a deterrent, why is it obviously not working?
So when Keir Starmer says he's going to return people, is he going to sit down? Are you going to sit down with the Iranian ayatollahs? Are you going to try and do a deal with the Taliban? It's completely nonsensical what you are saying, right? You are taking people for fools, right? I think that these people should not stay on our country. They will be on planes to Rwanda. That's what I will do with them. You still can't answer the question. What will you do with them?
Send all the tens of
All the
thousands
illegal migrants who arrive will be processed and put on planes to Rwanda. And those savings we will use to cut your taxes. And what I want to do is cut taxes for people at every stage of their life.
But in the end, the debates may not count very much unless the polls are all wrong. If the polls are right, then too many people have already made up their minds against the Conservatives, debate or no debate. Returning to Parliament as Prime Minister is not impossible, but it won't be easy. And of course, Rishi Sunak knows that.
All eyes now on the UK election. Now moving on, the US Supreme Court has set a new standard of immunity to its presidents, handing over a clear victory to former President Donald Trump with regards to his case in attempting to overturn the 2020 election verdict. CNBC's Eamon Javers joins in to fill us in on the rest.
The Supreme Court ruled on partisan lines this morning that former presidents have legal immunity from prosecution for official acts conducted while in office. The decision likely severely damages the special counsel's ability to prosecute his case against Trump for the former president's conduct in the run-up to the January 6th insurrection on Capitol Hill, and it sets a precedent that may usher in sweeping changes to the American presidency itself. The majority opinion, written by Chief Justice John Roberts, said, "We conclude that under our constitutional structure of separated powers, the nature of presidential power requires that a former president have some immunity from criminal prosecution for official acts during his tenure in office." Liberal justices on the losing side of the ruling weighed in with scathing dissents of their own, including Justice Sotomayor, who wrote of the president, "When he uses his official powers in any way, under the majority's reasoning, he now will be insulated from criminal prosecution. Orders the Navy's SEAL Team 6 to assassinate a political rival? Immune. Organizes a military coup to hold on to power? Immune. Takes a bribe in exchange for a pardon? Immune, 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 immune." The former president welcomed the ruling in his favor, writing on social media that he is proud to be an American and saying today's historic decision by the Supreme Court should end all of crooked Joe Biden's witch hunts against me. One person we've not heard from yet is Special Counsel Jack Smith himself. He now faces significant questions about how to proceed in his case against the former president. Unclear where all of that is going to land, but clearly some legal dust has to settle here before all sides can move on.
And before we call time on this edition of Power Breakfast, let's take a final glance at how the Asian markets are trading this morning. It's been a mixed start across the Asia Pacific, and the Hang Seng has now built on to its gains from the start of the show. It was around 0.8% higher when we began the show. It's now trading with gains of over 1.5%. And the Taiwanese index too has cut some of its losses. It was trading around 0.5% lower, and now it's almost about to slip into positive territory as well. The Japanese indices continue to do well. The Nikkei is up 0.5%, but the South Korean indices are seeing a bit of a struggle this morning. Pull up the GIF Nifty as well, and that continues to remain where it was. It is trading with suggesting an implied open of around 50 points. So we're likely to open on a record high when it comes to our own markets. But the Japanese yen is the one in focus, which has fallen to a fresh 38-year low against the US dollar, falling to levels of as low as 161. But with that, it's a wrap on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.
is building its electric empire from the ground up. We're here at this colossal factory, which is where scooters like these are coming to life. Set up in 2021, Ola claims its future factory in Krishnagiri is one of the most advanced two-wheeler factories in the world, boasting of automation and cutting-edge processes. The factory is automated with modular and flexible assembly lines and an in-house paint shop. When at full capacity, the 10 production lines at the plant are expected to grind out one scooter every 3 seconds. However, at the moment, the future factory has one manufacturing line and is producing anywhere between 2,300 to 2,700 scooters a day. This Ola Future Factory where we're at is spread on a 600,000 square feet area and has an annual install capacity of 1 million units. It was built from ground up in less than 8 months in the middle of the pandemic, and there's a few things that really stand out as you enter this factory. The first, of course, as the name signifies, the future part in it, a lot of the tasks here on the shop floor are automated, with robots also deployed to carry out many tasks. The second and the most interesting thing I thought is that this plant is largely run by a women-only workforce, so kudos to Ola for that. And third, for a manufacturing facility, it is surprisingly quiet. The female workers on the shop floor total 944 on-roll employees, representing 100% of the shop floor workforce and more than 25% of the total on-roll employee headcount. After the future factory, Ola also plans to have an all-woman workforce in its cell manufacturing facility, the Giga Factory, as well.
The reason we set up the women factory was that we want to set up an example for the industry that in India, women can actually participate in the workforce.
Ola began the production of its second-generation EV scooters in September last year, and its founder says Ola will start the production of motorbikes in the factory later this year.
We are focused on the two-wheeler, Ritu. Scooters already has given us such a strong growth over the last 2 years, and last year we expanded our portfolio of scooters from the S1 Pro to multiple S1 platform scooters. Now we are working on the motorbikes. Like you said, we showed you motorbikes 15th August last year. Yeah. Those were early concepts, and we've been working on the R&D of those things. Okay. So through next year, you will see us launch some motorbikes, and I do hope that the consumers love them.
I think at this point that pretty much all the data is in play, and it all will add up to the market's view on whether there's a cut or not. And as you said, the recent inflation prints have been somewhat more friendly from the perspective of encouraging the Fed to ease, but nothing's a done deal until the Fed sort of looks at all the composite indicators, whether it's activity,
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, and it's going to be another good morning, question mark, because it was a very good day yesterday. What a way to kickstart July with a super duper broad-based, very healthy up move. That was Monday for you. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Sonia and Nigel. Kaisa hai, morning?
Hi, good morning Prashant, good morning Nigel. Well, I don't know what to say about this market, right? Every day new highs, every day there's so much momentum. Of course, at some point, some pressure has to kick in, but it hasn't yet. So I guess enjoy the party till it lasts.
Well, that's right. Some signs of cautiousness are creeping up, but let's see whether or not the market chooses to just ignore it and continue to climb the wall of worry.
You know, there's an old saying, right? Markets can stay irrational a lot longer than you can stay solvent. Yeah. It works both ways, both on the way down. I mean, I think that saying was, I think Keynes or somebody who said it while the market was falling, that don't keep buying because the market may keep dropping. But I think on the way up as well, it is true, right? I mean, if you sort of keep second guessing the market, I mean, I think you miss out. That is also, I think, absolutely true. But let's kind of kick off things with where we left off yesterday, and then we will tell you things to watch. So broad-based, healthy up move, as I said, with the market looking solid. This is, of course, as we've been saying, after a spectacular June, one of the best Junes that we've had in a while now, right? 7% moves. And we added another 0.5% on the Nifty, the Sensex, the Nifty Bank and broader markets. I mean, actually, broader markets did even better. Look at the mid-cap index, the small-cap index. Look at the micro-cap index. Micro-cap index, I think, yesterday was up almost 3%. So, smaller the better. That's essentially the message, at least yesterday. There may perhaps be a little element of catch-up here, mid-caps and small-caps, because, last 2 weeks now, actually, it's been large caps which have been running ahead and broader markets which took a bit of a backseat. IT was, of course, the other big mover with a near 2% pop. We'll talk more about this with regards to what's happening right ahead of results. Now, FII long positioning, it continues to be high. It moved up a tad higher as compared to Friday's close. Now, we're at about 3.5 lakh contracts long, net long. And you look at what clients are doing, what local positioning is, that's on the other side. I mean, they're actually short. Not in an extreme way, but they're short. So, a data point which perhaps at some point will become relevant, but for now, it's being kind of not ignored, but at extreme levels, and repeat, it becomes a bit of a warning sign that maybe things are getting a little overdone because everyone is on one side of the trade, which right now, of course, is on the long side. Now, positive cues from Wall Street overnight, good cues. S&P 0.25% higher, Nasdaq almost about 1% in the green. You had manufacturing data out of the US, which was disappointing, but it was largely ignored. The reason I'm saying it was largely ignored because yields should have fallen. Yields did not fall. Yields went up, right? So you had the 10-year, which went up 7 basis points to almost 4.5% now. Not much reaction in the dollar index. That basically consolidated around the just under 106 odd levels. Oil prices, they were up about 1/3%, but nothing notable really. Which gets us to the levels here as far as markets are concerned. It's very it is index levels which matter, but I think it is also so much to do with individual stocks, which we will talk about, right? Now, on the Nifty, a decisive break about 24,174, which we did not do yesterday. It's 30 points now, would indicate further up move. So perhaps we should get that. On the way down, supports come in at the hourly averages. 24,061 is the first level. Again, not very far from where we left off yesterday, about 80-90 points. And then, of course, under it, you get to the 40 hourly exponential, which is 23,913. Now, Bank Nifty needs a decisive close above 53,180. We'll see if that, the market's got it in it to take those levels out in the coming days. And supports come in at about 52,166. So those are sort of, circling the levels off for you this morning. GIFT Nifty will indicate the opening picture. It's about a 40-45 point higher start. It's a good start once again. We'll see if we get that and what after. Build on what we've already seen, or maybe a little consolidation. Sonia.
Oh, absolutely. I mean, I don't think a little consolidation would hurt anyone, right? I mean, look at the way this market has been moving. Even this morning, actually, the GIFT Nifty is suggesting a very, very green start, up almost 45 points. And it's no joke the kind of momentum that this market has seen over the last many days. I mean, if you look at it, the Nifty is now holding well above 24,100. And from the June 4th low, right, that seems to be the marker for everyone because that was the day that the market really took a slide. From then, the market is up 10% in like less than a month. Phenomenal, the kind of moves we've seen. There's large buying from domestic institutions, and the big reason for the market rally is the money that has been coming in from DIIs. I mean, in June, there was over 29,000 crores of buying. Yesterday, there was 3,900 crores of buying in a single trading session. So that has really been where the momentum is coming in from for our markets. Now, if you look at the global markets, right, it's been stable. The Nasdaq, in fact, hit a fresh record high again overnight. And we've had, of course, lots of things to watch out for. Fed Chair Powell's speech will be something that the street will watch out for. The US markets will actually be closed on Thursday for the 4th of July holiday. So you'll get a little bit of tepid cues from the US markets over the next couple of days. But in our own markets, the stocks to watch out for, one of them I'm looking out for closely is the two-wheeler stocks, especially in the rural markets. So Hero MotoCorp, for example, saw very strong sales in the month of June. total sales went up 15.5%, and the expectations of a pickup in the monsoon is something perhaps that could aid Hero MotoCorp further. So I'm watching out for that stock very closely in trade today. But other than that, this is a market that is, there are plenty of fish in the sea when you go out there. It's just a matter of picking the right stock.
Well, that's right. And yesterday, portfolios felt good because the broader markets, the small cap index was up 1.5%. So though we just talk about the headline index, and that's the Nifty, the small cap index actually did very, very well. Now, overnight, the cues are positive. And the US markets, the headline indices, they ended higher. But just a word of caution out here, on the S&P 500, 3/4 of the stocks out there, they actually ended in the red. And the Russell 2000 was down 0.8%. So actually the broader markets in yesterday's trading session overnight, they didn't really participate. So just a word of caution on that front. Besides that, crude oil prices are moving up as well. Geopolitical concerns, it's a concern with regard to the hurricane as well. So on the back, that as well is moving to that uncomfortable mark of around $87 odd. And as Phil mentioned, we did have the yields as well that moved up a little bit. Today, the big moving point in the second half of trade will be the Nifty Financial Services Index, because that plays out the weekly expiry. And yesterday it ended with a gain of closer around 1%. How's positioning? Well, in terms of the FIs, well, they have 83% of their positions on the long side, and the long positions, closer on 3.5 lakh contracts, are on the long side. The clients are on the opposite end of the spectrum. So they have closer on 2.6 lakh contracts on the short side. FIs net long, clients net short. You would like to see actually FIs being net short as well, because that's when you see a bit of a short squeeze. However, on stock futures, both of them are on the same page. Both of them have long positions. So it's going to be a more stock-specific market, according to me, from here on. The headline index could be in a bit of a range, but stock-specific action is likely to continue, and you'll get plenty of winners out there as well. In an uptrending market, you want to see both the nearest puts see some writing. And that's precisely what happened yesterday. 24,000 put, 24,100 put, which brings us to the level. Since we're seeing writing at around the 24,000 put mark, and in the last couple of days, we went down to around the 23,805 odd. So that becomes the line in the sand on the downside, the first reference points that you have. On the upside, near-term resistance could come in that vicinity of around 24,250 to around 24,300 odd. The stock that I'm looking at for today's trading session is Deepak Nitrite. Now, yesterday the stock made a fresh 52-week high, and it's seen a good trend in the last few sessions. That's moved up. A few factors to bring on the table. It moved high. It moved high on good volumes, good delivery-based volumes as well. So that's good news. And last week, the promoter entity that just nibbled in, they bought only around 35 crores worth of shares. But in a market where you're seeing promoters off, selling some stake, it was heartening to see that, in fact, there was some buying towards the end of the quarter. And also there was long built up, because there was long position build up of close to around 10% when the stock ended high with a gain of close to around 4%. The street is building in fundamentally a recovery in the second half of the year. So that could be the stock to track. Made a fresh 52-week high, and techno fundamentals, so to call it, is supporting the stock. So let's see how that goes.
Okay, thanks a lot for that. So plenty of stocks to watch out for. The GIFT Nifty is indicating a very, very strong start, up almost about 45 odd points. And remember, lots of things, right? The IMD is now forecasting an above average monsoon. So a lot of these stocks as well will continue to be in focus. But let's do one thing. Let's get you some commentary. First up on the equities front, Mahesh Nandurkar of Jefferies says that the rupee should stay stable in FY25 despite the likely deterioration in the current account deficit, as the outlook for capital flows is strong, slowing IT exports, weak goods exports trend, and a surge in electronics and gold imports should raise the current account deficit by 50 basis points on a year-on-year basis in FY25, but still reasonable at 1.2% of GDP. Net FDI should improve as repatriation slows, and stable to higher FPI flows make the capital flow outlook strong. They are underweight on the IT sector and are watching out for more PLI schemes for manufacturing support.
All right, some money market views now. This is Abhishek Goenka of India Forex and Asset Management, who says that Fed communication continues to remain a bit hawkish, citing slow progress on inflation and is keeping the dollar supported. He says US June jobs report on Friday will be the key data to look forward to. He adds rupee is off lows and continues to remain extremely range-bound, adding that offshore yuan has also weakened past the 7.3 mark against the dollar. And unless we see a reversal in the yuan, the rupee strength is likely to be limited. He expects the rupee to be between 82.7 to 83.7 to the dollar in the medium term.
Okay, and on the bonds, Vishal Goenka of IndiaBonds.com says that the bond market prices have edged lower as a lot of positioning leading into India's index inclusion started to unwind. In global markets, he says US treasuries continue to widen post the presidential debate. Currency moves stressed the Japanese yen further, and oil continued its rise. Given the developments, he expects bonds to trade cautiously with a widening bias and expects the 10-year benchmark bond to trade in a range of 7 to 7.05%.
Okay, well, more on views in a bit, but let's get a global view in now. Robert Socken is global economist at Citi. Robert, great to have you with us here. Good morning. Prashant this side. So the Nasdaq up 1%. Yields, on a day when yields went up about 7-8 basis points. But let's just talk about yields, Robert. What is the market pricing? More bear steepening. But what is really going on? Because you had the manufacturing data out of the US which weakened, but markets ignored that. Your thoughts, Robert?
Hello, and thanks so much, as always, for having me. I think it's a very challenging market backdrop to assess and to really make sense of all of these moves. As you noted, first on the economic data side, the ISM manufacturing came in a little bit soft, not drastically so, but still a bit below expectations. But that story's been known for a while, that the manufacturing sector has been weak to moving sideways in the US for quite some time. And there are other data on the manufacturing sector from the PMIs that have been a bit stronger. So even there, we've been getting a bit of a mixed picture. But overall, that's mostly a known story. And I think probably what markets were really reacting to with putting in those higher yields is maybe the potential for a second term of President Trump getting marked up with a higher probability given events in recent days. And most market participants seem to expect that might mean higher deficits and higher debt levels, which put pressure on yields. So I think that might be what we're seeing being digested in the market. But there's a lot of mixed signals going on right now. And there's a lot of important stories between the US election, what the Fed is doing, the underlying resilience of the economy. Going forward, I expect all of those stories are going to be in play in one way or another.
Robert, hi. Good morning, and thanks a lot for joining in. What is your view on how emerging markets like India are going to shape up? Because we have a big union budget upon us. Growth has been relatively good. Inflation has been, sort of tapering off. And in general, the markets continue to be at record highs. How are markets like India positioned now on the economic front?
Yeah, absolutely. And, we've talked about many times on this program how the global economy has been remarkably resilient in recent years. And a big part of that has been the resilience of emerging markets. In aggregate, emerging markets grew about 4% last year. And we're looking for them to grow in aggregate in 4% again this year. So we're not looking for any type of slowdown in the EM space. Now, there is a mix of results there. Some emerging markets slow down a bit, a few pick up relative to last year's pace. But overall, EMs are very well positioned and continue to show remarkable resilience in the cycle. For India in particular, that was one of the best growth stories last year. Data continually surprised us to the upside. We're looking for a very strong year from India as well. And then going into, as you said, that budget season, it'll be interesting to see with the new government what type of additional policies they explore. We think that a lot of the policies that were put in place are being explored by the Modi government in the prior term are likely to continue. And there's likely to be some expansion of policies into other spaces given the coalition government. Overall, though, I think that'll just be an additional positive story for India. And so I think you're seeing that reflect in India equity markets, that you have the positive from before, you get more positive now, and that India is likely to be a very positive growth story this year and for many years to come.
All right, so India is well placed, Robert, as you say it. But what about the mother market? That's the US market. The headline index has done very, very well, whether you look at the Nasdaq or the S&P 500. However, this rally that we've seen in the US market seems to be narrow because the Russell 2000 actually hasn't moved year to date. And even overnight, though the markets ended in the green, the Russell 2000 was down close to around 0.8%. How much of a concern is that? This rally in the US market has been quite narrow, actually.
Yeah, I think in the US market, you're getting a very interesting story where you've had this sort of structural AI factor in the background, broader tech factor that's pushing the market higher. And that can likely continue even if the US economy slows down more significantly as we go into the rest of this year. So you can still get a fairly robust or stable equity market, even in the face of an economic slowdown, most likely, given this structural factor that's working in the background. Now, if you were to get a true soft landing in the US, it's possible that you'll get a broadening out of the market. And I think that would very much be the case if you were to get a soft landing, that you would see a broadening out in performance from where we've been. And that'd be very bullish for equities more broadly. So overall, I think the relatively narrow story, as you said, is related to this secular tech story. And really, if you start to get more clear evidence of a soft landing, you could get a broadening out in the market. So I think that's why you're seeing those different factors in the equity market that you noted.
Okay, Robert, we will end the conversation on that note. Thank you for your quick take on the markets and on the global economy. Very helpful there. Let's slip into a quick break. The Nifty continues to be at a record high above the 24,100 mark. But which are the stocks that you need to look at as we begin a brand new day of trade? Coming up in just a bit.
Market, whether it's inflation itself, I think all that's going to go into the mix. And certainly our economists, their view is that there will be enough to encourage the Fed to start to ease in September, and we're the view they will do once a quarter cut starting in September. The market is not quite pricing that. It's varying between sort of 1.4 to 1.8 cuts for calendar year 2024. So I think that the outcome of this will really be path dependent, and it'll be a function of all the different data points that come out between now and then.
So markets will be looking forward to the budget in terms of policy making for next 5 years. And as you very correctly mentioned, now for Indian equity market, margin expansion story is over. Valuations, we are already trading at a premium to other countries, other peers. And hence it will be all about governance and earnings growth.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicates...
Welcome back. Hope you're having a good morning of trade. You should be, considering the way the market has been moving. And if you're a bull, things are only going to get better. At least that's what the GIFT Nifty is suggesting this morning. But let's take it straight to individual stocks because there's plenty to talk about this morning. I'm looking at 3 stocks, which are the auto names that came out with their numbers post-market hours yesterday. I think top of the pack is Hero MotoCorp, so I'm going with green over there. Very good set of numbers coming through for Hero MotoCorp. A 15% growth is what they have delivered this time. Nomura's estimate was 4.87 lakh units. They've delivered over 5 lakh units. So that is green. TVS Motors actually red because the numbers are slightly lower than what the street was estimating. And some of the export markets continue to grow in low single digits for names like TVS and Bajaj Auto. So I'm going with red over there. And for Tata Motors as well, I'm going with red because domestic sales were down 8%. CV sales were down 7%, passenger vehicle sales were down 8%, exports was the only piece that was up 13%, but it's a very small portion of the domestic business. Overall, domestic sales have seen a big degrowth, so I'm going with red for Tata Motors.
Okay, all right. Well, I'm keeping an eye out on NMDC because they came out with their June update, and in fact, it was quite weak. But that was more or less on expected lines. So the sales volumes is down by close to 9%. You have the production number as well that was down by close to around 3%. They're waiting for some approvals with regard to getting additional capacity on stream. But for the time being, these numbers go down as weak. And yesterday, we had highlighted here on Bazaar itself that there was a possibility that they go ahead and cut prices by around 500 rupees per ton because we're getting into a monsoon season. So that's normally what we see softening in terms of pricing. Just one word, there are reports that maybe there's some flooding in parts of the globe, and that's what could keep global iron ore prices firm. But for the time being, both these two updates are a little bit disappointing, so going with red on NMDC. But Mangalam joins us to tell us about Patanjali Foods. Morning, Mangalam.
Good morning. So yesterday the stock ended at the high point of trade with a gain of almost 7%, and this was something which was widely expected. It has come about. The company has gone ahead and acquired the home and personal care business of Patanjali Ayurved. Basically what they've acquired is the dental care, skin care, hair care and home care business of Patanjali Ayurved, for which they will pay 1100 crore rupees over 5 tranches, and additionally for 20 years they will also pay 3% of gross sales, which accounts for a minimum 83 crore as licensing fee annually. So what is it that they're getting? You know, the HPC business or home and personal care business of Patanjali Ayurved is a business which has around 2800 crore of revenue and 500 crore of EBITDA with 18% margins, as against Patanjali's own business of 32,000 crore revenue, 1200 crore EBITDA and 4% margin. So what this deal does is adds about 8.5% to their sales and 32% to their EBITDA ex royalty. Over the last 3 years, the CAGR of this business has been around 6.4%. Majority of this business comes in from dental care. 1345 crores is the revenue out there. Skin care is about 725 crores with 14% margins. Home care 410 crores and hair care is roughly 300 crores with margins of 12%. Additionally, Patanjali's current distribution is 1.5 million touchpoints, as against the business that they've acquired, which has 1 million distribution touchpoints. So there are scopes of synergies as well. So let's see where this goes from here. But for now, that the deal has happened and at attractive valuations with margin accretion, one sees green on Patanjali.
All right, Mangalam, thanks very much for that. Well, more stocks with news flow. Vamakshi is here with details on these names. Vamakshi, morning.
Well, good morning, Prashant. Let me first take you through Carousel. This stock will be in focus because the QIP opened yesterday. The floor price has been set at 837.89 per share, which is more or less in line with where the current market price of the company is at. So going with the green as far as Carousel is concerned. But CSB Bank is also expected to open higher. There's a good operational update that has come through from them. Gross advances stood at 25,099 crores. This is an uptick of almost 18% on a YOY basis. Total deposits at nearly 30,000 odd crores saw an uptick of almost 22%, but the CASA ratio has deteriorated to 24.9%. DCX Systems has received a large order. They've received a contract or order worth almost 1,250 crores from L&T, and this is for manufacture and supply of electronic modules. So going with the green for this counter as well. IOL Chemicals has received China's Drug Regulatory Authority, which is NMPA. They've received the approval for the company's product Fenofibrate, and this in turn will enable the company to export its Fenofibrate API to the Chinese market. So on the back of that, going with the green for IOL Chemicals. And lastly, let's focus in on Angel One. Unlike the other counters that I mentioned before, this counter is expected to open lower today, and that is because SEBI has directed to discontinue the practice of levying slab-wise fee structures by MII. SEBI has said that the charges levied by market infrastructure institutions such as stock exchanges, clearing corporations and depositories should be uniform and not be based on volumes. This initially was benefiting some of the discount brokers, but with the new regulations that will come through and the circular will be effective from 1st of October, the top line of discount brokers could be impacted, and on the back of that, expect Angel One to be under pressure today.
Okay, interesting. We'll take that discussion forward in just a bit. For now, let's do a quick recap of our top stocks. Stocks with positive news flow: Hero MotoCorp, Patanjali Foods, Carousel, CSB Bank, DCX Systems and IOL Chemicals, while stocks with negative news flow: TVS Motor, Tata Motors, NMDC and Angel One. Let's take a short break. On the other side, Amnish Agarwal of Prabhudas Lilladher will be joining in for some fundamental stock analysis. Stay tuned.
Don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be slightly more because also available.
Welcome back to Bazaar Morning Call. Well, we've told you about the equity markets, but let's hop across to Manisha Gupta, who joins us to give us a roundup of what transpired in the commodity space overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, it was a good night, and it's a good start to Asian markets as well when it comes to commodities. So you're looking at the crude oil prices trading at a 9-week highs right now. It has to do with the U.S. summer demand going in strong, the Middle East conflict, and of course, the first of the hurricanes of the Atlantic season. Hurricane Beryl really seems to be impacting markets there. So all of that really is adding premium to prices. Gold and silver also holding firm, and this is after the U.S. factory activity has shrunk for a third straight month and much lower than the numbers that we saw in the previous month as well. The U.S. inflation also easing a bit has now added to hopes that you could be looking at the first interest rate cut coming in for September, second in December. Those are the probabilities markets are working with right now. Having said that, markets will keep an eye on the Jerome Powell speech today. You have the FOMC minutes coming in on Wednesday, and then the U.S. non-farm payroll data on Friday. So ahead of all of this, we've seen a decline in U.S. dollar index, and that support is coming in for all commodities.
Okay, thanks a lot for that. Well, that is the view on the commodity space and how you should look at it this morning. But let's get back to equities now. Amnish Agarwal, Head of Research at Prabhudas Lilladher, is joining in to talk about how you should be approaching this market. Amnish, hi, good morning, and thanks a lot for joining in. You know, I wanted to start by asking you about the auto sales because we've had some pretty decent numbers come in from the likes of Hero MotoCorp. The rural markets are coming back. You know, some of the passenger vehicle players like M&M have done well in their SUV sales this time. Your thoughts on the auto sales overall and any stocks that you would buy at this price?
Yeah, hi Sonia. So, you see, as expected, auto numbers have been reasonably good. Particularly if you look at, say, M&M, the momentum is clearly there from the last few quarters, and the double-digit growth even now in the PV segment and revival in the tractor demand also, because that has been in the positive territory from the last 2-3 months. So that I think bodes well for M&M, because I think going forward, if monsoons are normal, rural recovery is there. So M&M seems to be a very visible and clear play, and it remains one of our topics in the auto space. Now coming to your two-wheelers and particularly your Hero, I think last couple this month there has been some sort of a rebound, and Hero, I would say, is a very strong play on the rural demand, because if the rural recovery actually happens, then Hero should do well over the, I would say, the near to medium term. So from that angle, I think the Hero also looks good. But having said that, all these stocks, they have run up quite decently in the past, say, 6-8 months. But even then, the scope to make another 15-20% over the next 15 to 18 months still remains.
Okay, all right. Hi, Abneesh. Thanks a lot for joining in. I wanted your view on some of these chemical players. You know, yesterday you had Deepak Nitrite that went ahead and made a fresh 52-week high. You know, the street is bracing for better times in the second half of the year. They've been focusing on backward integration, on capex as well that will come on stream, and demand recovery is expected in the second half. Your view on either Deepak Nitrite or other specialty chemical stocks?
You see, the entire specialty chemical space from the past few months is doing well, primarily because the market view is that the worst is over for them. Although in terms of a significant recovery in the margins or sales, we are some time away. But having said that, even if you would have looked at the 4Q numbers, we have already witnessing some sort of a sequential recovery, which means that you can say we are now coming up from the turf. And that is what is being reflected in all the, you can say, stock price of the specialty chemical companies.
Okay, that's on the specialty chemical companies. Got that. I also wanted your thoughts about some of these banking names that have been hitting new highs, whether it is names like ICICI Bank, Axis Bank. SBI has also come back in a big way. But particularly for private sector banks, is there still more to go?
Yeah, Sonia, I believe that there is still reasonable amount of steam left in the private banks, because if you look at the entire BFSI space, the last year was actually led by all the PSU banks, which saw their price to book coming from anywhere from 0.5 to something like closer to 1, some even cross that. Whereas all the private sector banks, maybe if you look at, say, the scenario 1 month back, their price to book value, they were at, you can say, multi-year low. So most of them were trading anywhere between 1.5 to 2.3 was the max. So I think if you look at the historically where they have been trading at and the kind of profitability, the overall your NPA situation, I think in the BFSI space this year, I think private banks are going to do better than both NBFCs as well as the PSU banks. So based on that, I think, which is I think macro in my view, the loan growth continues to look good. And I see a possibility that all these, you can say, the leading private banks, which are the frontline 4 to 5 banks, so they have the potential to give anywhere between 15 to 20% return even from the current levels over the next 12 to 18 months.
All right, Amnish, stay with us. We're going to come back to you with lots more to discuss here. Such a vibrant market, right? A lot's going on. But Anuj is in the studio. We're going to him a little earlier than usual with what he's making of things as we kick off another session. Anuj, morning.
Morning, Prashant. And you know what? I'm still having a bit of an hangover of that Team India win. And the Indian market is behaving just like Team India. Every day, someone or the other is doing its bit. Just like, in Team India, someone was shining by rotation. That's what the market is doing. It started with banks. We had a big move in Bank Nifty. Then for 2 days, leadership was with Reliance. And yesterday, you had IT. Today, perhaps it could be something else. The only risk to this market is this long exposure by FIs, which is at record level. But just look at this table, which will come up next for you. The Nifty lows every day has been rising. And, that's a dream market for traders, for positional traders. All you have to do is just keep previous day's low as stop and carry your long positions, and that's working in this market. On the Nifty, we're likely to now open above the previous high of 24,174, and after that the resistance comes in at 24,200 to 24,300, the weekly option zone, and the bigger resistance is 24,400 to 24,500 on the monthly options. Support comes in at 24,050 to 24,100, and then 23,985 to 24,000, the last 2 days low. The Bank Nifty, where we have the weekly options expiry today on the Fin Nifty and then Bank Nifty tomorrow, is showing signs of fresh expansion. Yesterday it bounced from the 10-day exponential moving average. So that's interesting because moving averages have caught up after 3 days of consolidation. Resistance 52,700 to 52,800, and then 53,150 to 53,200, and the support lies in at 52,400 to 52,500 first, and then 52,150 to 52,200. The quote of the day is an interesting one. It will come up for you, and it is never allow a person to tell you no who doesn't have the power to say yes. Mr. Roosevelt said that.
All right, Anuj, that's an interesting one. But hang on, because there is this negative news for brokers this morning, isn't there? So SEBI's now asked exchanges to migrate from charging transaction charges based on a volume-based structure to a flat volume-weighted sort of average structure now. Anuj, why don't you tell us what has happened and then the implications?
Absolutely, Prashant. And I think this is a good one. And it again ties in with the fact that now clearly there's an attempt to sort of put a bit of a cap on this daily options activity which is happening. And while we see that most of these brokers have 20 rupees brokerage, but a lot of them are earning so much money. Why is that? And the reason for that is, this new circular which has come from the SEBI is a big blow to discount brokers, because what it's saying is that the MII, or the market infrastructure institutions, should not be giving a discount based on turnover. Essentially what's happening till now, what is the current setup? suppose you're trading big, and you are, at the end of the day, you get a contract note. In the contract note, it's clearly mentioned that how much is your transaction charges. You paid that, simple, and the brokers are collecting that on a daily basis. They're depositing that to exchange on a monthly basis. And what the exchange is doing is, it's a simple business, right? You get me business, I give you an incentive for that. Let's put it that way. What the exchange is saying is, okay, you get me so much business, I'm giving you 20 to 30% discount. For discount brokers, 15 to 30% of revenue is coming via this incentive. And you know what? For the deep discount broker, this is 50 to 70% of the revenue. 50 to 70% of the revenue comes because, you've collected so much money from the clients and you have deposited it to the exchange. Exchange is saying, you have given me so much business, this much is yours. So it's simply given back to you. This is what SEBI is saying is not going to happen. You collected this much from the clients. If you are giving a particular amount to the exchange, that's it. Brokers will not get that. So I think that is a big blow to all these discount brokers. There's going to be a parity. And I think this is very interesting because just a couple of days back, Nitin Kamath had tweeted, and I think if that tweet can come up for you, because it was about Kal Hona Ho, when the SEBI chairperson has said, we don't know whether this is going to stay or not. Kal Hona Ho. It said the biggest regulatory risk, or the biggest risk for a business which is regulated, is regulations. Regulations can change anytime, and this is going to be applicable from the 1st of October. So this is going to be a material change. My sense is today you would see a deep red in some of the market participant stocks like Angel Broking and a couple of other ones as well.
Angel, Motilal, I wonder exchanges which are listed. BSE. So some of the stuff we'll watch. Thanks very much, Anuj, for joining us and sort of explaining this to our viewers. Rajesh Baheti is with us as well. He's Managing Director at Trossis Capital Services. Rajesh, good morning. Good to have you with us here. Thanks very much. So why don't we dive a little deeper in terms of exactly the mechanics of this, Rajesh? Because how this affects retail investors and how this affects high HFTs, algos, etc., is different. So, in very simple sort of language, Rajesh, for viewers who are watching, what has happened and how is this going to be different from how things were done?
So earlier the exchanges were following, or currently the exchanges are following a graded transaction cost structure where they start with a headline number, and as you pile on more volumes, your the next set of volumes will come at a lower cost, or you will be rebated certain amounts from the headline number. So if you're aggregating a lot of volume under your banner, you would end up with a weighted average cost of trading which is much lower than the headline number. But because you're charging everybody the headline number, which was also correct as per current rules, you were making the spread between the weighted average cost that you were charged eventually and the headline number that you were receiving from everybody. So for the discount broking houses, as Anuj rightly said, this number was very, very significant because they were clearly aggregating a huge amount of volume. 2 or 3 brokers together were concentrating about 35% of all retail volumes in India. So obviously, their individual volumes were high enough to put them in the lowest slab possible, whereas they collected at the headline rates. So that spread was kept by them as other income or whatever you may call it. That practice is going to stop. On the other hand, SEBI has also told the exchanges that based on all the discounts you were given, what was your average realization or weighted average cost realization, and you should not go and charge the current headline number, but arrive at your weighted average realization, and from the first rupee of transaction, charge everybody a flat rate, which is closest to this average realization that you were getting today. So the total cost of trade for everybody will come down, but for those who are doing a very high volume and concentrating volumes either as a client-based trade, which is the discount broking houses, or certain algorithmic trading brokerages, for example, Share India and some other brokerages that were doing very high levels of proprietary volume, the weighted average cost for those brokers will go up.
So 2 questions, Rajesh. You're saying that for everyone, for viewers who are watching, right? Their own cost, transaction costs will come down. That's point number 1?
Yes,
right?
Because the second paragraph of SEBI's circular clearly states that the exchanges can't charge today's headline number,
Yes.
but they have to look at their average realization that they're getting based on these discounts, and
Okay.
from the get-go, charge that as the flat rate structure.
Okay. Now, second, what does it do to volumes, options volumes? Does it, will this have an impact? Because we don't have exact data, but, this HFT, prop, etc. would be a very large share of the overall trading volumes. What does it do to the overall volumes in the option market, spreads, etc.?
So what's going to happen is some of these algorithms which generate a huge amount of volume are working on the new old variable cost structure where they already take into account because it's predicted by them that this is the kind of volumes they will do, and they will know what is the weighted average cost of trade to them. So they work on a variable cost which is much lower than the headline number. And because of that, they are able to slim their spreads when they're quoting and engage in doing a lot of volume. Now that the number will not change. For example, it will just be the headline number, maybe beginning at a lower price, but the weighted average cost to them will go up significantly. They'll have to price in a higher spread, and I don't know, only time will tell, but I predict that there will be some hit to the HFT side of the business, and maybe the volumes on that side of the business will come down.
Just last question, Rajesh. For exchanges, for brokers, of course, this is a hit. For exchanges, what does this mean? Will they be able to manage, or will there be a hit to earnings there as well?
So the way the SEBI circular it says is, to begin with, it will be very neutral for the exchanges because they're going to simply look at the total realization that they get today, divide by the turnover that they're doing, and they'll come out with a weighted average realization, and that is the headline number they will charge. But if HFT volumes were to suffer because of the headline number, which for them is much higher than what they are paying today, then overall volumes will come down a bit, and to that extent, the exchanges might be hit.
Okay, we will leave it at that, Rajesh. Thanks a lot for joining in and telling us, about this issue and what one should be doing from here on. But we still have about 20 minutes left for the pre-opening rates to kick in. In fact, the IT stocks were the ones that were rallying yesterday. So let's put the spotlight over there. There are a lot of brokerages that continue to remain selective on the IT space and positive on the sector. So we'll, focus on them as well. Nomura, in fact, recently just turned bullish on the IT sector as well. Sandeep Agarwal, fund manager at Sovilo Investment Managers, joins in now. He's tracked the, the IT space for over decades now. Sandeep, thanks a lot for joining in. Nomura put out this note where they said that Q1 will mark the bottom of the sluggish revenue growth for the Indian IT sector. Would you concur with that view? And are you as bullish on the IT sector? I mean, is the risk reward now starting to turn favorable?
Hi, good morning, and thanks for having me on the show. So I, completely agree with what has been mentioned in the Nomura note, but I would say I think not this quarter, but last quarter was the worst quarter in my view. This quarter will begin with positive surprises, at least on the margins front. And this I'm telling you based on data of global players and Indian players. And there's so much data all over available, which clearly suggests that, this quarter cannot be bad, at least from the margin front. Revenue growth also, I think that, it will be slightly better than the previous quarter. So that is the way I look at the sector. And I think from the stock price perspective, the last quarter honestly is the bottom of it.
Okay. Sorry. So just to complete that argument, if you think that this is the bottom, right, and there are, of course, things are going to improve from here on, what are the biggest triggers for the IT sector now? Where do you see the turnaround come in? Is it in better client spending? Do you think BFSI is going to pick up in a big way? Do you think the overall environment in the US is picking up? Just trying to understand what are the big positive triggers for the IT sector now.
So, if you see the data of Microsoft Azure, if you see data of AWS, if you see data of SAP, if you see data of Oracle, everyone has been posting a very, very robust growth of from 6% to almost 30% year over year in this sales. And if you see this sales basically percolates down for implementation and maintenance and development, all three things to a lower cost players or basically offshore play. And I think, when this growth is coming, and we are seeing this for last 4 quarters now, it has to definitely percolate down to Indian vendors finally. So I think that is one reason why we feel so bullish about it. Secondly, if you see the BFSI also has made a kind of bottom. We are not seeing any negative news on the BFSI side. Third, if you see the deal win data of last 4 quarters, whether it is TCS, whether Infosys, you will see a clear trend that deal wins have been very strong. What has not happened has been the execution. So I think now execution will start and we will see much better growth. But having said so, I would also give a caveat that this is not a sector where you can do 30-40% kind of growth. So that expectation should not be there. This is a sector where you can do 10-12% growth in a steady state, and I think that is where we will return back from this quarter.
All right. Hi, Sandeep. Good morning and good to see you. And you're clearly sounding quite bullish and optimistic about prospects of the IT space. My question to you is, how much is in the price? The last 1 month or so, the index itself, I think, is up close to 14-15%. And at Jefferies' note today, they say that the sector is trading at around 28 times PE, which is a 20% premium to its 5-year average. And it's a 35% premium in comparison to the Nifty valuations. So how much of the good news is in the price? And do you think that now the sector could trade at a higher multiple?
So, Nigel, it is a very good question. Let me put it this way, that as I said, that last quarter, I think the stock prices had bottomed out, and from there you had seen good movement in the stock. So some portion of, the valuation game or the chase for valuation gap has already been over. But let me put it this way, that, when this kind of growth which we are seeing in the cloud players is coming, we will also see good demand in the Indian players. Secondly, I think the biggest gap is that, the multiples which we are talking about is based on the current margins. But you remember that, last quarter one FY23 was the quarter when margins started falling because of very high attrition. And that has come down very, very sharply. We are down from 27-28% attrition for TCS to now 13%. The subcontracting cost for TCS has come down from 10% to now 5%. So, these are the triggers which will help margins in a big way. And if margins go up, remember that even for the large player, 1% margin improvement means 6-7% EPS growth. And for the smaller and mid-size, it can be between 12% to 20%. So I think the price earning multiple which we are calculating could be wrong, because the margins have not been taken account from perspective of how the cost will come down because of lower subcontracting cost and lower attrition. So I think the real multiple may be actually 10-15% lower than, maybe at a discount of 10 to 15% to both Nifty and the long-term average, rather than being at a premium. So it is all about the earnings.
Okay. Interesting. All right. So maybe there's an upside risk to the margins itself, which could surprise. And then, in fact, it may not appear that they're trading at that much of a premium in comparison to the averages or even to the Nifty. Got that point. There are a couple of companies where there's a new CEO at the helm. Tech Mahindra. We had a chat with Mohit, a couple of weeks or so ago. So what's the view on a couple of these names, like Wipro as well as Tech Mahindra? The street is quite optimistic that things will turn around for both these two companies. Your view?
So, Nigel, this is a very good script which has been there for last 10-15 years in the IT sector. Whenever, this is a B2B business, right? So only 30-40 clients make all the difference. So whenever a leader from a large company comes to a smaller company or mid-sized company, he knows some of the relationship which may not be very happy in the large place from where he has come, and he can bring them, and he can, give them a more customized service, and he can get those clients. And that is what makes all the difference. You see the story of Persistent, you see the story of Cyient, you see the story of Mindtree, LTI, LTTS. Any company, you see the mid-caps which were very small, they have suddenly post-COVID become so large. Their market caps have gone up by 5 to 10x. And every story you see, the story had started from a change in leader. So I am very optimistic, honestly, with Tech Mahindra. A new leader has come, and he has come from a larger organization. He knows the relationship, he knows the work and everything. I am quite optimistic. It may take time of 2-3 quarters more for real turnaround to reflect in number, but then, you have to take risk in the market to make money. So you have to invest beforehand. You have to trust the risk which the board and the promoters have taken.
Absolutely. Sandeep, I just want to come back to that point you made where you said the worst could be over for the sector and certain trends are picking up. But, Jefferies put out a very interesting note where they said that it's not all hunky-dory. I mean, demand has not really picked up in a big way, and IT budgets are still constrained. What is the latest that you're hearing on IT budgets now?
No, this is clearly true if you see data. But what I would like to highlight is Indian IT story is not about only global growth and global spend on IT sector. We keep gaining market share. This has been the trend from 1990. If you see data, every year we gain 1.5% market share from global sourcing. So you have to add that, number one. Number two, we are the lowest cost execution center. So obviously we get a benefit of that also. So it is very hard. While you don't have much to compare, we have to go by that data. But I would be more keen to see data on my top clients, which the growth which they are getting, and that's the reason I mentioned. You see the data of Azure, you see the data of AWS, and in the past, whenever these companies have grown faster, the growth has percolated down to Indian vendors after 3 to 4 quarters, and that's the reason I'm saying I'm not expecting a 20-30% kind of growth for these companies, but I am very confident that we are back to the 10-12% range for the large names again. That is the way I look at it, with a margin improvement. So we are talking about 16-17% kind of EPS growth, and the quality of this company, the management, the consistency, the benefit of currency, all those things, the dividend distribution, buyback, all those things implies that they can trade to 2 price earning growth ratio also. So I think from that perspective, there is still 15 to 20% upside even in the large name which is there.
Okay, we will we'll let you go on that note. Thank you, very informative over there to talk about the IT sector and how to approach it. It is one of the big buzzing sectors over the last couple of days. So let's see how things move from here. But let's take a quick break. On the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned.
Electric is in the fast lane after receiving the market regulator's go-ahead recently. Ola is racing towards its IPO. It is going to be the first Indian electric vehicle company to go public on the Indian bourses. But before that long-awaited IPO, we're here at Ola's future factory in Krishnagiri in Tamil Nadu to tell you about how Ola is building its electric empire from the ground up. We're here at this colossal factory, which is where scooters like these are coming to life.
Set up in 2021, Ola claims its future factory in Krishnagiri is one of the most advanced two-wheeler factories in the world, boasting of automation and cutting-edge processes. The factory is automated with modular and flexible assembly lines and an in-house paint shop. When at full capacity, the 10 production lines at the plant are expected to grind out one scooter every 3 seconds. However, at the moment, the future factory has one manufacturing line and is producing anywhere between 2,300 to 2,700 scooters a day.
This Ola future factory where we're at is spread on a 600,000 square feet area and has an annual install capacity.
Okay, welcome back. We've got, 8 minutes to go for the pre-open session. Lots to track. Our market technicians are with us with what they're making of things. Mitesh and Sudarshan, good morning. Great to have both of you every morning as always. Another 100, another day, another 100 points, Mitesh. Where does it leave us? I mean, and Sudarshan, congratulations, because yesterday you were saying that we got a bit of a consolidation on Friday and perhaps that gives you the opportunity to get in. So it's worked. But what from here now, Mitesh, to begin the conversation with you this morning?
Good morning, Prashant. Yes, the Nifty continues to show and, it keeps making higher highs. My first observation, which is slightly different from what has been happening in the last few days, is the Bank Nifty index. For the first time yesterday, we got some signals of weakness or profit booking on the hourly charts. So the way I'll approach the markets today is to watch the Bank Nifty closely. 52,350, 52,320 is my immediate support zone for the Bank Nifty. If we see the Bank Nifty start trading below that, then I think you might see a bit of pullback in the markets and a couple of days of consolidation. So approach and watch the Bank Nifty closely, though my Nifty targets are now in excess of 24,450, 500 zones. But there could be a pause depending upon how the Bank Nifty reacts in the next few days. Nifty IT is compensating for it, but still I believe that the Bank Nifty weakness could see the Nifty go into a sideways mode.
Okay, what about individual stocks? We'll come to that in a bit, but Sudarshan Sukhani is also with us. Sudarshan, this market has really been astonishing, right? I mean, it's surprised everyone on the upside. Do you think there's more to go? Because there doesn't seem to be any reason for a correction in the offing. But that's largely when a correction comes through. So how do you navigate all of this, and what are the individual stocks you're looking at today?
Well, good morning. First, thanks, Prashant. Sonia,
It's very difficult to say where the markets will stop, if they will stop. What we know is they will stop. But since we can't determine the timing, we can just let that be. This market is going up. So far, it's going up. We want to be with it, become part of that upswing. Now, for the trader, yesterday was a good day. Today is unlikely to follow that same pattern. I would assume that we can see a lot of choppiness. Now, markets may end up higher, maybe 100 points higher by the time market closes in the day. But intraday, it would be difficult to catch any move. So my suggestion for the day is wait patiently for a significant and sharp dip that would be defined as a 100-point decline from the open. Then consider going long. If you don't get it, don't enter the market for the Nifty and for the Bank Nifty. Either expect a lot of choppiness. Now for the stocks, it's a mix because I'm expecting a choppy market. Container Corporation is an intraday short. Remember, short selling should be done only intraday. Stop above 1,060. Indian Hotels is another intraday short. Stop above 630. I have two buying ideas where the focus should be. BPCL with a buy is a buy with a stop under 291, and Steel Authority sale is a buy with a stop under 142.
Okay, all right. So those are individual picks as well from Sudarshan. Mitesh, what about you? What are your trading ideas?
I have a few buy calls. Aarti Industries, after a few days of pullback, bounced back nicely. It's showing signs of an up move again. So keep a stop at 690. Look for targets of 730. A breakout was seen in many cement stocks, and ACC and Ambuja were the stocks which gave a fresh swing high yesterday. So ACC is a recommendation with a stop below 2,700 for a target of 2,850. A buy on REC with a stop at 540 for targets of 570, and L&T Finance is the final buy call. Keep a stop at 187, look for targets of 198.
Okay, we'll do one thing. We'll take a short break. On the other side, we'll come back with the pre-opening rates. Also, we'll have Sanjeev Asthana of Patanjali Foods to put focus on their acquisition of the non-food business of Patanjali Ayurveda. Stay tuned.
It was built from ground up in less than 8 months in the middle of the pandemic, and there's a few things that really stand out as you enter this factory. The first, of course, as the name signifies, the future part in it. A lot of the tasks here on the shop floor are automated, with robots also deployed to carry out many tasks. The second and the most interesting thing I thought is that this plant is largely run by a women-only workforce, so kudos to Ola for that. And third, for a manufacturing facility, it is surprisingly quiet. The female workers on the shop floor total 944 on-roll employees, representing 100% of the shop floor workforce and more than 25% of the total on-roll employee headcount. After the future factory, Ola also plans to have an all-woman workforce in its cell manufacturing facility, the Giga factory, as well.
The reason we set up the women factory was that we want to set up an example for the industry that in India, women can actually participate in the workforce.
Ola began the production of its second-generation EV scooters in September last year, and its founder says Ola will start the production of motorbikes in the factory later this year.
We are focused on the two-wheeler, Ritu. Scooters already has given us such a strong growth over the last 2 years, and last year we expanded our portfolio of scooters from the S1 Pro to multiple S1 platform scooters. Now we are working on the motorbikes. Like you said, we showed you motorbikes 15th August last year. Yeah. Those were early concepts, and we've been working on the R&D of those things. Okay. So through next year, you will see us launch some motorbikes.
Okay, we are just going to get the pre-opening rates in a bit, right? In about 5-10 minutes. So it gives us some time to talk about more stocks. Amnish Agarwal is still with us. Amnish, the stock I wanted to ask you about was Indigo, because, you know, there are a lot of brokerage upgrades that have come in on Indigo. In fact, UBS has a target price of 5,400. I mean, big upside to the current market price. Do you think this whole travel and tourism theme is something that can continue? Not just Indigo, but, you know, names like Indian Hotels that continue to be at new highs. Any thoughts here?
See, the travel and tourism theme is in focus from the last couple of years at least. And I think the situation continues to look good for all these companies. For example, if you look at, say, all the hotel companies, your ARRs and occupancy levels have been healthy. Now, most of them are, you can say, north of 70%. Your ARRs have been moving up in double digits. And I think given the fact that hotels is always a long gestation business, and all these companies, they have come out of a downturn which lasted for nearly, say, 12 to 14 years. So I think there is still more room. Yes, we won't have the kind of sharp growth we have seen in the last couple of years, but from these levels also, I think the companies will continue to post decent numbers. And as we look at India as an economy where the disposable income is increasing, discretionary spends in the hands of people are more. So I believe that this entire tourism and travel space will do well. And obviously, with the number of airports increasing, the number of, you can say, options increasing, all the airline companies are also in for some good times. With the industry now consolidated into having more than 60% market share and now increasing its, you can say, the number of flights in the international destinations, wide-body aircraft, I think Indigo seems to be very well placed to ride this entire upsurge in the, you can say, spending on travel and tourism. The stock has given very sharp returns, but I still believe that there is a lot of room in Indigo over the next 1 to 2 years.
You know, I just want to take note of the pre-open. We're up 100 points in the Nifty. The Sensex is up about 270 points. Since the pre-open is with us, maybe we can put up names like Angel, etc., and see what the opening is looking like for these names. Maybe, Angel, so that's a 4% cut coming through in the pre-open. Take a look at something like a BSC, which is the listed exchange, where also, I mean, as earlier Rajesh pointed out, perhaps sentiment impact more than anything else. Exchanges should be able to balance it out a little bit more over a period of time. A stock like Share India, I think it's a listed entity, which I think also perhaps will pick up. Motilal Oswal Financial Services is another one. A stock's done extremely well, although over the last couple of days it was a little weaker. That's Share India. And Motilal, of course, is a much more widely tracked and owned name. Nothing very much. It's marginally lower. Maybe things will pick up as we go along. But first pre-open kind of rates which are coming through. Nifty is up 130 odd points right now.
Prashant, for some of these companies, a couple of sales that came and said they have to only tweak their brokerage by very little and they'll be able to offset this. And some of them don't charge their account opening fees. So they just plug that in and they'll sail through, and I think managements of some of these companies as well have addressed some part of this, that this could potentially come and this is how we could offset it. So let's see, for the time being, they open up in the red, but let's see the kind of recovery that we could see on some of those stocks. Well, let's move on then. The first management on the show is Patanjali Foods. The company will acquire the entire non-food business from Patanjali Ayurved for around 1,100 crore rupees. Patanjali Foods, which is mainly into edible oils. This deal will help the company to have dental care, skin care, hair care, as well as home care. That will be added in its portfolio. Well, Mr. Sanjeev Asthana, the Chief Executive Officer at Patanjali Foods, joins us on the show. Hi, good morning, Mr. Asthana, and congratulations on this deal. So good news for your shareholders. Now, the acquired business, in the last few years, it's been growing at roughly around 6.5% approximately. It's a good business with good margins, but what is the growth trajectory you can see from here on?
Just take back to two other previous acquisitions that we did. The biscuits that we acquired went up nearly 60% in 2 years' time. The foods business that we acquired went up 50%. So we are reasonably confident that this growth rate, under Patanjali Ayurved, it did up 6.7%, we'll try and exceed that by a large margin. And that effort towards rationalizing our workforce at the ground level, taking steps on the distribution that we get a significant boost on. Likewise, in terms of the portfolio rationalization and others, our belief is that we will focus a lot more on the growth momentum, and the opportunity is very large there. And under the listed entity with a much larger portfolio basket of products that we have and the management depth that the listed entity has, I think Patanjali Foods should be able to grow it much faster than what it has grown so far.
All right, Mr. Asthana, let's get a number out of you. The past two acquisitions grew by 50 to 60%. But this one, what could it be realistically? Should you be guiding for a number like 30, 40%, or do you believe that you can do even better? Yeah,
No,
go ahead.
so I'll share that with you. I think broadly what we've done is that we've targeted to keep a range of 12 to 15% growth at the minimum, and that is across the category, which includes all the other 4 food businesses categories that we have, and including this one. So I believe that 15% growth should be reasonably possible because the strength that the company has, we should be able to accomplish that across the portfolio. The non-food alone, our belief is that the opportunity is much larger. We have taken several steps, including getting new brand ambassadors for our toothpaste and care sector. And we believe that the growth momentum is there, the demand is picking up, and we should be able to exceed even 15% for the non-food side of the business.
Yeah. Got that, Mr. Thana. Good morning and congratulations, sir, on this one. Could you give us a sense on margins here? What are the levers available to you within this portfolio that you've acquired? Which is the business which has got the highest margin levers according to you, where you'll be able to grow that? Just give us a sense, sir.
No, sure, absolutely. So we have the highest margin business is obviously Dant Kanti, which is a very marquee brand, which is nearly close to 50% of the entire category where Patanjali has a leadership. And including, and then that including, in terms of the control over the raw material, where the margins exceed nearly in Dant Kanti of more than 24% EBITDA. Similarly, in the skincare segment, we have got nearly 14% margin. You have it on the screen. So the plan is that, in terms of the raw material sourcing on the supply chain side, bringing in the efficiencies, working at the distribution level, the efficiencies. So today, currently, what we see about 18% EBITDA in the business, we'd like to certainly this to exceed by 200 basis points over next year and a half, when all these synergies start to kick in. And we'd like to see this closer to 20% plus in terms of the EBITDA margins in the business. And it will take some time.
So by essentially what you're saying is by, in a year and a half, right? 15 months or so, you'll
about
be able
18
to...
months is our estimation.
18 months.
Yeah. So we are working on it right now. And,
okay.
So there are multiple, so just to finish that point, we are seeing multiple synergies at 3 levels. One is at distribution level. We believe that we should be able to cut substantial cost, rationalization of the ground level forces. And third is on the supply chain side. I believe that the opportunity is there for minimum 200 basis points that we should be able to bring in on the existing portfolio itself.
Okay. You spoke about a 12 to 15% growth in the FMCG business, right, that you're looking at. I just wanted to clarify that is for FY25 and FY26?
So this has been our consistent growth rate throughout. And we are confident.
So going forward, what will it be? Okay, it will continue to be this level.
It will be 12 to 15% growth consistently on the FMCG side. We should be able to maintain.
So the FMCG business is now more than 30% of your overall sales. Over the next 5 years, how much can you take that contribution to?
So no, that's a great question. So I just want to sort of take you back 2 years back when we did the announcement for our foods business. We had stated as a very clear strategic intent that we will make it 50-50, the share of food and edible oils. And with this acquisition on an annualized basis, already the share, if we keep the edible oil flat, it's nearly 36% now. And our confidence is that in 3 years' time, we should make it 50-50. That may take a year additional. That would happen because the edible oil is growing at a slower rate and the FMCG businesses are growing at 12 to 15%. But we are reasonably confident that in 3 years' time, we should be 50-50 between the edible oils and FMCG.
So once the FMCG business gets to 50%, is there more margin levers that you can unlock? I mean, for the consolidated business?
So without a question, I think, the FMCG business at that scale, the distribution strength that we bring in, with this acquisition, we'll sort of, become way larger on the distribution side as well. So we certainly believe that the efficiency levers, the multiple different opportunities that will show up at a scale of business that we're talking about, which is nearly more than 20,000 crores, I think would be very significant. And the second part I wanted to highlight was that the opportunity for the uniquely positioned, products that we have, which is almost like as a right to win, for the emerging trends on the health and nutrition side, we believe that Patanjali will continue to lead the way, and a lot more efficiencies we should be able to bring it in the system and which will help both in terms of the margin profiling of the business and also the growth momentum which India, as we are seeing, the consumers are gravitating towards.
All right, Mr. Asthana, you all will be paying a royalty license fee of closer around 3% annually. What are you getting in return?
So we're getting a lot in return. So, for example, we get the brand sort of available to us, all the licenses and patents that Patanjali has, all the registrations they've done over the years, entirely everything accrues to us, for paying 3% royalty, the license fee that we're paying them. And this would be available for 20 years with no increase in charges or anything. So it's pretty much flat. And our belief is that with the increasing margins that I spoke about, 200 basis points of efficiency, this also, the net cost to the company post the efficiencies, etc., should be just about 1%.
Okay. All right. You want to give us a rough market share for each of these categories of the acquired business? And where do you see that this market share is headed? If you could have some rough numbers.
So in Dantkanti, our belief is that and I'll focus more on that because the others are little cluttered categories that are difficult to gauge, where we stand, and the categories are smaller as well. We would be close to 65% plus in the herbal dental care segment, and the rest of them are today of not that large a size in terms of to define it, because the home care products it's a very wide category. Likewise, the hair care segment is also very wide category. But if I were to categorize this as a herbal Ayurvedic specific category, then this would be pretty dominant shares, and I would not be able to give out the numbers right now for those.
Okay, thanks a lot for joining in and all the best. That's Patanjali Foods. By the way, the stock is up almost about 3% so definitely going to be a stock on our radar today. The market as well, right? Look at that, almost 90 points higher now on the Nifty, holding on to the 24,100 mark. In fact, 24,200 is what you could see today. But my eye is squarely on the Sensex. Can't wait for the grand old index to hit that 80,000 milestone. What a day that will be, right? I mean, the kind of growth that this grand old index has seen, and we are here to witness it all. But Sudarshan Sukhani is back with us. Sudarshan, what's the big call at 9:10?
Buy BPCL with a stop under 291.
Okay, BPCL is a buy. Mitesh, what about you?
REC for a target of 570.
Okay, REC for a target of 570. I'm also watching out for Hero MotoCorp because the numbers that the company reported post-market as yesterday were very good. They were better than what the street estimated. It was a 15.5% growth actually that Hero has seen at 5.03 lakh units, better than estimated 4.87 lakhs. And Hero MotoCorp compared to its peers is still cheaper as far as the valuations go compared to peers like Bajaj and TVS Motor. So that's something the street will like. The stock is up almost about 1%. But you're watching NMDC?
Well, that's right, Sonia. Two pieces of news coming in there. They came out with their June operational numbers, and both on the sales as well as on the production numbers, there was a bit of a degrowth for the month of June. So there was those numbers look a little bit tepid. And yesterday we had highlighted that there could possibly be, a price cut that comes about. And that was confirmed by the end of the day because they've declared on the exchanges that both on lumps as well as on fines, they pulled back prices by around 500 rupees per ton. There was an auction that took place where the pricing was lower in the eastern part of the country in Odisha. So that was one factor. And the other factor is that you have monsoons as well. So because of that, you have these price cuts that some on the street were expecting, and 500 rupees is what it is. But let's hop across to Sudarshan. He's here to tell us about Marico. Sudarshan?
Yeah, so negative view is coming from CLSA. It says one key factor driving its negative view is on rising competition for its oil portfolio. And it says retailers, private and exclusive brands are undercutting Marico's brands, and other national and niche brands are taking up price points which are above Marico's. And because of this, the company's headroom for growth is narrower than before. And besides the oil portfolio, CLSA also sees increased competition in the segment of oats. And on the rating front, it maintains underperform with a target of rupees 460 per share, which indicates downside of more than 25% from current levels.
Okay, all right, Sudarshan, thanks very much for that. So, we're going to get another fantastic opening, right? 90 points higher. The Sensex is up about 365. And maybe just look at, some of these names, of course, Marico, NMDC, Hero, etc. in the pre-open we looked at. But just to go back to some of the earlier stocks, brokers, etc., that we were talking about, and see if they're seeing a larger reaction or it's contained to about a 3-4% cut, what they opened down with. Names like Angel, etc. Share India, not very much traded. Motilal is down 1%. Angel, I think, will come up. That is down about 8.5%. So the impact on Angel here, much larger coming through. So that's a large liquid name and it's of course part of the F&O list as well. So it's a sharp cut. BSE, maybe we could look at that as well from an exchange perspective right now. Maybe just too early, but perception-wise, is it taking a bit of a knock there? No, nothing. 0.5%. So it's a flattish start, lower start. But of course, the market opening overall otherwise actually is pretty solid, pretty steady. Just a few seconds to go for market opening and lots to track here. This entire broader market, mid cap, small cap, micro caps even, right? I mean, that's essentially what was the flavor yesterday. And we'll see if that is where bulk of the action is this morning as well. So first rates, 24,189, almost 24,200. Not quite there. I don't think we hit that, but just under it. The Sensex is starting higher as well. We are at about 79,660. So it's about 0.25% higher for both these indices. Mid-cap, the Bank Nifty is up about 80-90 points. We're up about 0.18%. Market breadth is overwhelmingly green, but maybe 2 minutes in, we can look at this again. IT index 2% yesterday. It's starting another 0.5% higher. So there is activity as far as IT stocks are concerned, which we will identify for you. And I think, needless to say, the broader market perhaps also will be opening in the green. Mid-cap index is up 0.25. The small-cap index will come up on your screens as well.
Oh, very good opening, right, for the market. I mean, mid-cap index at a record high. The grand old index, Sensex, is almost approaching that 80,000 mark. Just a matter of time. Less than 400 points to go. The Nifty is inching towards 24,200. This is a phenomenal market that we've seen over the last many days. All-time highs once again. There's no stopping this rally. One of the top gainers today is Eicher Motors. So just keep an eye out on that stock. Up about 1%. HCL Tech, Wipro, Tech Mahindra, ONGC, Bharti, TCS, Infosys are also your top gainers right now. In fact, on the lower side, it is some of these auto names. So Bajaj Auto, Tata Motors are actually in the red this morning. Just coming in for a little bit of profit taking. Not too much, but yes, a little bit of profit taking for names like Bajaj Auto. I want to also take a look at Hero MotoCorp because as we were telling you, numbers are very good. And if you look at the valuations, right, I mean, FY25 PE is the numbers that I have. Bajaj Auto trades at 29 times FY25, while Hero is still at about 20 times. So it's still much cheaper to its peers, and hence they are seeing that valuation leg up right now. Apart from that, a good opening for the market, 50 points higher. There are plenty of stocks, by the way, that are hitting fresh 52-week highs, so don't lose sight of that as well. You have IEX, which is at a fresh 52-week high. You have something like an Atul Auto, which is at a fresh 52-week high. IGL, Biocon hitting fresh highs this morning. Tech Mahindra is at a fresh 52-week high as well. Deepak Nitrite, we were talking about a while back. And then, of course, a whole host of other stocks as well. But what are you picking up?
Well, so a few stocks, that are moving very, very well. DCX System, just take a look at that. They are backed a 1,250 crore order for electronic modules from L&T. That stock is up close to 15% as we speak, flying away. IOL Chemicals, they have got the Chinese drug regulator nod for the company's product. That's fenofibrate. So that one, in fact, as well was up close to around 7%, continues to hold with strong gains. Patanjali, we just had the management with us. They have acquired the non-food business for approximately 1,100 crores. Yesterday, the stock ended at the high point of the day. For the time being, it's holding with a gain of around 2.5%. Management says they want to grow that business in mid-teens, and they're also looking at scaling up margins by 200 basis points. So that stock is higher. Welspun Specialty, they have won an order worth around 117 crores for supply of boiler tubes. So that stock as well has opened up well in the green. KPI Green, I think that one as well, has opened up well in the green. Welspun Specialty is up 7.5%. You have KPI Green. They have got the chief electoral inspector's nod for 2 solar power projects. So that stock has opened up mile in the green with a gain of close to around 2%. NMDC, a little bit under pressure. The production was down by close to around 3%. Sales was down by close to around 9%. And they've cut prices, but mildly so, down only around 0.5% or thereabouts. So it's a good start. Even what's coming up on the screen, I think, is Deepak Nitrite. Now, that stock continues to build on gains. It's now up 2.5%. Yesterday, it was up close to around 4%. One of the stocks that we were watching earlier today as well. Promoter bought. The fundamentally as well, things should look up in the second half of the year. And yesterday, it was back to some delivery-based buying. But one of the big gainers, Prashant, right now is Oil India. Crude oil prices spiked overnight. Oil India now up 4.5%.
I mean, no, absolutely. And, some really good action all over. So you got, Solar Industries, which is up about 4%. CSB Bank is up 6.5%. CSB Bank is a really big mover. 400 rupees on CSB Bank on very large volumes for this point in the day. Uno Minda is up 5.5%, 6%. 1205, 1206 is where we're at there. Kirloskar Brothers is starting about 4% higher. So once again, I mean, it is really, you've got to go down and find stocks. Talbros Auto is Auto Ang Company, has done fantastically well. 6% higher on Talbros Auto. Wheels India, so a lot of Auto Angs today, from what I can spot. Rane Holdings, I mean, lots of names coming through here. Anantraj is up about 5%. There is, of course, I mean, the biggest volume-led gainer is Garden Reach Shipbuilders once again. So that is up 5.5%. Stocks at about, 24.30 coming through at this point in time. So it's a really vibrant screen which we have on our hands at this stage. Pankaj Murarka is with us now. He's CEO and Chief Investment Officer at Renaissance Investment Managers. Pankaj, good to have you with us here. Thank you very much for your time. I think the last we spoke was on the day of the budget. And what a move since, right? Seems like a distant, far away memory. But just happened, right? But the market, of course, has put so much distance between where we were then and where we are now. Pankaj, how are you? What are you bullish on? What are you sort of adding to your portfolio? What are you sort of actively looking at as investment opportunities?
Morning, Prashant. Yeah, you're absolutely right. Last month looks like we've lived through a period of a year because the kind of volatility in up move we've seen, what we typically see over a period of a year, we all experienced that in last month. Prashant, our overall bias continues to remain constructive. I've said this, I think, previously in our conversation. I still believe that we are somewhere near the mid-cycle of this bull market, which effectively I still mean that this business cycle or economic cycle has a long, long way to go. From an investing point of view, incrementally, we've gone overweight in IT as a sector over the last few months because we think probably the IT is a classical global cyclical. The worst of slowdown probably is in the price, and probably we think the business will pick up from second half onwards. And we see a strong IT spend cycle globally as well going into the next year. So, and valuations, it's one of those pockets in the markets where valuations are still very reasonable in context of the medium-term and longer-term growth outlook. So that's one which we have, incrementally added to over the last few months. Apart from that, we continue to remain positive on engineering capital goods as a sector, and that remains our biggest overweight. Having said that, valuations are extremely rich.
Okay, valuations are extremely rich. I think that seems to be the only problem that this market is facing, right? Which is sort of preventing it from getting well above that 80,000 mark on the Sensex. Pankaj, thanks a lot for joining in. One space perhaps that valuations don't look as expensive is IT because of the kind of underperformance that IT has seen so far. But a lot of analysts, experts have told us that perhaps the worst is over for the IT sector. Would you concur, and is it a good time to be buying IT stocks now?
Morning, Sonia. Yeah, I think so, Sonia. We actually are, I'm personally very positive on IT as a sector. One, probably we see early signs of recovery in spends globally, in IT spends globally. And I think we should see first half of this year should be much better than the weak fourth quarter, which most of the IT companies had. More importantly, we think business will, or companies will report much better numbers, or business cycle will see an uptick starting from second half of this year. More importantly, I think this is my view from a slightly more medium-term perspective. The global IT spends driven by Gen AI probably will lead to one of the biggest IT spending cycle that the world has seen in the last 30-40 years since the upcoming of internet. So probably my view is that the next cycle in IT spend will be much bigger than the previous, the last biggest cycle which we saw, which was internet cycle. So from a slightly more medium-term to longer-term perspective, I'm far more bullish on IT than from a more near-term perspective.
All right. Hi, Pankaj. Good morning. So on tech, you're fairly positive. And as you said, you'll have gone a little bit overweight out there. Let's talk about banks then. I'm looking at one of your funds, your Opportunities Portfolio Fund. And out there, looking at your top holdings, top of the list is SBI, which has been a class apart in 2024 so far. In the last 1 year as well has been a big outperformer. But, you also have HDFC Bank in there. So I think you have 5% weightage for HDFC Bank and around 7% roughly for SBI. Do you continue to maintain this sort of a weightage? Will SBI be top of the pick, or do you believe now the case is stronger for HDFC Bank to outperform from here on?
Nigel, relatively between the two from a stock price performance, I think SBI will still outperform HDFC Bank over the next couple of years. SBI is a bank, obviously, all of us know, has gone through a deep rate cycle, but now they are probably in a situation where the operating numbers and growth of SBI are very much similar to HDFC Bank, and it trades at a significant valuation discount to HDFC Bank. It's a solid franchise, so I think there is a significant, apart from earnings growth, there is a significant valuation catch-up which is yet to happen in SBI, and which should certainly play out over the next couple of years. So in that sense, SBI remains our preferred bet from a returns perspective over the next couple of years. Having said that, I think HDFC Bank probably is towards the fag end of its underperformance. Having said that, we continue to remain grossly underweight HDFC Bank versus its weightage in the indices because we find, one, better opportunities within the banking sector, and probably from a bank sector as a whole, we continue to remain underweight because we find better growth opportunities outside of banking sector than within the sector. And it's apparent now, I believe that banks is not the lead growth sector in India in this cycle, and probably it will continue to be so. So probably the other sectors which are growing at much faster than banking as a sector, and we being growth and high growth investors, we're always chasing high growth companies.
Yeah. Pankaj, what about sectors trying to find newer opportunities where there will be government support? So this entire Make in India, etc., started with PLIs, right? First time PLI schemes were announced. The entire EMS space has benefited so much. Defense, Make in India. I mean, this is all, in a way, it's paid to look at where there is that tailwind of continued government support. Are there any newer areas where we will see that support? I mean, I was just wondering, I mean, we hear constantly, we hear about water as the issue, right? What kind of, can we solve that through technology? There are a few companies which are listed. One has heard that off and on. I'm not sure. What are you looking at, if that is really a way to sort of work through to ideas?
Well, Prashant, on the whole investment cycle, while there are a lot of opportunities across what you say in terms of PLIs and within PLIs across, let's say, auto ancillary, electronic manufacturers, EMS space, and so on and so forth. And we have exposure to some of these companies in the EMS spaces, right from Dixon to some of the other smaller cap companies as well. But I must confess that currently where we stand from a market valuation perspective, all of these stocks are pricing in the next 8 quarters of growth. So for an investor looking to invest incrementally, the money is to be made basis fundamentals only probably 8 quarters out. So I think stocks in the sector, I would say, are priced to perfection or richly priced. So our whole approach is to continue to hold what we are holding in the sector, but not incrementally add, because valuations are rich. From a more medium-term perspective, when we look at markets from a next 1 to 2 year prism, I think there will be pivot in this budget towards consumer welfareism, especially given the outcome of the elections. So I'll not be surprised if government, and the good thing is that there's tax buoyancy, government has revenue at its disposal. So I'll not be surprised if some $10-15 billion is allocated to some sort of a consumer measures or welfare schemes. Also, the fact that there's a deep slowdown in rural consumption, and in a sort, there's a cost of living crisis in the rural India. So in that context, some of the consumer discretionary names, I think, could witness a cyclical recovery over the next 6 to 8 quarters. And their valuations have moderated compared to where they were 8 quarters back. So from a slightly more near-term perspective or a medium-term perspective, I think consumer discretionary looks more attractive from a risk-reward perspective.
Okay, by the way, there's an update from InfoEdge about the JobsSpeak index and the hiring activity, which has dropped quite a bit. It continues to be quite muted. And I think in sectors like IT, hiring has dropped about 5% or so. That's what I read. a while back, and they're not looking good, right? I mean, it's a proper barometer of the jobs, and the hiring cycle is a proper barometer of which way things are going. Pankaj, before we let you go, just a word on this. I mean, hiring activity has slowed down. It's muted, especially in places like IT. Is that a reason to be concerned? Because eventually that is going to affect demand, affect consumption, etc., right?
Well, you're right, Sonia, but I don't think so one should be too concerned about it, because these companies are coming from a cycle where post-COVID, they did end up overhiring people, and then the growth suddenly moderated. So, so I think hiring will pick up as we go in the second half of the year. So I think I'm not too concerned about hiring trends, though you're absolutely right. They've been somewhat sluggish in the last 6 months or so, but I think it'll pick up in the second half of the year.
Okay, well, we will let you go on that note. Thanks a lot for joining in. Appreciate your thoughts and on the market as well as on individual sectors. For the market, it is quiet now. It's so just consolidating its gains over the last few days. The Bank Nifty is slightly under pressure, down about 120 odd points. But, well, it's just, taking a bit of a breather after that big marathon. But let's shift focus to Bajaj Auto. The auto major reported a 5% rise in total sales with 3.5 lakh units for the month of June. Data was better than muted expectations, but two-wheeler exports continue to see pressure. To discuss this, we have Rakesh Sharma, Executive Director at Bajaj Auto, who joins us now. Mr. Sharma, always good speaking to you. Thank you for joining us on the channel. I want to understand how are demand trends for July and August shaping up? Because the two-wheeler sector continues to see some pressure in exports, not just your company, but across in the industry. But now we are seeing the rural markets in the domestic space pick up. So what do you think the net growth could look like over the next couple of months?
Good morning, Sonia.
Morning.
The outlook is, coming fairly to what we had expected. Quarter one has unfolded exactly like that. April was a very big month because of the convergence of festivals and marriage dates, etc. And then May and June, compared to previous year, were flattish. But overall, the quarter was about 8% growth in terms of retail and motorcycles. We expect a similar 6 to 8% type of retail growth in the coming quarter.
Okay, so 6 to 8%?
Which is actually not bad, because, July is a very July is one of the, along with December, one of the really doghouse months. And then a little bit starts to improve in August, particularly in the West. And then you will see in September a build up to the season. And the season this time it's all happening in October, the Dussehra and the Diwali.
So you're saying the 6 to 8% domestic retail growth is in the July to September quarter, right? That's what you're looking at.
Yes, that's what we expect.
Okay, and what is the market share currently? I mean, you ended FY24 with a domestic market share of around 18.5%. Just trying to understand, as of June, what is the domestic market share? Have you been able to build on to any of your gains?
Yeah, so the overall market share remains at 18%. But as you know, our a large portion of our effort has been focused on the upper half of the industry, where we are steadily inching up to the leadership position. So this is the 125cc plus segment, where we are now in retail terms at about 27% market share. And I think just 1 or 2 percentage points behind for leadership position. So that's steadily improving. And the particularly outstanding performance is actually in the 150cc plus segment, which is a sporty commuter segment, which is where our flagship brand Pulsar is. And there we are at, all-time high in the last 3 years of about 40% plus.
Just coming back to the 6 to 8% domestic retail growth, right? Just trying to understand a little more about that. Are you saying that, yes, things are coming back, but not in a very big way? What continues to be the challenges that the sector is facing? Why is demand not getting back to, say, double-digit growth yet?
So 6 to 8% is a very good growth, right? And the key factor which is actually driving this growth is, at least in our type of customers, the economic recovery is finally reaching them. And there is optimism. We can also sense that optimism from the way the terms in retail financing are coming out. People are willing to take longer term loans, and which reflects a certainty of future income flows. And you have to remember, these people are our customers. 70% of them are, around the 30 to 40,000 rupees per month salary band, and they had got quite devastated by by COVID, and it has taken time for economic recovery to touch them. So we are actually quite happy and positive that there is this kind of I think 6 to 8% growth is a good growth too. It's a very large industry, and if it grows at 8%, it has got very good consequential impacts.
All right. Hi, Mr. Sharma. Good morning and good to see you. When I was just telling my colleagues yesterday, I came back from Kenya and I was so happy to see so many Bajaj vehicles, on the road out there, the 100, 125cc, quite a few of them. So good work on that front. But getting to your numbers, for the past month, the export two-wheeler market, out there's still a small degrowth of close to 100%. So my question to you is, how are markets like Nigeria, Egypt doing? And are you seeing signs of recovery out there? You've mentioned this quite a few times, that currency availability as well is a bit of an issue. Tell us more.
Yeah, so overall, globally, if you see, there is a very smart recovery in LATAM. There's a smart recovery in ASEAN, particularly Philippines, which is where, for us, that's a very, very big market. There is still a bit of trouble in South Asia, which is primarily Bangladesh, Sri Lanka. And there is still the big trouble spot is Africa. Or let me not put the entire Africa, but I would say the large market of Nigeria. That is still in the negative zone. But having said that, there is recovery even in Nigeria. For example, I will tell you that if my memory serves me correct, in our retails in Nigeria were about 2,000-3,000 units in April, and in June they are upwards of 15,000 units. But we used to clock 50,000 units, right? So to compare with 50,000 units, obviously it is way behind. But if you look at it 3 months back, you can see that there is a recovery. Our shipments to Nigeria were, again, matching retails, couple of thousand units. But last month, our shipment to Nigeria was 9,000 units, right? But again, still a shade of the 45,000-50,000 units, which we used to do. The Naira, exactly 100% it is there. It was 750, if I remember, in last year, June, and now it is about 1,400. And that is the underlying cause of the issue that is unleashing a big inflation over there. And the other countries, like the one which you just visited, Kenya or Congo or Ghana, and you would have also sensed it, they're not as severely impacted by the devaluation, but still similarly impacted. And they're also, because of inflation caused by devaluation, the demand is muted, though recovering. And all depends on now the stability of the currency and people getting used to the new normal and things coming back. So it's going to be a gradual progression. But if you look at LATAM and all, I'll tell you, our top range, which is the Pulsar Dominar range, is growing at about 25-30%. And as a result of which, even though our Q1 volumes are flattish, but our EBITDA specific to the business are double-digit growth.
Absolutely, got that. Mr. Sharma, we'll come back to the here and the now, but we have a big union budget upon us, and we all know the challenges that the sector is facing, right? Whether it's over-regulation, too many taxes. I mean, Rajiv Bajaj has also spoken about that ad nauseum. But what is it that the government can do for this sector which will help aid demand further, you think?
See, I know it is very easy to demand a GST cut because the government has to think of balancing the budget and all, but that's their outlook and we can understand their responses. But the point is there that for this customer who's got 30 to 40,000 salary per month and where a motorcycle or a two-wheeler is an absolute necessity, over there to have a 28% tax is, very harsh on the customer. Because don't forget one thing, the moment a person acquires a motorcycle, that person's productivity really increases, whether it is access to the farm or access to a job in a nearby town, a whole new world opens up. And therefore, from a social point of view, and even from an industry, triggering it off an industry sort of growth point of view, there is a strong case for reducing the GST from 28% to whatever. And I would also say that now on this, if you add some of the alternate fuels, which also, take the agenda of decarbonization a step further, when you add that, then at least for the alternate fuels, particularly things like CNG, etc., which the government is actively promoting on the one hand, through a brilliant work on laying the network, etc., and a lot of capex is pouring in over there. So increasing throughput of that capex through encouraging people to shift to things like CNG and other alternate fuels, and by lowering the GST would go a long way for the customer, for the environment, and as well as for the industry. And besides that, of course, we would always welcome things which put more money in the pockets of the ordinary consumer and improve the sense of optimism, because that really works well. And you've got 2-3 months, the Diwali season coming. If that sort of finance minister is able to pull that sentiment, uncork that sentiment, we can look forward to a really good season.
Let's see what the finance minister does, right? Given all the constraints that the finance ministry has. Well, just one final word, getting back to business, an update on Triumph, because the last time we spoke, you said you're targeting 10,000 units monthly for Triumph by September. Are we on track to do that? And, what is the latest there?
Yeah, so we are now, we were at that kind of rate. As you know, it's been almost exactly 1 year, and almost 50,000 bikes have been put onto the roads in India and in 57 markets overseas. So the exports business is now waiting to see the retail response, which, from whatever we understand through our colleagues in Triumph, the response has been pretty good in many large markets. And if that sort of starts to flow in, I do expect, maybe not in July and August, but we will start to see very good numbers in the region of 10K from, let's say, September onwards.
Okay, well, Mr. Sharma, thanks a lot for joining in, and all the best for the months to come. It's good to see that there is traction now picking up in the two-wheeler space, and Bajaj Auto talking about a 6 to 8% growth for the domestic two-wheeler industry, which they say is very strong given the kind of constraints that the sector has seen in the past. So those are some demand trends coming in from Bajaj Auto. Let's take a quick break. On the other side of the break, another huge mover lately has been Dixon Technologies. Atul Lal of the company will join in to discuss their business outlook, their recent deal with HKC Corp. More on that coming up.
Okay, welcome back. 30 points lower now. So that's a dramatic turn of things, right? I mean, the Nifty actually was up 80, 90 points when we started, and we are down 30 points from the day's highest level. So take a look at what's going on. The starting, of course, the gap up was the day's highest point, and since then there has been a gradual drop off which has taken place. We'll get to what's going on with individual names and what's really leading to this move in a bit from now. But let's talk about Dixon Technologies, right? And of course the entire sort of Make in India theme. And Dixon really has emerged as the poster child of that theme over the last couple of years now. Stock's done fantastically well. I don't think I need to repeat some of the stats here. But what next is the question. Lots of newer deals, both on the mobile space, but also other segments have been struck. We hear a deal almost a month. We have Mr. Atul Lal, Managing Director at Dixon, joining us now. Mr. Lal, great to have you with us here. Thank you very much for your time. Prashant this side. Typically we'd start these conversations with, by asking you about the latest sort of customer that you've onboarded and signed on. But I want to start with asking you to reiterate some of the numbers that you've guided, because now expectations are running pretty high, Mr. Lal, for Dixon. The full year FY25 top line guidance now is about 32,000 crores from the last time that you spoke to us. Is that very much doable, or where are we on that number? If you can start with that.
Thanks, Prashant, for having me here today. You see, we are not giving any guidance on numbers for the last couple of years. However, please be rest assured, the order book is extremely healthy. The growth is going to be extremely aggressive in the current fiscal. Mobile is the largest trigger of our growth. We are sitting on almost 50% of the Indian Android ecosystem capacity. New acquisition is going to kick in once we have the CCI approval of iSmartU. So a lot going on the mobile side. We have launched our refrigerators. The commercial production has started. Order book is very, very good. In telecom space, it's going to be almost 200-250% growth in our JV with Airtel. We have added new products in fixed wireless devices and also the routers. So order book is very good. And I'm not commenting on any number, but would like to assure all the stakeholders that we are on a good path.
And got that, Mr. Lal, the stakeholders are all penciling in 32,000 crores. So, I think from that answer, I can take away that you're confident that you'll do that. I just had a question before we'll get to individual customers and people you've signed on, etc. Typically, you would get your clients, your customers, mobile phone manufacturers, etc., would give you a production schedule, right? This is what we want to sort of, this is what we'd be able to sell in the market for the full. It would be a 12-month out kind of a plan, but then ordering will happen closer as sales actually take place in the market. Is that how it would work? And I'm just sort of going back to the point about execution. Is all of that also on track? And whether the orders come or not will depend on whether the mobile brand, for example, in question is able to sell the mobile phones in the market, how their market share shifts, competitive intensity, etc., etc. So just a quick word on that, sir. Execution and how is it going?
So undoubtedly, the order book in mobile is very healthy with new customer acquisitions. I think in another 30 days, we're going to announce our first quarter results. The stakeholders and yourself would see how the numbers look. There is going to be a significant growth. The team has done extremely well in ramping up the execution. And we feel that in mobile, we should be touching 28 to 30 million units in the current fiscal. And the execution is going as per plan.
All right. Hi, Mr. Lal. Good morning and good to see you. And so 20 to 30 million is what you're looking at in FY26. I think you were guiding for a 20% growth on that 30 million number, right? So 26 should be 35 to 40 million?
That's what we are planning.
All right, got that out of the way. Well, let's address the latest piece of news then that came in. You've entered into a term sheet with HKC, to form a JV for manufacturing and sale of products. Give us a few details. What are the synergies and what are the revenue targets you have with regard to the signing that you've done?
So this is an extension of what we are doing to start with in mobiles and also in our IT products, namely notebooks and tablets. We have a very large scale now. And as a part of the strategy, we want to go in for the backward integration to create more value. So this JV with HKC, which is one of the largest global players in glass and display manufacturing, is going to fructify in next 8 to 10 months. We have yesterday submitted our application for a Press Note 3 waiver. So in the phase 1, we're going to set up a manufacturing facility in Noida, Greater Noida, for manufacturing 20 million mobile displays to start with, which would be largely for the captive consumption. Then in year 2, it's going to be doubled to 40 million. And also we're going to add line for display of laptops and tablets. That's the plan. Please appreciate a display constitutes almost 8 to 10% of the bill of material of mobile. So that's the enhancement in the value addition we are planning. And we feel that with 20 million units, the revenues to be generated are going to be almost 2,500 crores. And this is our first foray into the component space, which we're going to pursue very aggressively otherwise in the non-semiconductor component space. And it's going to be significantly margin accretive.
Okay, significantly margin accretive. That was my next question. Because I think, Mr. Lal, we've tracked your company for so many years now. And the one problem that the street has is when the revenues are growing so much, why are the margins still in low single digits? But of course, I understand that the industry works differently. But from this 4-5% margin band, when you say there's significant accretion margins expected, how much do you think you could take it up to?
So this is the first significant step that we have taken in Dixon. The large part of growth, Sonia, is coming in from manufacturing of mobiles. So mobiles manufacturing is globally, and so is the case in India, a relatively lower margin business. So that lower margin business equation would be much more loaded in the growth path. So with this, some blending will happen. Numbers to share at this stage that how it's going to pan out will be slightly difficult. But please be rest assured that this business is significantly margin accretive and it help us in inching up.
Okay. We always talk about the here and the now, right? But the larger overarching theme, not just for your own company and industry and for India, is India manufacturing for the globe. And that's something that has been a huge growth trigger for you. I mean, in the last, I think 1 year or so, you've had significant clients from across the globe, whether it's Xiaomi, Realme, Itel, Compal, etc. I want to understand from you, over the next couple of years, are you expecting to sign any more large orders? Is there anything in the pipeline from larger global brands that you can unlock in terms of, even value for shareholders?
So let me just share with you some numbers from the industry's perspective and Dixon's perspective. Please appreciate industry closed at almost $100 billion. And out of that, the EMS industry share was almost $20 billion, 20%. And Dixon's share in the last fiscal was around $2.2 billion. So we are almost 11-12%. The industry is expected in India, the electronics manufacturing industry, to touch almost $300 billion by 26-27. And usually 20 to 25% is the EMS portion there. So here we are talking about almost $70 billion of EMS opportunity. And we are going aggressive to ensure that we have that share on which we are sitting today in the coming couple of years. So that means scaling up the business. Now, what is the largest opportunity here? The largest opportunity here is mobile phones, the smartphones. And we are sitting on almost 50% of the outsourcing opportunity. That's the kind of capacity we have created. And practically all the major brands in the Android ecosystem are our clients now. So we feel fairly confident that the growth is going to be aggressive. Now, coming specifically to a question on client addition, yeah, that's an extremely important because that's how we grow. So we are going to be concluded another important client in the smartphone category. We have also tied up with a large global brand on the IT product. That's going to be, so these two things, these two sectors are going to be the growth trigger, apart from our telecom devices, refrigerator, and new business. So that's what we are planning. And customer acquisition is the key input, the key strategy for that.
Right. Mr. Lal, just a couple of questions. Now, in the mobile segment, you were already working with players with, I'm assuming, 60-65% share, if not more. You already have that those tied in with you?
Yeah, so when I see all the top 7-8 brands in India in the Android ecosystem are our customers.
Okay. Stop 7-8. Okay, got that. Now, I was just sort of asking because you said there's another client which you're going to onboard, right? So, but the top guys are all there already in that sense. That is one. But you said that on the IT product side, that is the other kind of growth driver, where there is still room to grow in terms of signing on newer major clients, right?
Yeah. So we already have 2 large brands as our customers. The commercial production is expected to start sometime in September. We have taken a decision to set up a large campus down south in Chennai, in which the IT products is going to be expanded. Apart from our foray into industrial electronics and automotive electronics, that campus should be ready in next 10 to 12 months. And we are in final stages of negotiations with 2 large global brands in IT products. Hopefully, I'm fairly confident that it's going to be through, and sometime in next fiscal, those products, commercial production is also going to take off.
I just one clarification. The screen tie-up with HKC, it's all going to be used in-house for what the mobiles that you produce, or you're going to sell it outside as well?
So Prashant, initially is going to be for captive production, but yeah, it's going to be to all the other customers also, and all the other manufacturing footprints and partners of the customers.
Okay, all right. Very quickly, Mr. Lal, before we let you go, you're looking at new client addition, new segments of business as well. EV part manufacturing, is that the new segment you're looking at as well? Just wanted some clarity on that front because there were various reports that suggested that.
Yeah. So we are making a foray into automotive electronics.
Yes.
It requires special technical approvals of IATF. This is going to take place in the Chennai campus. We are going to be foraying automotive electronics and also industrial electronics.
Interesting. And what is the total amount of money that you'll be putting into this EV part manufacturing? And by when can we see some revenues?
So those numbers are going to be are getting worked out. We feel that sometime in next fiscal, that business is going to take off. The teams have been placed, and also we are seeing a positive traction from the customers.
Okay, so growth is like firing on all cylinders. Next fiscal, the EV business could take off. And what about telecom? One final question from mine, since my colleague was asking you about different product segments. You have a facility, another facility in Noida that has started mass production in the telecom space. So I want to understand, how are you planning to scale it up further?
So this is a JV with Airtel and their customers. We had a revenue of almost 700 crores from business. We have been manufacturing routers and also set-top boxes there. In this business, we are really ramping up. We are a PLI beneficiary here. We are having a very aggressive target of going from 700 crores to almost 2,300 crores. We have now added new product range of fixed wireless devices, access points, IDUs and ODUs. So this business is also going to grow very aggressively. Normally, I don't share the numbers, but in this telecom venture, I'm sharing with you that the target plan for this year is to grow from 700 odd crores last fiscal to almost 2,300 crores in the current fiscal.
All right, Mr. Lal, we'll leave it there. Thank you very much. And, I'm sure the numbers are going to be fantastic. You gave us a sense that we will see Q1 shortly, and there has been significant scale up and ramp up. So look forward to our conversation after the results we should not be very far away. Thank you very much and good luck. That's Atul Lal, Managing Director at Dixon Technologies, with some perspective on how things are looking. We'll take a quick commercial break here. Markets down about 20 points, which means there has been a significant turnaround, turned down actually from the day's highest point on the index. Broader market is still looking good. About 1,500 stocks are higher, and you got about 900 stocks which are lower at this stage. Guys.
Okay, well, let's also talk about the auto sector once again, right? There was a mixed set for the auto stocks in terms of overall sales. We just heard from the management of Bajaj Auto as well that the two-wheeler demand is picking up. They expect 6 to 8% growth in the domestic two-wheeler sector. Kumar Rakesh, who is the India analyst at BNP Paribas, joins us now to talk about that. Kumar, thanks a lot for joining in. First, I don't know if you had a chance to listen to the management of Bajaj Auto, but nevertheless, I'll tell you that they spoke about a 6 to 8% growth in the domestic market, and some export markets are picking up. How are you positioned on the stock now?
So we have a neutral rating on Bajaj Auto, but two-wheelers since the last festival season has definitely seen a recovery in the demand. Although the challenge which we find in the two-wheeler demand overall is the demand drivers seems to be quite mixed still. And secondly, the second half will start becoming a much tougher base. So we'll have to watch out that how the growth sustains in the second half of this financial year. I recall that in the first half of last financial year, the base was relatively muted because growth was not that strong, which turned around in the second half. So we'll have to watch out that if this strong growth which we have been seeing can continue to sustain into the second half. The growth numbers which you are talking about does imply in the second half, actually the growth is going to moderate from where it is right now, closer to low teen numbers, which most of the companies are reporting.
Okay, so that's on Bajaj Auto. What about the overall auto sales numbers for June? What has your biggest takeaway been? And what are the stocks that still stand out where there could be both valuation as well as growth, appreciation now?
So from the overall industry perspective, the couple of things which stands out, one is MHCV sector growth. During election period, it was expected that the MHCV demand will start slowing down and first quarter could be muted. But on an overall basis, MHCV demand has been quite resilient in the first quarter despite elections and possible muted government spending during this period of time on the infrastructure side. So that gives us comfort that possibly we are likely to see a capex revival that driving the next upcycle for the commercial vehicle, especially the MHCV segment. And if that happens, this would be only the third time in last couple of decades when the down cycle for the commercial vehicle, MHCV, will end without any decline in volume. And that is what we are expecting, that possibly we'll start see a recovery and an upcycle for the MHCV sector. The second thing which stands out on the industry basis is the tractor demand, which has been consistently improving over the last 3 months. Recall that early this year, tractor demand had started reporting quite a bit of decline. And that had started raising concern, what if the tractor demand starts getting into a down cycle in FY25? The numbers which have been coming for the last couple of months, and especially in June, does give us comfort that possibly that down cycle risk is not there. And the mid-single digit growth, which most of the companies are talking about, is quite achievable in this financial year. So that is the second thing on the overall industry perspective. From stock perspective, our top pick are Maruti Suzuki and Tata Motors. We also like Mahindra and Mahindra. For Mahindra and Mahindra, there are multiple catalysts still lined up from near to medium term. They are going to see a very strong model launches, and that is something which should continue to keep the equity story of Mahindra quite exciting. Tata Motors most likely is going through a consolidation year in which they have seen a very strong turnaround over the last couple of years, and this year most likely they are going to consolidate all the gains which they have established so far, and that gives another leg up possibly as we move through this financial year, as we start gaining more comfort on their FY27 targets, which are quite aggressive, and we don't think it's getting built into the estimates. Maruti Suzuki is one name which hasn't done much. Part of the reason is that the entry segment demand is something which has been quite weak, and Maruti has been struggling, and possibly one of the only few companies which is struggling the most because of that. But we'll have to see how the budget pans out and if there are any triggers, especially for the unorganized sector, that can potentially drive recovery in the entry segment, and that could be a catalyst for Maruti Suzuki as well.
Okay, well, we will let you go on that note. Thanks a lot for joining in. We'll step into a quick break. On the other side of the break, we'll put focus on the commodity space with Manisha Gupta. Stay tuned.
hope that the consumers love them.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's,
Welcome back to Corporate Radar. Well, for now, the market is very, very quiet. But what we do see is that many stocks are, flying around. Mitesh Thakkar is joining in. Mitesh, how are you feeling about the move? I mean, just consolidating with a positive bias. What are the stocks to look at for the rest of the day?
So, as I said in the morning, I think it will be the Bank Nifty to watch out for. There is that mild sign of weakness on the Bank Nifty, and that is the index under pressure. Now, if the Bank Nifty was to violate today's low, which is roughly about 52,120, then I think we might see further declines happening. Otherwise, it will turn into a sideways activity. So we'll keep an eye on the Bank Nifty, the way the charts are shaping up. But the other index which is strong is the IT index, and that's where trading opportunities can be found. Coforge is a buy with a stop at 55.20. Look for targets of around 57.30 to begin with. And HCL Tech is something I like as well. So it's come off the day's high, but this pattern is good. So buy here with a stop at 14.60 for targets of 15.10.
Okay, thanks a lot for that. Well, let's shift focus now to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
So now I'm looking at the overall sector, and that is because almost everything has started Asia on a positive note today. Well, the decline in US dollar seems to be doing the trick, and is the reason after a weak June for many of these commodities, July seems to be bringing in some cheer and some hope here. So the US dollar index is trading at around 2-month lows, and that clearly has been supportive. And this is, remember, a data-heavy week. You have Jeremy Powell's speech coming in today. It is going to be the FOMC minutes that comes in tomorrow, and the US non-farm payroll data on Friday. So every single day there is something that the asset classes will be reacting to. I want to start with the gold prices because we've seen a smart rebound onto this one. $2,300 an ounce seems to be holding on the higher side. Gold prices actually did see a decline in the month of June, but on a quarterly basis, we've seen nearly 5% of gains come in for this one. The US factory activity numbers also saw a decline. The US inflation data that came in on Friday also has been on the weaker side, and that has led the market to believe that the first interest rate cut could be coming in for September and the second in December, and that is where gold and silver seem to be taking their sense from. The crude oil prices are trading at around 9-week highs. The month of June has seen nearly 6% of gains come in for this space, and for the quarter, the crude oil prices have gained up by 14 to 15%. Various factors in play. One is the high summer demand from US. The driving season is on. The Middle East conflict really seems to be escalating right now. And the third thing is the Hurricane Berlin. This is the first of the 24 hurricanes that the US Atlantic season is looking at this point in time. So you are looking at support coming in from everywhere. For the industrial metal prices, it has been a good day and a good start to month of July as well. Copper is trading at a 1-week highs. You have zinc prices trading at around 4-week highs right now. And the steel rebar prices, which have continued to decline most part of this year and traded at a 7-year lows, also have seen some support come in. China's data has been on the weaker side, and the markets are anticipating that you could see some more stimulus come in from there, and that in turn also seems to be supporting.
Okay, thanks a lot for that. So just wanted to point out, by the way, that the markets are showing some signs of weakness. It's actually in the financial space. So we're looking at the Bank Nifty, which is down about 260 odd points. Down almost about 0.5%, and leading from the front on the downside is Kotak Mahindra Bank, ICICI Bank, Axis Bank, IndusInd Bank, all four down about 1 to 2%, and life insurance companies also under a bit of pressure right now, HDFC Life and SBI Life. So yes, it's consolidating, but with a negative bias right now. So just keep that on your radar. We'll do one thing. We'll take a quick commercial break, but don't go anywhere. On the other side, it's our special segment. It's the economy. Lata will get cracking with Suresh Ganapathy of Macquarie Capital Securities to put the spotlight on the banking stock. Stay tuned.
Looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone.
Today, the spotlight is on banking stocks. Counting in year-on-year terms, public sector banks like IOB, PNB, UCO, Bank of Maharashtra, and even Canara Bank have given between 100 and 160% returns. Even since January, that is year to date, they've given between 35 and 47% returns. And the old favorites, the private sector banks, HDFC Bank has been flat year-on-year, Kotak is down 2%. YOY, but in the past 1 month, HDFC Bank has gained 15% and Kotak 12%. So is the tide turning? Joining me for a status check on banking and NBFC stocks is Suresh Ganapathy of Macquarie. Suresh, thank you very much indeed for your time. So that is the big question. Is it time to start plugging away from PSU banks? If yes, why?
Yeah, sure, Lata. Thanks for having me on your show. Look, I think there are some couple of important developments which are likely to happen over the course of this financial year, right? The Reserve Bank of India itself has very clearly told in their annual report that they want to come out with the ECL guidelines, along with, of course, the project finance guidelines. And also, we are looking at increasing populism. You have seen, obviously, what has happened in the Maharashtra state budget. We're also possibly looking on July 22nd, tentative date, when the budget is likely to be presented. There is a positive, and of course, there have been some other states which have announced farm loan waivers. Not that I'm expecting the center to announce one, but then we are seeing certain elements of populism emerging. And at the same time, we are also done and dusted with the fact that the low levels of credit costs are done, and we are likely to see, at least to begin with, the second half slightly lower recovery environment. So if I were to combine all these pieces of the puzzle together, it clearly means that we're looking at a much more normalized credit cost outlook. In fact, the ECL norms will have a greater impact on the public sector banks. And therefore, we do believe it's a high time that the kind of massive outperformance that we've seen in the PSU banks, beginning to get reversed. And today, the private sector banks, after the long periods of underperformance, are at extremely tempting valuation levels with very stable return metrics. And mind you, these are very quality, stable banks. And therefore, I think it's high time that we shift our portfolio a bit more towards private.
Okay. Well, just a word. We did see this news coming from Maharashtra, which was a bit troubling, that banks cannot even demand CIBIL scores from banks. There was a very aggressive political voice against it. But then the same priority sector norms apply to private sector banks as well. Wouldn't that be a sectoral worry?
Yeah, so that's a good question. You ask, see what exactly happens in case of private sector banks here. If you look at their overall agriculture portfolio itself, they don't really lend much to the small and marginal farmers. Okay, they do have roundabout ways of meeting the priority sector lending requirements. They go through PSLC buyouts, priority sector lending certificates, as we call. And maybe if they fall short, they get RIDF bonds. So what exactly happens is that while everybody has to adhere to the priority sector lending norms, the private sector banks obviously have a much better way of managing it. If you look at the NPL levels, which is what we brought out in our report, the NPL levels in the agri space for private sector banks like HDFC and Axis are around about 2 to 3% odd or so, whereas that for SBI is 10%, right? So that clearly goes to show the kind of lending within the agri space the private sector banks do compared to the public sector banks.
Okay. All right. So let me come to the earnings picture itself. After all, the quarter has ended. We should be getting into the result season. Do you think HDFC Bank's problems are over? You are giving a fairly decent 14% growth in their EPS in the current year and 20%, that's big, next year. So it's integration problems behind it. Is it a buy for you?
Yes, it is of course a buy. I mean, of course, we have a near-term technical trigger in terms of possibly the MSCI inclusion, which perhaps could happen in August. We have to wait for the June 30th shareholding pattern, which the market is eagerly waiting for. Maybe by the end of this week, we have some clarity on that. That itself can result, as per our internal estimates, about $4 to $5 billion of buying, right? So anyways, leave the technical factors aside. The bigger point or the narrative here is that the expectations are now toned down. People are aware of the fact that loan growth will remain at somewhat subdued levels over the course of next 2 or 3 years. And it's all a function of how well they can take up the margins. So what we are arguing here is that indeed, if they are able to deliver an increase in margins over the course of next 2-3 years, you can get that 14 to 20% EPS growth that we are talking about. And that's where the upside lies in. And the stock is indeed very attractively priced for that 14 to 20% EPS growth that we are predicting for the next couple of years.
Okay. Let me come to the other fellow who has been ignored for the past year, Kotak Bank. Well, if I remember right, you have an upgrade. But then it is at a tall 2.7 price to book. I mean, compared to its past, that is modest. But a price to book of 2.7 times is higher than any other bank. And you have only an EPS growth of 7% for them. So why is Kotak an upgrade?
Yeah, so look, I think, Lata, you're looking at the reported Kotak valuations. Remember, in case of Kotak, the subsidiaries have done exceptionally well over the course of the last 12 months. Because of a very robust capital market outlook, or rather performance. So what's happened is you have to look at on a core price to book basis. On a core price to book, the same report talks about the fact that Kotak is trading at 1.7 times and not 2.7. So 1.7 is damn cheap, right? Because a significant proportion of the value is coming from the subsidiaries, which have done very well. There has been a prolonged 4 years underperformance in case of Kotak, and at 1.7 times, it really becomes a very, very attractive buy, way below the historic averages of 3.5 times, even on a core basis that Kotak used to trade. Now, yes, the EPS growth is a bit weaker, mainly because we are expecting some normalization of margins coming through. But I think the way we look at it is that Kotak will still be an entity which reports a 2% plus ROA. On that basis, you're giving 1.7 times for the core bank is clearly a good entry point in our view, and therefore we upgraded the stock to an outperform.
Okay. No PSU bank at all for your buy, in your buy list?
No, not at all. Lata, if you look at it in this way, SBI itself came out with an initial estimate in the analyst meet where they talked about the fact that under ECL, the overall provisioning obligation will be 300 billion based on their initial estimates, right? That's 8% of the net worth, Lata. So if that is for SBI, you can imagine the kind of numbers which is going to flow through for other PSU banks. That's a very significant impact, I believe, and therefore we would really not be getting into these PSU banks at this point in time.
All right, well, let me come very quickly to the NBFCs because I mean, I can't believe you have a short on Bajaj Finance, the storied Bajaj Finance, and not even very positive on Chola, again storied stock, and you prefer Shriram. Why?
Look, I think I do have a value bias in our recommendation outlook. What we are arguing here is these are the companies which are trading at 4 times plus price to book. I think these are really exceptionally high valuations that the market is awarding. Also, you have to look at in an environment where growth for both of them will slow down, margins will go up, credit costs may slightly inch up, and therefore your overall ROAs and ROEs, everything is looking, having a downward bias. And that's why we believe it makes more sense to go for a cheaper valuation name at this point in time, which is also having reasonable ROA, right? We do have a buy on guys like Shriram Finance and also Aditya Birla, where the valuations are reasonable and at the same time the ROA levels are pretty healthy. Though, of course, they are trading at a much, much lower valuation than BAV. And I also strongly believe, Lata, here is that these multiples don't factor in any probability of any of these large institutions getting converted to a bank.
Yeah.
While that is quite some time away, and we're not telling it's going to happen in the next 12 months, but remember that the NBFCs are not size agnostic, right? So at some point in time, that pressure will come in and you are not going to generate a 5% ROA being a bank, and whereas you're getting 4 times kind of price to book. So it makes every sense to factor that into the valuation.
Yeah, I would assume they will fight it as much as possible, but then we saw HDFC's case, right? Let me quickly come to insurance and then I have some sector questions for you. Insurance, you only like SBI Life, I believe. Right. Why that? I mean, why not LIC? Is this fear of dilution?
No. So I think from an insurance standpoint, Lata, if you look at it from January onwards, we have been a bit negative across the space. SBI Life is more a valuation upgrade and it's less impacted by the IRDA regulatory changes. Look, what has happened here is that the sector had an let's put it this way, on a unhealthy high level of margins, right? You're operating at 28-30%, and from there you can only go in one direction, which is down. So the competition in the system is pretty high. In the life insurance space, there is irrational pricing across the board. The regulations have come down heavily. First, you saw the tax changes from the government, then the IRDA surrender value changes. All that means that over the course of next 12 to 18 months, we are going to see margin pressures continuing. And therefore, even though you may have a healthy top line growth of 15 to 17%, your margins will bring down your VNB growth to perhaps single digit levels or low double digit, which is not there in the price. So we do see VNB downgrades happening across the board, and therefore we have a negative view on the insurance.
But surrender value should affect even SBI Life, right? I mean, I think those were rules that were needed. It's about time they came as a consumer. But
because SBI has 60% in ULIPs. So if you look at the overall proportion of the par and non-par, SBI Life has the least proportion amongst the 4 or 5 insurance companies that we're talking about, life insurance companies.
Okay. All right. Well, quickly, any of the fintechs, I mean, there are only 2, I guess, which are of import. But Paytm, PB Fintech, anything?
No, I'm Paytm, the dust has to settle in. I mean, there are still a lot more moving parts with respect to that entity. So we'll have to really wait and watch in terms of what exactly happens in terms of their lending operations being sustainable. PB Fintech, we recently upgraded to a neutral rating, but I think the valuations now really are borderline very high. I mean, it trades at some 60 times FY27 multiple, and I'm not willing to buy at that price. So we really have a valuation concern there. And fintechs as such, we just had a conversation with a couple of fintechs even now, and there is increasing skepticism from the RBI in terms of their unsecured growth, and also from the funders to them, which is the banking system, being a little bit more conservative. Yes. So they will go in for some kind of a squeezing period over the course of next 6 months.
Oh, yes. We're already seeing some telltale signs over there, though, of course, not with respect to these two. Just a final question on banking stocks itself. Is there any red flag? I mean, RBI governor also has spoken against this F&O and the fear that personal loans are going there to, fuel the stock market. Is there any concern that this unsecured risk weight increase or anything won't go away? May come back? Any such fears at all?
The good part here is that if you look at even the RBI's FSR and the latest annual report, everything is possibly talking about outcomes being in the direction that RBI wanted to be, right? So if you see loan growth, loans given to NBFCs, the banking system has slowed down. The unsecured loans, the banking system has slowed down. So everything is happening as per what RBI wants. The banks are also trying to have a very tight LDR, right? It's very unlikely that banks will have scope to increase LDR further, especially the kind of dictates that you're receiving from the Reserve Bank of India.
Yep.
So as long as banks are following those basic aspects, I really don't see any further big regulatory changes. But the problem here is clearly compliance and governance, and that's an area of weakness which we are seeing across the board. And whether it comes to IT or customer protection or whatever we are talking about, that's a non-negotiable area for the Reserve Bank of India, and therefore there will be continuing idiosyncratic cases in each bank level where there could be issues which the banks will need to pay complete attention to. Otherwise, you definitely run the risk of attracting the regulatory ire on that.
Oh, yes. Banks have become actually technology companies, so there will be pluses and minuses. But that discussion on another day. Thank you very much, Suresh. Always a pleasure speaking with you and giving us a bunch of ideas on how to look at the banking space. That's it on this edition of Bazaar. After a break, Chartbusters.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So, at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we're looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years.
CSB Bank climbs more than 3% after their first quarter update indicates an 18% growth in gross advances and 22% growth in deposits year on year.
Patanjali Foods climbs after it announces the acquisition of home and personal care business of Patanjali Ayurved for 1,100 crore rupees. The management tells CNBC-TV18 that they're confident of growing the acquired business at a much higher pace than earlier.
Angel One comes under pressure after market regulators SEBI directs market infrastructure institutions to charge transactions uniformly and not based on volume. The stock is down more than 7%, 9% now.
DCX Systems zooms more than 14% after winning a 1,250 crore rupee order from L&T for manufacturing and supply of electronic modules. Meanwhile, IOL Chemicals as well climbs after the company gets China's drug regulators nod for one of their products, Finofibrate.
Carousel 2 surges after the company launched a QIP yesterday and set the floor price at 838 rupees per share.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangla Malu. And as you can see at the top of our screens, the Nifty hasn't moved a point. Whereas flat as can be on the Nifty Bank is a relative underperformer in today's trading session. But the good news, Manglam, is the breadth of the market is still favored in the number of stocks that are advancing. 2 stocks advancing for 1 stock that's declining.
It's a good day, no problems actually, you know, flitting between red and green for the index after a big rally that we've seen over the last couple of weeks. And mind you, a lot of positions are now on just one side of the market, 83% longs by the FIs itself. So let's see whether we can sustain this up move or not, and whether we're in for some bit of consolidation ahead of the big events like results as well as the budget in July. Let's talk about our special segment where we get you a few ideas for profit from Money Control Pro. And today we have Nitin Agarwal joining in with a stock.
The company that I have chosen for today is a Landmark Cars, which is an auto retailer. There are a couple of factors that make us upbeat about the company. First, significant headroom to grow despite being the 3rd largest car market globally. The contribution from the premium car in India is less than 1%, which is way less than as compared to the developed world such as US and UK. And hence, there is significant headroom for the company like Landmark Cars to grow. Apart from that, the company has partnered with the prestigious names such as Mercedes-Benz, Jeep, Renault, and it has recently partnered with BYD, Kia, Kia Motors, Hyundai, and Mahindra and Mahindra. In addition to that, the growth of the auto retailer likely primarily because of the newer launches, and the portfolio companies of landmark cars have a big pipeline over the next 1 or 2 years. In addition to that, the company has been targeting aggressively the after sales service, which contributes around 24.9% FY24 as compared to 20% in FY20. In addition to that, this segment contributes a lot of this segment has significant EBITDA margin, higher significant EBITDA margin compared to the sales margin, compared to the new vehicle sale. Lastly, in terms of valuation, the company currently trades at around 25.9 FY26 projected earnings, which we believe is very reasonable given the significant headroom and opportunity for the companies going ahead.
All right, thanks a lot for that, Nitin. Well, Mangalam, the big deal that was announced overnight was with regard to Patanjali. We had spoken to the management and they are guiding for better times ahead, 200 basis points expansion in margins and better growth. Tell us more.
Absolutely. This was something which was in the cards, and the management joined us about a month ago and said that they are looking at adding the non-food business of or the non-medical business of Patanjali Ayurved into their own fold, which includes the dental care, skin care, hair care and home care businesses. The deal valued at around 1,100 crores, which will be paid over 5 tranches. Remember, Patanjali has around 3,500 crore of cash on their books as well. So this would be, of course, internally funded. Additionally, they will also pay 3% of sales, which is minimum 83 crore as licensing fee annually over the next 20 years. What this deal does basically adds almost 2,800 crore to their revenue of 32,000 crores. But more importantly, the EBITDA of this business is close to 500 crores as of last year. And this compares to around 1,279 crore to their food and oil business itself. The margins at around 18%. And this compares with our 4% that Patanjali's own business currently trades at. So this is a big accretion to their overall margins, and which explains why the stock is holding up in the green after a big run that has seen over the last few trading sessions itself. So this deal adds about 8.5% to their sales, 32% to their EBITDA ex royalty, and the most important business out here is the dental care business, which has EBITDA margins of 24% with a revenue of 1,345 crores. We spoke with the management this morning and they said that just the way they've grown the foods and biscuits business by over 50 to 60% in the last 2 years, they are confident of growing this business upwards of 15% as well. The overall FMCG portfolio of the company grows between 12 to 15%, and on the EBITDA they are expecting about 200 basis points improvement over the next 18 months, taking it upwards of 20% as against 18% now, which in effect reduces their liability or reduces their licensing fee from 3% to about 1% itself, because 18 plus 200 minus 300 would make it 17.
All right, Mangalam, thanks a lot for that. Neatly put. For the time being, though, we'll slip into a short break. On the other side, we'll be joined by Alok Gupta, the Managing Director at Adelaide Blenders and Distilleries. You don't want to miss this.
Its biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Welcome back. Holding just in the green for the frontline index. The debutant on D Street today has been Allied Blenders. Of course, this is the company, as you know, the one that makes Officer's Choice whiskey, listed at a 14% premium to its issue price, currently close to around 315 rupees per share. So to understand the company's plans going ahead, we are now joined by Alok Gupta, the managing director at the company itself. Remember, the company had joined us at the opening of the IPO as well, spoken about their growth plans going forward, improvement in margins, etc. as well. So now let's further that conversation with a few more details. Thanks a lot, Mr. Gupta, for joining in, and congratulations on the listing. It's a momentous day for your company, your employees, and all the shareholders as well. The last time you joined us, you did say that you're looking at around 5,000 to 5,500 crores in terms of revenues with mid-teens margins over the next 2 to 3 years. At the price that the company is currently trading at, you know, the street expects around 3,700 crores in terms of revenue and 350 crores in terms of EBITDA for FY25. Is that a possibility?
Well, most certainly, I think, first of all, thank you so much for inviting me and for all your good wishes, and certainly a possibility. I think the plan that we put for FY25 on back of a higher P&A growth and significant oversight on cost, we should be looking at gross margin expansion, and that all flows down to a better EBITDA profile. And as we discussed last time, the objective of the issue is to pay off the debt. So we see that happening immediately with significant reduction in our interest costs, therefore a better profit margin as well. So we are on track.
So you're on track for what number? 3,750 crores on the top line and 350 crores for the EBITDA. Can you better that? If yes, by how much?
Sorry, I'm having a little difficulty. If you don't mind repeating the question, please.
Yeah, so what we're trying to get at is 3,750 crores in terms of revenue and 350 crores in terms of EBITDA for FY25. You say that's pretty much on the cards. Can you better that? By how much, if at all?
Well, for now, I would say the plan is to better that. By how much, hopefully, we'll get to know over the next few quarters. But I think we have a solid plan in place, so we should look at the numbers that you've just spoken about.
All right, EBITDA at around 350 crores. We'll hold you to that number. Well, Mr. Gupta, congratulations and wishing you all the best as you list on the stock exchanges. It's a Tuesday morning and it's a rarity that we're already talking about whiskey, but that's the case. So let's get through some numbers then. On the volume front, what kind of volume growth are you factoring in for the next 3 years or so? And more importantly, will you outgrow the industry? If yes, by how much?
Sure, thank you for that. I think like we spoke last time, we are looking at the entire segment broken up into what we call as mass premium, where we have leadership through Officer's Choice as a brand, and the P&A segment, where we have 3 solid brands in terms of OC Blue, Iconic White, and Sterling Reserve. And we also spoke about the luxury segment. Going forward, the focus on the mass premium segment is going to be a single-digit growth, but profitable growth. Hold on to our gross margins, which are already trading north of 40%. In the P&A segment, with these 3 brands, we have a solid position, and we'd like to expand our market share in the P&A whiskey. But a lot of focus and excitement is going to be in terms of the new brands, especially on the premium and luxury side. We launched our small batch in Zoya just in January. So getting on to your question, I think the way to look at growth is that the volume growth we are looking at early teens, but the value growth in terms of revenue growth, we are looking at mid-teens, and that will lead to a better profile of sales and therefore a better gross margin and EBITDA.
All right, P&A segment is how much of your total mix? And how much will it contribute in the next few years?
Well, the mix has been steadily improving. So from a 25% share of P&A, we are already north of 50% in value terms. And we expect that to continue growing at least 10-15% year on year. So hopefully 3 years down the line, we are looking at a mix anything between 75 to 80% coming from the P&A.
75 to 80% coming in from the P&A. That would be interesting. So how about premium beyond prestige and above? Because, you know, so what is the kind of revenue that you expect coming in from the high-end luxury premium segment? Where does that number stand at right now? And where does that go, say, at the same time when P&A is 75 to 80% of your revenues?
Well, currently the segment is small. We do about 300,000 cases in the premium and luxury segment. The segment is about 12-13 million cases, growing at a decent growth rate of 20%. So the way we are looking at is we plan to launch about 4 or 5 brands in the segment. And over a period of next few years, if we can get to a high single digit or a double digit share of this 20% growth segment, which is a base of 12 million, that will be a good number for us to arrive at.
Okay, all right. Mr. Gupta, let's talk about a couple of states then. In Telangana, there's been talk of some price hikes. Has your MRP gone up? If yes, by how much? Point number one. And there is also talk about a liquor ban, alcohol ban in Odisha. Do you have any exposure to Odisha? So give us some clarity on both these fronts, Telangana hikes and any exposure to Odisha.
Well, we do trade on Odisha. We've all read the news article, but what we hear from more credible quarters of the policymaker, I think we do not expect any change. If at all, there may be some discussion on country liquor, but again, I would say it's a bit of speculation because the statement was made by one individual, but the government is sort of the view that this needs to be retaining status quo on as a market. In Telangana, there was a price increase last year. So in our view, while there may be some conversation about price increase, which will be more than welcome, but we have not factored any price increase into our, for the financial year FY25 into our plans. If that comes through, we'll be more than delighted, but we expect that to happen early next year.
All right, so don't expect, and if you get it, well, cheers to that. We'll keep an eye out on that front. What about in Odisha? You're not expecting any change, but what is your current exposure to Odisha?
We do not expect any change in Odisha.
That's correct. But what is your exposure, sir?
In terms of, you mean in terms of rupee crores? That number, yes. Honestly, is not on my fingertip. That number is not honestly on my fingertip, but I can give you a range-bound number. It would be maybe to the tune of about sub 20 crores could be our exposure.
Oh, very
all right, sub 20 crores. So no real worries out there. And final question then from our end. What about the overall target? You've given us this 5,500 crore revenue target by the next 3 years or so. Number of cases, if you could break that down in terms of product mix, margins, market share. Give us the overall vision board for the company as it stands.
So we're looking at doing about 36 odd million cases this financial year and compound that by about double-digit growth over the next 3 years. So we're looking at, hopefully close to 45-50 million cases a couple of years down the line. From a P&A segment, like I said, the focus is going to be on P&A. Therefore, we see the value share of P&A and premium and luxury to be north of 75%. Gross margins are currently at about 39%. We should see about 200 to 300 basis point increase in the gross margin. We did talk about the fact that we're looking at going captive on ENA. Currently, 30% of the ENA that we consume is our own, 70% is bought. We're looking at 100% captive. That should have impact of another 200 to 300 basis point on the EBITDA. So, I mean, the single point that we're chasing currently is to get to industry parity EBITDA, which is in mid-teens. So, on back of a better product portfolio, gross margin expansion and backward integration, we're reasonably confident that we'll get there.
All right. Thank you so much for joining in, Mr. Gupta, and wish you good luck once again for all your life post-listing now that the street is eyeing every quarter, literally and figuratively. We'll keep coming back to you and, checking on whether you are on path to that vision board that you have. Nearly 5,500 crores in terms of revenue, 36 million cases, higher share coming in from P&A with mid-teens margins. Once again, good luck from all of us out here. Take a short break, come back. On the other side, we have the management of Atul Auto joining in. Jitendra Adya, who's the President of Finance, joins in to discuss their June auto sales.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Electric is in the fast lane after receiving the market regulator's go-ahead recently. Ola is racing towards its IPO. It is going to be the first Indian electric vehicle company to go public on the Indian bourses. But before that long-awaited IPO, we're here at Ola's future factory in Krishnagiri in Tamil Nadu to tell you about how Ola is building its electric empire from the ground up. We're here at this colossal factory, which is where scooters like these are coming to life. Set up in 2021, Ola claims its future factory in Krishnagiri is one of the most advanced two-wheeler factories in the world, boasting of automation and cutting-edge processes. The factory is automated with modular and flexible assembly lines and an in-house paint shop. When at full capacity, the 10 production lines at the plant are expected to grind out one scooter every 3 seconds. However, at the moment, the future factory has one manufacturing line and is producing anywhere between 2,300 to 2,700 scooters a day. This Ola Future Factory where we're at is spread on a 600,000 square feet area and has an annual install capacity of 1 million units. It was built from ground up in less than 8 months in the middle of the pandemic, and there's a few things that really stand out as you enter this factory.
Welcome back. Well, let's focus on Atula Auto. That was a star in yesterday's trading session after they reported their numbers. To understand what's the outlook from here on, we're joined by Mr. Jitendra Adya, who is the President of Finance at Atula Auto. Hi, Mr. Adya. Good morning and good to see you. Well, we have been trying to get some numbers out of you, and now the numbers are showing up. You're already doing more than 2,500 units per month. My question to you is, will things improve from here on? And by the end of the year, what will you end up at? I think you were hinting earlier that things continue to improve in the second half of the year. So you'll be closer to around that 45 to 50,000 odd. Do you want to revise that number? And where do we end this year at?
Very good morning to you. Yes, happy to say that we are able to set the correct tone for the year. Yes, the first estimate is to go pre-COVID level, which used to be close to 4,000 units per month. And I'm happy that we were able to start the year with the right and correct tone.
All right. So, sir, when do you get to this 4,000 per month? By which month do you think? Do you think it will be somewhere in the middle of the financial year? And also, if you could tell us, what do you end this year with?
It's really difficult to give you the exact prediction of the number, but yes, on this path and the way, yes, definitely, if we target to achieve pre-COVID level, so it used to be in a festival season that is coming anywhere between mid of the year and anywhere between second and third quarter. I believe that we will be able to post good volume.
All right. No, because pre-COVID FY19, for the entire year, you did 50,049 units. The year after that, FY20 as well, you did around 44,000 units. So just wanted to know whether that's the range we should be looking at, between 44 and 50,000. If more specific, going by your 48,000 is something that one can look at, right?
Yeah, see, let's understand what kind of product portfolio we are having post-COVID. Pre-COVID, we were more into the diesel three-wheelers. COVID, we have a complete range of products that is diesel, alternate fuel, and EV of both the categories, that is L3, L5. And with our swappable battery solution and tie-up with Honda, I believe that this year, definitely we are going to post not only good volume, but we will be able to definitely, see the vehicles for coming years to more dividend on it.
So could you break up, this quarter, you've done close to around 6,600 units. This month, in the month of June, you've done around 2,600 units itself. Could you break the volumes up in terms of exports, petrol, diesel and EVs that you've done so far? And what's the outlook for this year?
My revenue from domestic and export point of view, from export comes somewhere close to 10%, which is again, historically, we were doing around 10% across, all 4-5 years in history. About fuel, yes, EV contributes somewhere close to 30%. which is going to be the next gen vehicle. Alternate fuel and diesel, that contributes around 70%.
Got it. All right. Mr. Adya, what about, operating leverage? That should start playing out, right? What are the prospective margins you get to? Volumes will pick up, input costs are fairly stable, and your mix is rapidly changing as well. So what should the margin band be? We're not asking you for an exact number. We want a band though.
Like Sanjay said, see, Auto pre-COVID was under expansion, and exactly at the time when COVID hit India, we were ready with our capacity of 120,000 units. So this year, I believe our focus would be definitely to just, have the volume first and gain the market share. Obviously, when numbers will go, margin is likely to improve. But let me put it like that we are seeding the products into the market, alternate fuel as well as EV. Margin profile is likely to remain same as we used to enjoy pre-COVID level, but few basis point here and there. Difficult to give you the exact prediction about margin going forward, but raw material and scale, that is going to give us more benefit.
So early teens, maybe 11% odd, that's a number we should work with, early teens?
I leave it up to you.
Double digit margins is doable? Double digit, at least 10%?
Yes, that is what
10%. So 10% at least is what you could do, give and take, say, 50, 100 basis points on either which direction. So we'll hold you at double digit margin for now. But by the end of the year, Mr. Adya, do you think you lift your bat and say, we have scored a 50, we are back at 50,000 tons? Is that a possibility, at least as of now, going by the entire scenario?
Looking at current year's overall external as well as the internal environment, I'm really positive about it. But let's complete the quarter number 2, and I believe that we will have more visibility and clarity.
Okay, let's talk about two more important things for you going forward. One is the L5 approval that you were expecting. L3 you got, that accounts for nearly 30% of your sales. So L5 approval, you said you were expecting that to come by in the very near future. What's the update on that? And once that comes by, how much of an acceleration can we see in your volumes?
Let me just give a small correction over here. This numbers are a combination of L3, L5. That is point number 1. All the products are being approved, whether it is L5 or L3. It has been homologated. It has been approved by the institutes, and we are all set to go into the market. Yes, same approval were pending for L5 category, which is, I think, underway. We expect approval anytime.
All right. And final question then from my end. You've recently incorporated a new subsidiary by the name Atul Lease Private Limited, which intends to do the business of purchase, acquire, maintain, operate and manage various type of vehicles. What is the kind of business potential that you see here? How much can it boost your business by over the next few years?
See, the leasing and battery as a service, leasing the vehicle on a rental basis, that is going to be the business of next day. And with that, anticipation that we will be able to just, roll out B2B operation with, operating lease. We have incorporated this company. We are working out the business plan. Maybe during our next interaction, I will be able to reveal more details of it.
All right, Mr. Adya. Well, your shareholders will be waiting by to see these numbers and hold you to this guidance. But for the time being, it's been one of the big outperforming stocks of this year. And we look forward to chatting up with you at the end of the coming month as well to get an update on the sales numbers. Well, for the time being, though, we'll have to wrap up on this edition of Chartbusters. But you stay with us because the team of Trading Hour is waiting by.
As the name signifies, the future part in it, a lot of the tasks here on the shop floor are automated, with robots also deployed to carry out many tasks. The second and the most interesting thing I thought is that this plant is largely run by a women-only workforce. So kudos to Ola for that. And third, for a manufacturing facility, it is surprisingly quiet. The female workers on the shop floor total 944 on-roll employees, representing 100% of the shop floor workforce and more than 25% of the total on-roll employee headcount. After the future factory, Ola also plans to have an all-woman workforce in its cell manufacturing facility, the Giga Factory, as well.
The reason we set up the women factory was that we want to set up an example for the industry that in India, women can actually participate in the workforce.
Ola began the production of its second-generation EV scooters in September last year, and its founder says Ola will start the production of motorbikes in the factory later this year.
We're focused on the two-wheeler, Ritu. Scooters already has given us such a strong growth over the last 2 years, and last year we expanded our portfolio of scooters from the S1 Pro to multiple S1 platform scooters. Now we are working on the motorbikes. Like you said, we showed you motorbikes 15th August last year. Yeah. Those were early concepts, and we've been working on the R&D of those things. Okay. So through next year, you will see us launch some motorbikes, and I do hope that the consumers love them.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness, or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which have...
Good morning, welcome to Trading Back, and look who's back. Sorry, welcome to Trading Hour, and look who's back. Surabhi is back after spotting a lot of animals in the Kenyan safari. Now time to spot stocks.
Animals are here. The animal spirits, at least in the market. I mean, I think all the lions are roaring here. Forget about Masai Mara.
Bulls and bears were always there, but now you can hear.
I think the lesser bears, far more many bulls that we can spot on our screens, because as I come back and catch up, it's just been record highs. I think Friday was a bit of profit taking, but Monday onwards, the market's taken off, and I mean the screen's looking okay. It's consolidating, but not looking bad at all, Rima.
And you know, the dip has been bought into. So we opened up at highs. The Nifty crossed the 24,200 mark for the first time ever. The high today on the Nifty was 24,238. That happened in the opening tick. After that, in the first 1 hour, there was a sell-off. We lost about 100 points on the Nifty from the top of the trading session, but the dip has been bought into. And in the last, 1 hour or so, markets have been consolidating absolutely flat on the benchmark indices. Nifty IT continues with its momentum. So the Nifty IT index is a gain of over 1%, taking its 1 month rally to 14.5%. And today, Nomura has turned bullish on the sector. They believe Q1 will mark the bottom of the sluggish revenue growth. But outside of IT, which is, a continuation of what we had yesterday, there are so many stories, right? SEBI clamping down on the F&O frenzy. So names like Angel One, Motilal Oswal, 5 Paisa under pressure. And, ahead of earnings, even beaten down chemical sectors have made a comeback. So today I was just looking like Deepak Nitrite, Archean Chemicals, Himadri Chemicals. These are also stocks where you can see a lot of activity. So that's a pocket of interest.
No, absolutely, Rima. And, then you have the newsmakers. You mentioned chemicals. So there are certain entities where, for instance, IOL, they've got a alliance going with an international manufacturer. So that stock's reacting on the back of that. DCX Systems. These are all news-based movers and shakers. I mean, some order wins coming through. That's IOL. Reacting to the news that we have today. Today's listing should also mention that Allied Blenders has had a pretty decent listing, still retaining a pop of about 13 to 14%. So that's another one that's on the move. And last but not the least, I'm just sort of reading out the list of newsmakers today. There's also Patanjali with the acquisition of the FMCG business from Patanjali Ayurveda. And we spoke to the management as well. They're talking about higher growth levels, higher margins, and at least a 15% growth for the FMCG business on a consistent basis. That stock has managed to retain. Well, okay, now it's slipping into negative territory. But for what it's worth, these are some of the movers and shakers that have been in focus today. Let's, for the time being, move on to a large name from the automotive space. Bajaj Auto is a stock on our radar. Now, the auto major reported a 5% rise in total sales. The number was about 3.58 lakh units for the month of June. This data was better than the muted expectations that we had from some of the brokers on the street. Two-wheeler sales, however, did continue to see some pressure in the export markets. To talk about this, of course, we caught up with Rakesh Sharma, ED of Bajaj Auto. And Mr. Sharma actually painted a pretty optimistic picture. He said the company will continue to look at sort of high single-digit sales in the next quarter. And he also said that there is sequential recovery that's underway in the Nigeria market, which is one of their key markets, obviously, in Africa. Take a look.
6 to 8% is a very good growth, right? And the key factor which is actually driving this growth is, at least in our type of customers, the economic recovery is finally reaching them. And there is optimism. We can also sense that optimism from the way the terms in retail financing are coming out. People are willing to take longer term loans, and which reflects a certainty of future income flows. I think 6 to 8% growth is a good growth too. It's a very large industry. And if it grows at 8%, it has got very good consequential impacts. Point is there that for this customer who's got 30 to 40,000 salary per month, and where a motorcycle or a two-wheeler is an absolute necessity, over there to have a 28% tax is, very harsh on the customer. Because don't forget one thing, the moment a person acquires a motorcycle, that person's productivity really increases, whether it is access to the farm or access to a job in a nearby town. A whole new world opens up. And therefore, from a social point of view, and even from an industry, triggering off an industry sort of growth point of view, there is a strong case for reducing the GST large market of Nigeria. That is still in the negative zone. But having said that, there is recovery even in Nigeria. Because of inflation caused by devaluation, the demand is muted, though recovering. And all depends on now the stability of the currency and people getting used to the new normal and things coming back. So it's going to be a gradual progression.
All right, so that was the outlook from Bajaj Auto, sounding reasonably optimistic for the rest of the year. With that, let's move on. Now, we have a company on our radar now and a management joining in. I'm talking about transformers and rectifiers. The stock has been trading higher on the back of fresh order wins worth about 149 crores. The total order book in the first quarter of FY25 now stands at just under 700 crore rupees. To talk about the business outlook, we have with us Satyen Mamtora, Managing Director at Transformers and Rectifiers. So thanks very much for joining in. So let's just start with the order wins and the order book position. I think, to be precise, you're at about 698 crores at the end of Q1. What is the fresh order inflow expected? What is the business visibility that you're seeing, among the customer base?
So currently, the fresh order, in the past quarter, we received about 700 crores order book. And we are expecting by end of this year around 3,000 crores order book more.
That's so 3,000 crores, you're saying?
Yeah, 3,000. Yeah, 3,000 crores. By end of FY25.
That's the end of FY25. Could you just break that down into the kind of orders and where the bulk of this 3,000 crores might actually come in from?
Basically, these 3,000 crores orders will come from grid expansion, from railways, from renewable energy. A lot of inquiries are currently floating for EAF transformers, electric arc furnace transformers. So that is also our major key focus in export market.
So two quick questions on this 3,000 crore. One, how does it compare with the kind of order inflows we've seen in the past? Is it higher, or have you been on an annual basis getting approximately about 3,000 crore of order wins, trying to gauge the momentum there? And secondly, what does this mean in terms of your revenue forecast for the full year? What can you achieve by way of a top line?
By way of top line, this year we will be achieving around 2,000 crores, 2,000 plus crores.
Okay. And this 3,000 crore of
and
order wins?
currently our order book is at stands at about 2,800 crores.
Got it. No, just wanted to know this 3,000 crore of order wins. Is it in line with historical averages?
Yes, it is in line with our historical averages. We are probably getting more inquiries for electric arc furnace and renewable energy in the current quarters, because the expansion, India's plan to expand in renewable energy.
Okay, so you're getting more inquiries from the electric arc furnace side. That's interesting. So given the mix, I mean, and as you mentioned, there's grid expansion, there's railways, there's ESC. And as you execute these fresh orders of 3,000 crores plus your old order book, what is the expectation on margins? And I'm talking full year margins. When FY24, the EBITDA margin improved from 8.7% to almost 10.5%. So is that level sustainable? What's the outlook, given the nature of these fresh orders?
Given the nature of the fresh orders, we are looking, our outlook for EBITDA margins is at about 14%.
14%? That would be a significant full year expansion, sir. So what makes you confident of moving from 10.5% to 14%?
Ma'am, the orders that we currently have on our hand are with good EBITDA margins.
Okay. And which is the, just for our knowledge and reference, so among all the various sectors that you sort of spoke about, which is the highest margin category for you in terms of, the orders?
Every order is approximately the same margin, but our production is more skewed towards EHV transformers, because that is the need of the hour.
Okay. And just to put it in context, 14% margins will compare with 10% margins last year. So we're looking at a 400 basis points margin expansion, and your top line to go to 2,000 crore versus 1,300 crore last year.
Yes, ma'am. That is correct.
Okay. So you also recently raised 500 crores via a QIP. Can you detail out, how will you spend this kind of money, and what is your capex plan for this year and even for the next 3 years?
So currently we are expanding for our distribution transformers and also our solar transformers and transformers for green hydrogen. So that expansion is approximately 15,000 MVA expansion. We are looking at inorganic and organic growth in backward integration also. So most of our approximately 300 crores will be spent this year in capex.
Okay, and you spoke about inorganic inorganic plans for utilization of these funds. Can you throw some more light, detail your plans here?
We are looking at opportunities currently. Nothing concrete at the moment, but we are looking at opportunities. If we can get an opportunity to grow inorganically, we would definitely jump on that.
And that would be in which segment? Inorganic acquisitions?
Mostly power transformers and backward integration, ma'am.
Power transformers and backward integration. Just a question, since you mentioned electric arc furnace transformers, and that seems to be a real new sort of growth driver area for you. Can you tell us a little more? How much of this business are you already doing? Where is the demand coming in from? Where will these transformers and what sort of industries will they be used?
Mostly this demand is coming from international market. There is a huge expansion for steel making in international market. So most of our requirement is either from South America or Russia.
Okay, that's pretty interesting. So this is clearly more of an export-focused part of your business, which brings me to the other point. How do you expect the export versus domestic mix to be in the current year, FY24? Where were you, in FY25? Where were you in FY24? And how will the scale-up in exports happen till what level this year?
Last year, we were at around 12 to 13% of exports. This year we are targeting around 25% export. And we won't go beyond 25% export because the market is ripe for Indian manufacturers in India. And plus, it is also our country's need that we need to fulfill right now in terms of infrastructure.
All right, sir. We'll leave the conversation here for now. Thank you very much for joining in. That's transformers and rectifiers seeing increased inquiries for the electric arc business, particularly from overseas clients in Russia. For the full year, they're guiding for 3,000 crore of order wins, improvement in margins to 14% versus 10%, and even a revenue top line of about 2,000 crore rupees. So that's a big jump, and the stock is up 3.5% today. And look at the 12-month returns, really. 700% in the last 12 months. The stock has skyrocketed. Get into a break. We'll come back and discuss commodities on the other side with Manisha Gupta.
So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending.
Welcome back. You're with us on Trading Hour, and now it is time to talk commodities. We have Manisha Gupta joining in for exactly that. Manisha, hi. Good to be talking to you after the break. So tell us, you're looking at wheat. What's the story here?
Well, wheat is something that the government has been quite worried about. You do remember that government had banned wheat exports in 2021. The last couple of years haven't been so great in sense of government procuring wheat for its buffer stock. That it does to ensure that there is enough wheat around for its welfare schemes and PDS and other security, food security sense of as well. So when you look at the numbers for this year, the wheat procurement has been at 26.6 million tons, which by the way is highest in last 3 years. Last year's was 26.2, and we've just managed to get above that. But 22-23 was quite low, below 20 million tons as well. And we saw a very strong number in the year 2021-22. So for this year as well, the government target was at around 37 million tons. So we are much lower than that, but we've been able to surpass what we saw in the previous year. The reason that the government is getting lower wheat from the market is that the wheat prices are higher. The private trade understands that there is lesser wheat around. Farmers farmers are holding and the private trade also has been buying wheat at higher prices. Is the reason the government has come out with mandatory disclosures on how much wheat is everybody holding. There also are stock limits now that you can't hold more wheat than what is allowed by the government at this point in time. Also, when you look at the current crop area, there is a big difference in sense of numbers from what the government believes the wheat crop to be and what the private trade is looking at as well. So versus the 112 million tons, what government believes is the wheat crop, the private trade isn't willing to go beyond 104, 106 million tons. So that tells you that various policies that we've seen and restrictions and curbs coming for wheat are not going to go out in a jiffy. The trade does believe that these kind of restrictions would continue in wheat going forward as well. Government is doing that to ensure that there is availability, affordability as well, and you could continue to see these restrictions for some time to come.
Thank you very much for that. Get into a break. On the other side, we'll put the spotlight on some buzzing stocks. Stay tuned.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP.
Welcome back. Well, let's focus on a couple of important market developments. Now, research firm Hindenburg recently received a show cause notice from market regulator SEBI over alleged violations in that big short bet that Hindenburg had placed after its report on the Adani Group stocks. We have Sudarshan here with the details. Okay. I think we'll have Sudarshan joining in just a bit. I mean, just to recap, obviously, this was way back, over a year ago, when this short bet was placed, the report came out, and then, of course, the entire group of stocks, the Adani group of stocks, went through a whole amount of market capitalization. So the issue is now the regulator seems to be asking some questions to Hindenburg as well on the nature of these bets, how they were placed, through what vehicle, and whether all of it was above board in accordance with the Indian securities laws or not. So we'll just get Sudarshan in on this, and he'll tell us more about where this matter stands. But in the meantime, IT has been the big headline for the last couple of days with a lot of high expectations from this quarter. Rima, is that right?
Well, I think no muted expectation is a better way to put it. But let me quickly list out what brokerages have to say this morning. So Nomura has turned bullish on the IT sector. They say that Q1 will mark the bottom of sluggish growth. It's not that we're expecting a strong recovery in discretionary demand. That will take a few quarters. But discretionary demand is unlikely to worsen. Also, they're saying that once US starts cutting interest rates, there is a potential thaw in decision-making by US corporates post the election. Demand could pick up. Gen AI adoption is likely to gain steam in the next, 1.5 year. And therefore, they believe large cap growth will accelerate in FY26. So not so much this year, but FY26 growth could be at 7.7%. They turn bullish in the sector. They upgrade Wipro, Infosys, HCL Tech and TCS. Their top picks in the sector are Infi, Wipro and Tech Mahindra in the large cap space where they've got a buy call. And in the mid cap space, they like Coforge and Birla Soft. Nuvama says that even post the recent volatility, the fall that we've seen, then the pickup in the last 1 month, they continue to remain positive. They believe that FY25 estimates have already been cut quite a bit in the last 2 quarters, and from here on, do not expect EPS downgrades. They're also expecting FY26 growth to be much better than FY25. They believe high-tech, BFSI, the laggard sectors will start recovering. Retail will also pick up. Manufacturing has always been strong. Deal flows have always been very strong, and that helps them maintain that bullish view on the stock. They like LTI, Mindtree, Infi, Coforge, Persistent, TCS, HCL Tech, and First Source. But not everyone is bullish. So Jefferies says that as of now, at least, the demand commentary suggests that there is pressure on IT budgets and there is a limited pickup in demand. FY25 guidance is unlikely to change, and therefore they believe there is a possibility of EPS downgrades. Valuation is expensive. Jefferies says the sector is trading at 28 times PE, which is at a 20% premium to the 5-year average. It's also at a much higher premium to the Nifty, very rich according to Jefferies, which is why they have a selective call. Infi is their only top pick. But I think it's that yesterday's CLSA turning bullish on Wipro, which has been a laggard. There was a double upgrade by CLSA on Wipro, followed it up with Nomura turning positive on the sector. I think that's, the bullish argument is overtaking some of the bears on the street who still think that maybe the stock run-up has been a bit excessive.
As always, all ears for that management commentary. Any hint, any drop of a word saying, optimism,
pick up.
Returning or discretionary spends are picking up, that's just going to light the street on fire. And I think the stocks have already moved up in anticipation of that. But staying with more news, now Patanjali Foods, as we were discussing, of course, it was higher in the morning. Now it's kind of cooled off a little bit. The news is that the company is all set to acquire the entire non-food business from Patanjali Ayurved for 1,100 crore rupees. The company's CEO Sanjeev Asthana said that the company is targeting 12 to 15% growth of the FMCG segment across portfolios in the upcoming year. Take a look.
We're reasonably confident that this growth rate, under Patanjali Ayurved, they did up 6.7%, we'll try and exceed that by a large margin. We've targeted to keep a range of 12 to 15% growth at the minimum, and that is across the category, which includes all the other 4 food businesses categories that we have, and including this one. So I believe that 15% growth should be reasonably possible because, the strength that the company has, we should be able to accomplish that across the portfolio. The non-food alone, our belief is that the opportunity is much larger. We have taken several steps, including getting new brand ambassadors for our toothpaste and care sector. And we believe that the growth momentum is there, the demand is picking up, and we should be able to exceed even 15% for the non-food side of the business. Currently, what we see about 18% EBITDA in the business, we'd like to certainly this to exceed by 200 basis points over next year and a half.
Okay, well, that was Patanjali Foods. And now to move on to some other stories, Info Edge has released its Jobs Peak Index for June. We have Sudarshan joining in with the details on this one. Sudarshan.
So in the beginning of every month, Info Edge comes out with its Naukri Jobs Peak Index, which indicates hiring trends. And the recent disclosure is for the month of June 2024, which indicates a sharp reversal in hiring trends after the trends had seen a growth in the month of May. The Jobs Peak Index for June is at 2,582 and is down 8% for both month-on-month and year-on-year. And this comes after the 6% growth that it had seen last month. And the index has now slipped to lowest level in last 5 months. Talking about sectors, IT, which forms major chunk of Info Edge's billing, has remained weak, and hiring for IT and software has slipped 5% year-on-year after it saw a minor growth last month. And among sectors that saw healthy growth were insurance, auto, banks and real estate. And on the back of this, the stock is under pressure and has fallen up to 4% intraday.
Okay, thank you very much for that. Sudarshan, we'll come back to you for that Hindenburg Kotak story. Before now, DCX system has caught our attention. The stock has rallied more than 10%. There has been a big order win from L&T. Upasana is joining in with the details now. Upasana, it's a 12% gain and it's holding strong since morning.
Thanks so much for that. Well, we can clearly see the stock soaring high in trade today on the back of significant order win. The company has received orders worth 1,250 crores from L&T, and the order is mainly for manufacturing and supplying of electronic modules, and the execution time frame is about 3 years is what the company has indicated. Last month, company has also received orders worth 32 crores from various domestic and overseas customers, and this order is mainly for the supply of cable and wire harness assemblies. Order book as of 31st March 2024 is around 801 crores is what the company has indicated, and FY24 revenue stood at 1,424 crores, which is the highest turnover in the history of the company, with an uptick of almost 14% on a Y-on-Y basis. Now, let us know about the company. DCX System is an Indian defense manufacturing player offering full service and manufacturing of electronic subsystems and cable and wire harness. The company aims to become technology-driven product company with a focus on transfer of technology, especially from Israel and US. Hence, so all in all, the stock remains in focus on the back of the significant order win.
Thank you very much for that. Get into a break. On the other side, we'll invite Mitesh Thakkar to take stock of the market technical. Stay tuned.
Low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 20 years.
Welcome back. You are with us on Trading Hour. We're going back to that Hindenburg story with the SEBI sending the research entity a show cause notice. Sudarshan is with us. Sudarshan, I'm going to try this again. Third time lucky. Now let's come to the Hindenburg story. So what is exactly going on here?
So Hindenburg today early morning has come out with a disclosure saying it has received a show cause notice from Indian market regulators SEBI in the Adani Group case. Remember, in January 2023, this US-based firm had come out with a report on Adani Group alleging stock manipulation by Gautam Adani-led group companies. And talking about the show cause notice that Hindenburg says it received on June 27, 3 major topics that can be highlighted are: Hindenburg says SEBI notice outlines suspected violations of Indian regulations. The notice mentions its relationship with an investor that expressed short position on Adani, and the report, Hindenburg's report, contained certain misrepresentations and inaccurate statements. On the part of jurisdiction, Hindenburg says, and I quote, much of the notice seemed designed to imply that our legal and disclosed investment stance was something secret or to advance legal arguments claiming jurisdiction over us. Note that we are a US-based research firm with 0 Indian entities, employees, consultants or operations. Some of these arguments seemed circular. For example, the regulator claimed that the disclaimers in our report were misleading because we were indirectly participating in the Indian securities market and therefore we are short Adani. On the part of its relationship with an investor that expressed short position on Adani, Hindenburg says Kotak Bank, it has mentioned Kotak Bank created and oversaw the offshore fund structure used by an investor partner to bet against Adani, and after the report it had highlighted in January 2023.
Okay, got it. Sudarshan, thank you very much for getting us up to speed on that important development. Well, with that, it's an eye back on the screen, back to the markets. The Nifty has managed to see a little bit of a uptick from the time we did a last check. So we've got about a 40-point gain on the index once again. Bank Nifty is struggling. It's dragging a little bit. But for the Nifty, that's the 12-month beautiful looking chart. Today's chart is coming up. So basically, the dip is getting bought. That's the short point. We've got Mitesh Thakkar joining in for a quick check and some more trading ideas. Mitesh, hi. Good to come back and talk to you again. So what do you make of things? It's very clear this is still very much a buy on dips market. What would the trades be now?
So we're not exactly the index. My worry is the Bank Nifty. Between the two indices, I think it is the Bank Nifty which could get weaker if we see the day's low being taken out. So avoid the index for the time being. It's looking tentative after a good rally, and some early signs of profit booking in Bank Nifty are emerging. Having said that, on the stock side, I have one buy and one sell. Pidilite is a sell with a stop at 31.30 and look for target of around 3,000. While on the buying side is Hindalco. Nice up move after yesterday's slightly tentative candle, so this should see follow through on a higher side, and I would recommend buying here with a stop at 690 for targets of 725.
Thank you very much for that. Let's get to the other big story. Market regulator SEBI, in a new circular on transaction charges, has directed market infrastructure institutions, basically like brokers, to charge all its members uniformly and not based on volumes. What does all this mean, and why is Angel One reacting so adversely to this development? The stock is down close to about 5%. Vamakshi joins in with the details. Vamakshi.
Well, absolutely. SEBI has issued a circular and has directed MIIs, that stands for Market Infrastructure Institutions, to discontinue the practice of levying slab-wise fee structures. Now, MIIs essentially include stock exchanges, clearing corporations, as well as depositories. Now, as SEBI has advocated that charges that are levied should be uniform and must not be based on volumes, and this circular will largely be effective from the 1st of October 2024. Now, let's understand what happens under the current slab-wise fee structure. For example, there's a broker with a monthly premium turnover of almost 2,000 crores or over 2,000 crores rather. The applicable exchange transaction charges should be rupees 29.5 per lakh of the premium turnover, which is charged on a monthly basis. But the brokers mostly charge their clients 49.5 rupees per lakh, which is charged to them on a daily basis. Thus, roughly, brokers earn nearly 20 rupees per lakh in the process when the premium turnover crosses 2,000 crores for the month. For discount brokers, this revenue stream accounts for nearly 15 to 30% of the revenue, is what some sources to Money Control said. And for deep discount brokers, this amount is much more significant at almost 50 to 75% of their top line. The impact of this new regulation, of this new circular rather, is that there could be a big hit on the brokerages who earn from such rebates received from exchanges, and these rebates are generally given for generating more volumes. As far as Angel One is concerned, Investec believes that the company earned nearly 400 to 450 odd crores from transaction and depository charges in FY24, which represents nearly 25 to 30% of the company's FY24 PBT. The potential mitigation strategy which Investec believes Angel One could actually use is that it could charge maybe 20 rupees per order as brokerage, and this could probably offset the impact that could come through from this new circular. But apart from this, it is important to watch out for certain factors. We will be keeping an eye out on the cost levers that the companies could have in order to offset this hit. Structural increase in trading activity, if the transaction charges reduce, could also be a factor that we will be watching out for. But as of now, on the back of this new circular, Angel One is reeling under pressure today.
Thank you, Vamakshi, for that. SEBI does perhaps believe that the entire system of giving incentives to the brokerages who are able to generate a higher turnover, thereby perhaps, pushing more towards F&O, the system is resulting in that increased volatility that we've seen, the increased trading in F&O, and SEBI is looking to clamp down on it. We had a chat with Rajesh Baheti, MD of Cross Seas Capital Services, on the back of this development. Listen into what he had to say.
Currently, the exchanges are following a graded transaction cost structure where they start with a headline number, and as you pile on more volumes, the next set of volumes will come at a lower cost, or you will be rebated certain amounts from the headline number. So if you're aggregating a lot of volume under your banner, you would end up with a weighted average cost of trading which is much lower than the headline number. So for the discount broking houses, this number was very, very significant because they were clearly aggregating a huge amount of volume. I mean, 2 or 3 brokers together were concentrating about 35% of all retail volumes in India. The total cost of trade for everybody will come down, but for those who are doing a very high volume and concentrating volumes either as a client-based trade, which is the discount broking houses, or certain algorithmic trading brokerages, for example, Share India and some other brokerages that were doing very high levels of proprietary volume, the weighted average cost for those brokers will go up.
Yeah, and into a break. On the other side, we'll discuss market fundamentals. Neeraj Chadawar of Axis Securities joins in on the other side. Stay tuned.
The retail, which is the driving force for the market right now.
Clearly, we have arrived.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful experts.
Welcome back. As promised, let's invite Neeraj Chadawar, Head of Fundamental and Quantitative Research at Axis Securities. Neeraj, thank you very much for joining us on the show. This is Reema here. Wanted to get your thoughts in on IT. Where do you stand in the debate? There is a Nomura which has turned incrementally bullish just today, even after the 15% run-up that we had in the last 1 month. But then the valuations are higher than average multiple, and it's not that the demand is picked up today. There is anticipation of a demand pickup in the second half of the year. So to some, it looks to be a bit excessive, the run-up and the valuations. Where does Axis Securities stand in IT, and what's the best way to play it?
Yeah, thank you for having me on show. So you rightly pointed out that in our yesterday's topics report also, we have added one IT stock, that is HCL Tech, in our topics recommendation. Now we believe that at current juncture, most of the positives are priced in the market, and market is likely to adjust to the fundamental going forward. And Q1 FY25 earning will be the best time to in which market will adjust to the fundamental. And at this juncture, we believe that there is a more margin of safety in the large cap space as compared to available in the broader space. So risk reward is in the favor of large cap, and based on that, quality which is available at a reasonable price and growth which is available at a reasonable price is a better theme to going forward. And we believe that in the near term, market positioning is likely to shift towards the domestic or towards the defensive name from the domestic cyclical. So that's why private banks, IT, pharma, telecom and consumption will provide more margin of safety at this current juncture. So that's why as a part of style rotation and sector rotation, IT is the best bet at this current juncture. We believe that most of the negatives are priced in Q1 FY25. We believe that the IT could made a bottom. Going forward, the downgrade risk is very, very limited in the IT stock. And we believe that with pickup in the second half of FY25, more ramp up in the deal wins, there are green shoot available in the second half for the IT sector. So this is the best time as compared to on a relative basis. IT is the best bet at current juncture.
Okay, Neeraj, got it. Yeah, I'm seeing your top recommendations, and I think HCL Tech is one stock that you particularly like. But just to complete that point on IT, before we talk on the sectors, now, do you think the best way to ride this improvement is through large cap names like an HCL Technologies, which is on your list? Or would you continue to look for some of the niche mid-cap IT plays as well? So how do you sort of ride this IT momentum?
So, as you rightly pointed out that at this moment we are very selective in IT space. We still believe that we still need to see how the commentaries pan out in Q1 FY25 earnings season, which likely starts from next week onward. We believe that at this juncture, being selective in the market from the IT sector, but we believe that in FY25, IT could emerge as a dark horse sector because if we see the US economy on a quarter-on-quarter basis, it is started showing improvement on a sequential basis. So we started 2024 with some downgrade expectation in IT. Most of the downgrades are already in price. Going forward, we could see some amount of positive upgrades in IT sector, and with positive upgrade, we will see the stock prices will follow those upgrades. So this is a better time to shift some amount of money in the IT sector, which we recommend. And at this juncture, we like HCL Tech because valuations are very attractive in this place.
Fair. Okay, now Neeraj, let's come to your overall market call, and you're fairly constructive on the market as well. You're expecting, I think, a 16% run rate for earnings all the way up to FY26. And you seem to like financials. So let's come to the overall portfolio construct, because the thing is to buy a fresh now at all-time highs in the market, it's not even giving you too many meaningful dips, right? So to construct a new portfolio right now is a real challenge. So help our viewers do that. If someone has to put fresh money to work, you singled out IT as a sector, but where would you deploy the bulk of that money then?
Yes. So we are very constructive on the Nifty earning per se. We are believing that in our base case assumption, we are expecting 16% earning growth for Nifty 50 starting from FY23 to FY26. So in our base case assumption, we believe that we are having a target of 24,800 for March 25. That is a base case target. In bull case target, we are assuming that Nifty could touch 27,000 mark by March 25. Our bull case assumption is based on the Goldilocks scenario, in which the overall agenda of soft landing in the US market, rate cut expectation starting from September onwards in the US economy. Along with that, the 16% CAGR could convert it to 17 to 18% CAGR for the Nifty 50 earning growth. We believe that the chances of bear case at current juncture is very limited. Now, in last 1 month, the market has evolved and most of the things are priced in. From last 3 to 6 months, market was most of the narrative-driven market. We believe that most of the narrative-driven volatility is already factored in. Now the India VIX is trading around 13 to 14 level, which is far below the long-term average. So it is evident that market is due for style and sector rotation at this juncture. Any fresh and incremental money could go into in the defensive play or the quality play where the reasonable valuations are there. So right now we are betting high on private banks. We believe that private banks were the underperforming as compared to the PSU banks, and at this juncture, private banks provide, especially the large cap private banks, provide more margin of safety, and all levers are in place for the double-digit credit growth because they already started with the deposit mobilization. So recently we have added HDFC Bank in our top picks recommendation. We continue to recommend ICICI Bank in the large cap space and SBI in the large cap space, and in the mid cap space we continue to like Federal Bank. The second sector is the telecom sector. We believe that telecom sector is a multi-year theme. All the negatives are already in place. Now going forward, we will see the recovery in the telecom sector. Now it will be a 2+1 market, and the weaker player is also able to raise the money, and the ARPU cycle is just started after the 2 year of deep pain. We believe that going forward, and at this juncture, price hike can be easily absorbed by the market. And we believe that going forward, it will be a 2 to 3 year theme based on the multiple operating metrics recovery in upcoming year. The next sector is the pharma sector. It is again a defensive sector. Given the current market structure, we believe that pharma is in right place. The pricing war in the US market is now behind us. Each and every company is targeting on the niche molecule, and we believe that at the current juncture, they provide more margin of safety in terms of valuation as compared to the overall market. Now, consumption is a very interesting theme, and we are at a very interesting juncture for the consumption theme. Now, this year, the monsoon is expected to be a very normal monsoon. We believe that this will likely to translate into a double-digit volume growth in the second half of FY25. On top of that, there is a leeway available for the government in terms of RBI dividend that could likely to be translated into some amount of rural focus scheme, which likely to announce in upcoming budget. We believe that all these levers are likely to translate into a good growth in the second half of FY25. So these are the themes one can place the fresh money. And on top of that, under consumption, we are very confident on the QSR as a recovery. The QSR theme has already made a bottom, and we believe that going forward, we will see the sequential recovery in the QSR theme.
Can you zero in a bit more about this QSR recovery? Because the anecdotal evidence doesn't seem to suggest that there is a recovery underway in QSR. So many people who've done channel checks still seem to suggest that demand is fairly subdued. So what gives you that confidence? And when are we likely to see that recovery, and how do valuations pan out right now?
So we believe that the QSR is a very good relative trade in the overall consumption space. We are believing that the consumption is likely to pick up going forward. In the second half, we already seeing the green shoot in the urban consumption. Now, based on the rural growth, along with the government top up on some of the rural scheme, along with the normal monsoon, MSP lever, all likely to translate into good consumption growth for the second half. And at this juncture, valuation for entire QSR space is very, very attractive, and the stock has really underperformed as compared to the market. So that provides more margin of safety at the current juncture going forward. So that's why we believe that this is the best time to deploy money in the QSR space, and we will get the recovery in the second half of FY25.
Okay. All right, Neeraj, we will leave it on that note. Thank you very much for joining in. Good having this conversation with you today. We will take a quick break on that note. Come back on the other side with a lot more on the market.
On the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube.
Well, Ola Electric is in the fast lane after receiving the market regulator's go-ahead recently. Ola is racing towards its IPO. It is going to be the first Indian electric vehicle company to go public on the Indian bourses. But before that long-awaited IPO, we're here at Ola's future factory in Krishnagiri in Tamil Nadu to tell you about how Ola is building its electric empire from the ground up. We're here at this colossal factory, which is where scooters like these are coming to life. Set up in 2021, Ola claims its future factory in Krishnagiri is one of the most advanced two-wheeler factories in the world, boasting of automation and cutting-edge processes. The factory is automated with modular and flexible assembly lines and an in-house paint shop. When at full capacity, the 10 production lines at the plant are expected to grind out one scooter every 3 seconds. However, at the moment, the future factory has one manufacturing line and is producing anywhere between 2,300 to 2,700 scooters a day. This Ola Future Factory where we're at is spread on a 600,000 square feet area and has an annual install capacity of 1 million units. It was built from ground up in less than 8 months in the middle of the pandemic, and there's a few things that really stand out as you enter this factory. The first, of course, as the name signifies, the future part in it, a lot of the tasks here on the shop floor are automated, with robots also deployed to carry out many tasks. The second and the most interesting thing I thought is that this plant is largely run by a women-only workforce, so kudos to Ola for that.
Welcome back. So it is a little volatile on the market because that small uptick on the Nifty that's again getting sold into, the index has gone very flat. The trouble today really seems to be on the banking side. IT is pulling the index up from one end, but then banks are really putting a lot of pressure on the downside. In fact, check this out. I mean, Kotak Mahindra Bank, the cut is now almost 3%. It's a singular decline on KMB. Pull up the intraday on Kotak Mahindra Bank. Stock is down now 3%. That's something you can't ignore. And then you have the others, the likes of ICICI Bank, Axis, SBI, pretty much across the board today. So banks are not firing up. The other losers include the likes of Tata Motors. Disappointing sales numbers for the month gone by from Tata Motors. Not too good on the passenger vehicle side. CVs have been, missing expectations as well. So Tata Motors is also reacting to that negative input. So I guess overall, barring IT and L&T, by the way, look at the move on L&T. While I'm talking about the movers on the downside, must also note the very sharp uptick on L&T. L&T is now up 2.5%, and that makes it the top winner on the index. So I guess it's fairly evenly balanced between the bulls and the bears on the Nifty right now, Rima.
Oh, absolutely. I think on L&T, there is some, I think on one of the news agencies, there is news about a large order win. And that came about 30 minutes back, which is what's got the stock excited. But it's not been published yet on the exchanges, and we've not had confirmation. But L&T is, of course, a stock which is moving up quite smartly. But as we wrap up on the show, we'll take a look at something which is very important. SMEs are pivotal to the nation's economic growth. What are the factors driving their journey to success? Now, CNBC-TV18 has dedicatedly opened up to empowering and celebrating SMEs, highlighting their achievements and contribution to the economy with HSBC presents CNBC-TV18 SME Champion Awards. And today, we put the spotlight on the inspiring journey of Freyr Energy Services, a company that not only contributes to economic growth, but also champions sustainability. Let's discover how their innovative approach and strategic partnerships is shaping a brighter and more sustainable future.
Hi, I'm Saurabh Marda. I'm from Freyr Energy. I'm one of the co-founders of the company and the managing director. Radhika and I started the company in 2014. The idea behind starting this company was, we wanted to provide rooftop solar solutions to homes and MSMEs. Basically, we wanted to give homeowners and MSMEs an option to choose their own supply of power, which was clean, which was less expensive. Our banking partner in this journey has been HSBC. They have supported us in multiple ways, right? One of the ways where they were really different from a lot of other financial institutions that we've worked with in the past is the speed at which they moved. The second piece has been the capital that they've provided, obviously has been very helpful. The rate of interest has been phenomenal. It played a big role in in us moving towards profitability. For us, basically the phase one or of focus is India. The market opportunity is significant. Basically an untapped market opportunity of upwards of $40 billion that's available right now, growing at 10 to 15% per annum. The other element over here will be what other innovation can we bring to the table that helps us very clearly differentiate ourselves from the competition. So there are a few things that we're working on. A couple of our investors are two of the world's leading energy companies. So we are able to leverage on their capabilities, and we are developing solutions that are India specific, and we expect to roll them out in the next few months. That's going to be very interesting.
For a manufacturing facility, it is surprisingly quiet. The female workers on the shop floor total 944 on-roll employees, representing 100% of the shop floor workforce and more than 25% of the total on-roll employee headcount. After the future factory, Ola also plans to have an all-woman workforce in its cell manufacturing facility, the Giga Factory, as well.
The reason we set up the women factory was that we want to set up an example for the industry that in India, women can actually participate in the workforce.
Ola began the production of its second-generation EV scooters in September last year, and its founder says Ola will start the production of motorbikes in the factory later this year.
We are focused on the two-wheeler, Ritu. Scooters already has given us such a strong growth over the last 2 years, and last year we expanded our portfolio of scooters from the S1 Pro to multiple S1 platform scooters. Now we are working on the motorbikes. Like you said, we showed you motorbikes 15th August last year. Yeah. Those were early concepts, and we've been working on the R&D of those things. Okay. So through next year, you will see us launch some motorbikes, and I do hope that the consumers love them.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness, or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there, and they will act on the gums and, of course, on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then...
Stocks cautious, see trading in, they're cautious in trade after the recent run-up. Realty and IT are the prominent gainers, while financials and consumer durables are the big drags. It's the mid-caps which underperform.
SEBI comes down heavily on volume-based slab-wise chart structure of market infra institutions like stock exchanges, claiming lack of transparency and fairness. It calls for new and lower uniform charges based on existing realizations from October 1st.
Patanjali Food buys the home and personal care portfolio of Group Arm Patanjali Ayurveda in a 5-tranche deal worth 1,100 crore rupees. The management tells CNBC-TV18 it is confident of growing the portfolio faster and more profitably.
Hindenburg reacts to a SEBI show-cause notice of the Adani issue that points to violations of Indian regulations, its connection with a short seller and key misrepresentations. The US-based research firm counters that it had disclosed short selling by a partner and that SEBI has no jurisdiction over it.
Hello and welcome. You're watching us here on Halftime Report, and as you can see at the top of your screen, there is consolidation with a mild positive bias on the frontline indices. The Nifty Bank is the big drag with a cut of almost 0.7%. The mid-cap, while at an index level, it is down by about a third. The advanced decline ratio will have you believe that more stocks are advancing than the number of stocks that are declining. I'm Manglam Malu, with me, Sonal. Hi, Sonal.
Hey, Manglam, and it's the IT pack which is making strides yet again, right? It was earlier banks, then it was Reliance, now it's IT. And banks today are not performing so well. That's an underperformer today, down 0.6% on the bank Nifty. And big names which are not doing well so far. Nifty IT, as we pointed out, at the day's high. And we are talking about these stocks just ahead of the earnings as well. So we'll start talking about the management commentary, the guidance in just weeks from now. The Nifty, the mid-cap IT pack is also doing well. We have stocks like FirstSource, which are up 4%. There's Coforge, which is surging. There's Emphasis, Mastech. All of them are doing well. So the Nifty, while mid-caps are not doing well, it's a mid-cap IT space which continues to do well. And there you go, 3.5% higher there. So a lot happening, a lot of moving parts. And it's a very stock-specific market, so to say. And that continues to be the case. And sector rotation as well. That continues.
Absolutely. You know, and you spoke about the banks. It's a very interesting point which is currently underway in the Nifty Bank itself. If the director could quickly pull up, you know, both the Nifty Bank as well as the HDFC Bank in today's charts side by side, you would realize that the Nifty Bank is closer towards the lower end of today's trading range. On the other hand, the HDFC Bank chart comes up for you, and that's the one which is actually the biggest weight on the Nifty Bank itself, and that's moved to the high point of trade. So that's an interesting divergence which is currently underway. So every time we see a bit of a decline in HDFC Bank, the Nifty Bank moves towards the lower end of today's trading session. So had it not been for HDFC Bank's outperforming, you know, we'd see a bigger cut on the Nifty Bank itself. That's an interesting, you know, move that we're seeing in the markets currently.
And, you know, this is the reason why we've seen that wee bit of recovery on the Nifty Bank as well from the lower levels. So it is not that the day is low anymore. So HDFC Bank, that's coming to the rescue for Nifty Bank right now. But as we pointed out, it's a very stock-specific market today. So let's get started with that. This is our Inside Edge segment. Patanjali Foods, that's the stock on our radar, acquired the entire non-food business from Patanjali Ayurveda for 1,100 crore rupees. Manglam, tell us more details about this deal and what did the management say?
Well, you know, a couple of things. One, the deal was underway that everyone knew because the company had already told the exchanges and told us here on CNBC-TV18 as well that over a month we will go ahead and do that. Now that the deal has happened, the street was awaiting more details of that deal. The stock is under pressure right now, but remember over the last few trading sessions, we've seen a big move in the stock already. So maybe some bit of profit booking is what we're seeing post the news. What is basically the deal? Patanjali Foods, which is currently the listed entity, has gone ahead and bought the home and personal care business of Patanjali Ayurveda. Patanjali Ayurveda has revenues of almost 6,000 odd crores, of which the home and personal care business, which is basically the dental care, skin care, hair care, home care businesses, have a revenue of close to around 2,800 odd crores. So this is what goes into Patanjali Foods, which is the listed entity. How much do they pay for that? 1,100 crores is what they pay over 5 tranches. And additionally, they also pay 3% of sales with a minimum guarantee of 83 crore rupees per year for the next 20 years as licensing fees. For which, what is it that they get? Close to around 2,800 crore revenue, as I pointed out, and this compares with their own revenue of close to 32,000 crores. But it's the EBITDA which makes it, you know, a lot more attractive because they do EBITDA of close to 500 crores and margins of 18%, as against the food and oil business, which does margins of just around 4% and an EBITDA of around 1300 crores. So if you adjust for the 3% royalty that they are giving, the deal adds 8.5% to sales and 32% to the EBITDA itself. The 3-year CAGR of this business is close to around 6.5%. And here's where it gets a little more interesting, because the management joined us on CNBC-TV18 this morning, and they said that dental care, which is Dant Kanti, is around 1345 crores of sales with 24% EBITDA margins, and that is the mainstay of the company, where they do enjoy strong market positioning as well. And the way they've grown both the foods business and the biscuits business from Patanjali after acquiring them over the last 2 years is something that they aim to replicate in this business as well. They were growing at 6.5% CAGR. They believe this business can grow upwards of 15%, just the way they grew their biscuits and food business over 50 to 60%. And not only are they likely to grow the revenue faster than its earlier growth, they will also improve margins by nearly 200 basis points over the next 12 to 18 months. And that would imply that, the license fee that they're paying, about 3%, will come down to just about 1% because of the 200 basis points synergies that they will be attracting on this business itself. The stock currently lower, but has seen a big move. In fact, yesterday as well was up around 7% So let's listen into what the management, the CEO of the company, Sanjeev Asthana, had to say about this.
We're reasonably confident that this growth rate, under Patanjali Ayurved they did up 6.7%, will certainly, we'll try and exceed that by a large margin. We've targeted to keep a range of 12 to 15% growth at the minimum, and that is across the category, which includes all the other 4 food businesses categories that we have, and including this one. So I believe that 15% growth should be reasonably possible, because the strength that the company has, we should be able to accomplish that across the portfolio. The non-food alone, our belief is that the opportunity is much larger. We have taken several steps, including getting new brand ambassadors for our toothpaste and care sector. And we believe that the growth momentum is there, the demand is picking up, and we should be able to exceed even 15% for the non-food side of the business. Currently, what we see about 18% EBITDA in the business, we'd like to certainly this to exceed by 200 basis points over next year and a half.
Okay, that's about Patanjali Foods seeing some profit taking in trade today. Bajaj Auto, that's the stock on our radar, reported a 5% rise in total sales with 3.58 lakh units for the month of June. Data was better than muted expectations, but two-wheeler sales saw pressure in export markets. Earlier, we spoke to Rakesh Sharma, the ED of Bajaj Auto. Listen into excerpts from that conversation.
6 to 8% is a very good growth, right? And the key factor which is actually driving this growth is, at least in our type of customers, the economic recovery is finally reaching them. And there is optimism. We can also sense that optimism from the way the terms in retail financing are coming out. People are willing to take longer term loans, and which reflects a certainty of future income flows. I think 6 to 8% growth is a good growth too. It's a very large industry, and if it grows at 8%, it has got very good consequential impacts. Point is there that for this customer who's got 30 to 40,000 salary per month, and where a motorcycle or a two-wheeler is an absolute necessity, over there to have a 28% tax is, very harsh on the customer. Because don't forget one thing, the moment a person acquires a motorcycle, that person's productivity really increases, whether it is access to the farm or access to a job in a nearby town, a whole new world opens up. And therefore, from a social point of view, and even from an industry, triggering off an industry sort of growth point of view, there is a strong case for reducing the GST. Large market of Nigeria that is still in the negative zone. But having said that, there is recovery even in Nigeria because of inflation caused by devaluation. The demand is muted, though recovering, and all depends on now the stability of the currency and people getting used to the new normal and things coming back. So it's going to be a gradual progression.
Right, that's about Bajaj Auto, and we have updates flowing in thick and fast. This one comes in from Adani Ports. The Q1 cargo volumes are up 7.5%, and we have additional details coming in from other parts of that business as well. So the stock mildly in the green right now, is off highs but still holding on. We are seeing some bit of recovery in a couple of these other heavyweights as well. So the IT index is actually at the high point of trade, and alongside that, we are seeing a lot of these Mumbai-based real estate players do extremely well too. So keep an eye out on all of that. Take a short break, come back, focus on what's taking place in these discount brokers. SEBI's new circular charges or circular on transaction charges has a bunch of them declining in today's trading session. Come back on the other side, we'll put more focus on that.
Has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Let's talk about the big news that we've been following since last evening. Market regulator SEBI, in a new circular on transaction charges, has directed market infrastructure institutions to charge all its members uniformly and not based on volumes. Vamakshi is here with the analysis, what it means and what brokerages are making of this move. Vamakshi.
Well, absolutely. Like you rightly pointed out, SEBI has issued a circular and has directed MIIs, that is market infrastructure institutions, to discontinue the practice of levying slab-wise fee structures. MIIs, just for your information, include stock exchanges, clearing corporations and depositories. Now, SEBI has advocated that the charges levied should be uniform and must not be based on volumes, and this new circular could come into effect from 1st of October 2024. Now, just to give our viewers some context, the current slab-wise fee structure. For example, if there is a broker with a monthly premium turnover of over 2,000 crores. Now, the applicable NSE transaction charges should be rupees 29.5 per lakh of premium turnover, which will be charged on a monthly basis. Brokers, however, mostly charge their clients 49.5 rupees per lakh, and this is charged them on a daily basis. So roughly in this process, brokers earn 20 rupees per lakh when the premium turnover crosses nearly 2,000 crores for the month. For some discount brokers, this income amounts for nearly 15 to 30% of their revenue, and as far as some deep discount brokers are concerned, this could actually go up to 50 to 75% of their revenue. So definitely it's a big impact that could come in on the top line as far as brokers are concerned. But specifically for Angel One, Investec expects that the company could have earned 400 to 450 crores in revenue from such transaction charges, and this in turn could represent around 25 to 30% of its FY24 PBT. According to them, potential mitigation strategies for Angel One could include that it could maybe charge 20 rupees per order as brokerage and therefore reduce the impact that could come in from the circular. But that said, it is important to watch out for how the companies actually react to this, what cost levers are there within the companies in order to offset this hit. Additionally, it will also be interesting to see the structural increase in trading activity if the transaction charges are reduced for the customers. So overall, the top line could be impacted is what we understand, and as a result, Angel One is under pressure today.
Take that point. Thank you so much for explaining this, Vamakshi. With that, what we'll do is we'll actually listen in to what Rajesh Bhaiti, who's the MD at Cross Seas Capital, who joined us this morning to say on this news. Let's hear him out too.
Currently, the exchanges are following a graded transaction cost structure where they start with a headline number, and as you pile on more volumes, your the next set of volumes will come at a lower cost, or you will be rebated certain amounts from the headline number. So if you're aggregating a lot of volume under your banner, you would end up with a weighted average cost of trading which is much lower than the headline number. So for the discount broking houses, this number was very, very significant because they were clearly aggregating a huge amount of volume. I mean, 2 or 3 brokers together were concentrating about 35% of all retail volumes in India. The total cost of trade for everybody will come down, but for those who are doing a very high volume and concentrating volumes either as a client-based trade, which is the discount broking houses, or certain algorithmic trading brokerages, for example, Share India and some other brokerages that were doing very high levels of proprietary volume, the weighted average cost for those brokers will go up.
Okay, all right. That is what it means for brokers and participants in the markets as well. We'll keep analyzing the story for you. But moving on, Hindenburg receives a show cause notice from SEBI over alleged violations and placing bets on the Adani issue. Sudarshan is joining us with all the details. Sudarshan.
So Hindenburg today early morning has come out with a disclosure saying it has received a show cause notice from Indian market regulator SEBI in Adani Group case. Remember, in January 2023, this US-based firm had come out with a report on Adani Group alleging stock manipulation by Gautam Adani-led group companies. And talking about the show cause notice that Hindenburg says it received on June 27, 3 major points that can be highlighted here are, as per Hindenburg, SEBI notice outlines suspected violations of Indian regulations. It mentions its relationship with an investor that expressed short position in Adani, and its report contained certain misrepresentations and inaccurate statements. On the part of jurisdiction, Hindenburg says, and I quote, much of the notice seemed designed to imply that our legal and disclosed investment stance was something secret or to advance legal arguments claiming jurisdiction over us. Note that we are a US-based research firm with zero Indian entities, employees, consultants or operations, and some of these arguments seem circular. For example, the regulator claimed that the disclaimers in our report was misleading because we were indirectly participating in the Indian securities market and therefore were short Adani. This wasn't a mystery. Virtually everyone on earth knew we were short Adani because we prominently and repeatedly disclosed it, I unquote. And talking about its relationship with an investor that expressed short position in Adani, Hindenburg says, Kotak Bank created and oversaw the offshore fund structure used by its investor partner to bet against Adani after the report that it had highlighted in January 2023.
All right, Sudarshan, thanks a lot for that. So that's some clarification coming in on the Adani Hindenburg saga. Take a short break, come back on the other side. We'll focus on the markets itself. A lot of stocks are actually moving higher. Infosys has moved to the high point of trade. Giving it company is also HCL Tech. So some trading strategies lined up for you on the other side. Stay tuned.
At the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Good afternoon. You're watching us here on Halftime Report. The Nifty is stuck with a gain of almost 10 points. But if you look at, the two indices which are doing a bit of a tug of war, on the one hand, you have, the Nifty Bank, which is down by about 0.8%. And on the other, you have the IT index, which is up 1.6%. So because of this tug of war between two index heavy sectors, IT and the Nifty Bank, on the opposite side, the Nifty is absolutely flat. But the mild green tinge on the Nifty is coming in from some other contributors as well. So if you look at something like an HDFC Bank, which has moved to the high point of trade, doing extremely well. And in the very recent past, in the last hour or so, we've seen a big spike come by on L&T as well. Those are a couple of stocks which are supporting the frontline index. And on a broader market level, we have about 1,300 stocks which are advancing, for about 1,100 stocks which are declining. Now those lines are coming closer to each other. So that's something we'll have to watch out for as we progress towards the second half of trade. As far as the Nifty is concerned, 24,200. It hit a fresh record high in today's trading session, a little over 24,230. 24,200 call writers are still active at around 92 rupees premium, telling you between 24,250 and 24,300 there could be some congestion, but no problems about support. 24,200 put writers also equally active for a premium of 125 rupees, telling you a little below 24,100 there would be strong support. 24,075 thereabouts is what the street is playing for in terms of support. What's most interesting is that it is a Tuesday today, which means it's the Nifty Financials expiry, weekly expiry. And out there, the 23,500 call and put are both equally active for a combined premium of 120 rupees. So on the way up, 23,620 could be a bit of a resistance. And at the lower level, 23,400 thereabout could be a strong support. Where is the Nifty Financial Service? Right in the middle of that range that we're looking at, 24,463 itself. A couple of stocks on our radar. Deepak Nitrite seeing a lot of long positions being added. And the other one, surprisingly, is Mahanagar Gas. one needs to understand what really is happening out here, because over the last 2 trading sessions, it's seen big moves. Today, also from the highs, it's off, but a lot of open interest activity, perhaps on the long side, on Mahanagar Gas and Deepak Nitrite.
You know, there's nothing fundamentally happening with Mahanagar Gas for now, but we'll have to figure out, because there's been a stellar move. Just for perspective, in the city gas distribution space, this is the cheapest stocks, which trades at around 13 times versus 20 to 22 times for IGL and Gujarat Gas. Maybe some valuation catching up, but again, we'll have to watch out for what exactly is happening with this name. That is Mahanagar Gas, up around absolutely flat actually, with some positive bias. But let's get in Sachidanand Uptekar, AVP Technical Equity Trade Bulls, joining us now. Sachidanand, you know, the tug of war that Mangalam spoke about, do you think this is something which would continue and that would lead to Nifty consolidate at these levels for a while?
Good afternoon. I think the trend for the Nifty has been very consistent. It has been trending above its 5-day exponential moving average support for almost 18 consecutive sessions now. I think the low was established at on 4th of June, and post that, election day results, Nifty has been confidently trending above that particular mark. So I think that rising 5-day exponential moving average support is very critical, which is placed somewhere close to around 24,020 right now. So unless we don't see a closing below the same, the momentum can be a little slow, but the trend trajectory still remains on the positive side. Mangalam has already discussed the derivative data, and even I concur to that. That 24,100 looks like a decent support. So any drag towards that particular level would be again a good opportunity to create some long positions. When it comes to Nifty Bank, the major part of the drag for today's session is evident from Nifty Bank itself, and even there, the 5-day exponential moving average support was breached for the first time in the last 18 trading sessions now. The level is placed somewhere close to around 52,350, and if you look at the immediate support, which is placed at around 52,000 as per the options data. So I think there's a good chance that we may see some recovery in the second half, and that's why we are recommending building long positions here close to that 52,100 mark when it comes to Nifty Bank. One can keep a stop loss at 51,960 on a closing basis, and we may see again a rebound towards 52,500 kind of a zone. So I think somewhere Nifty Bank may consolidate within this particular range of 52,000 on the lower side and 52,550 on the higher side.
The divergence between the Nifty Bank and HDFC Bank continues right now. The Nifty Bank actually has now moved to the low point of trade, leading the Nifty into the red as well, Sachi. And now we have the HDFC Bank stock, which continues to move higher and has moved to the high point of trade. So at any point, would you like to go short into this consolidation, a contra short maybe?
Mangalam, I think if you look at HDFC Bank, it is already making life highs and fresh highs. But if you look at ICICI Bank, which has been dragging, but it is very close to that 1200 support. So I would rather wait for the Nifty to close below that 24,000 mark, and then probably shift our stance from buy on declines to sell on rallies. So as of now, I think it's a zone wherein the declines look healthy, and one can still prefer creating long positions.
Stocks, what do you have on your list?
Well, 2 stocks, Mangalam. First of all, Abbott India, which is a very rare observation. If you look at the weekly chart, it is showing a rising 3 formation, which is a continuation pattern. On the daily scale, it has given a fresh breakout from a bullish flag formation, and the daily ADX has started trending about the 25 mark. So this is a good sign wherein a very strong up move is already in progress. So we're expecting this particular momentum to continue towards 28,700 going forward. And that's why we are recommending building long positions here, keeping the stop loss at 27,530 on a closing basis. The other stock which has been consolidating well for the last 5 trading sessions is United Spirits. Now, even here, if you look at the weekly structure, it looks like a bullish pennant formation, but the breakout is placed somewhere close to around 1296 levels. Even if you look at the options data, the 1300 call writers are looking confident. But if you look at the contracting price action and the way its ADX is placed, there could be a possibility that this 1300 mark would be breached soon. And we may see a good strong momentum play, which will lead the prices towards 1360. And that's why we are recommending building long positions here in United Spirits as well. The stop loss for the trade should be placed at around 1262.
Okay, all right. Thank you, Sachitanand, for joining us. So those are some technical trades for you. We'll slip into a break. When we come back, we'll get you more on markets and a lot of stock-specific action on the other side. So stay tuned for that.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's listing.
Welcome back. A lot of stocks in focus today. So let's talk about the new kid on the block. Liquor company Allied Blenders and Distillers listed on the street today with a premium of 14% at 320 rupees per share. Mangnam, tell us more about the company, and it's a decent uptick that we saw. But we've seen better in the last couple of trading sessions.
We've seen better in the last trading sessions. You know, maybe the street is looking at the company from a price to earnings basis and thinking that it may be a little too expensive, etc. But remember, the company will become debt-free immediately as they, raise the funds, and that will cause a big delta in their profitability because about 150 crores of finance cost goes away from the books of the company as well. So a little about, what they do. The largest Indian-owned, Indian-made foreign liquor company, the third largest Indian-made foreign liquor company with pan-India sales and distribution. Brands, people would know this company better from the brands that they sell, which is Officer's Choice Whiskey, Officer's Choice Blue, and the more recently launched Sterling Reserve itself. Whiskey accounts for nearly 97% of their sales, and the capacity utilization for them has been close to around 64% as of 9 months FY24. What the company has told us is that, in FY25 itself, it can actually go ahead and do 3750 crores in terms of revenue with 350 crores of EBITDA. That's possible. Over the next couple of years, they're targeting early teens volume growth and mid-teens value growth. And Prestige and above, which is close to 50% of their sales right now, they target this to be between 70 to 80% going forward. And they do not expect any change on the stance in alcohol in Odisha. The alcohol ban rumors were actually just reports and nothing credibly backed by government sources, as per the company who spoke to us today. And also, they haven't factored in any price increase in Telangana in FY25, maybe one in FY26. They target 45 to 50 million cases of sales from 36 million that they do now, 2 years down the line. And that would imply revenue of close to 5,000 to 5,500 crores as against the 3,750 crores that they are likely to do in FY25 itself. They target 100% captive ENA sourcing, and with that, industry level margins of around mid-teens itself is what is on their cards. For all of this, if you look at the company on an EV to EBITDA basis, because of their lower margins as compared to peers, they're actually trading at a discount as well. So pull up something like a United Spirits that is trading at around 45 times FY25 EV to EBITDA. Radico Khaitan is trading at close to around 35 times, and Allied Blenders is trading at around 26 times itself. So those are a couple of things that we'll keep an eye out on. Trading at a discount to the other listed peers, but all eyes on growth and mid-teen margins.
Okay, yes, that's right. So that's the peer comparison. In fact, earlier today we spoke with Alok Gupta, the managing director at the company. Listen in.
Volume growth, we are looking at early teens, but the value growth in terms of revenue growth, we are looking at mid-teens, and that will lead to a better profile of sales and therefore a better gross margin and EBITDA. From a P&A segment, like I said, the focus is going to be on P&A. Therefore, we see the value share of P&A and premium and luxury to be north of 75%. Gross margins are currently at about 39%. We should see about 200 to 300 basis point increase in the gross margin. We did talk about the fact that we're looking at going captive on ENA. Currently, 30% of the ENA that we consume is our own, 70% is bought. We're looking at 100% captive. That should have impact of another 200 to 300 basis point on the EBITDA. So, I mean, the single point that we're chasing currently is to get to industry parity EBITDA, which is in mid-teens.
Right, that's about ABD, the stock holding up, still trading at a discount to the other players. Let's put spotlight on the IT sector, as a whole host of brokerages have now turned positive on the sector. Rima joins in with more details. Rima, seems like we're turning a corner.
Well, Nomura at least believes that the Indian IT sector is turning around. They've turned incrementally bullish on the sector. They believe Q1 will mark the bottom of sluggish revenue growth. The recovery in discretionary demand may take some time, but according to them, it should not deteriorate or worsen further. So they turn bullish on the sector. They upgrade their ratings for Wipro, Infosys, HCL Tech. They've also upgraded TCS to a neutral from a reduce. Their top picks include Infi, Wipro, Tech Mahindra, and Coforge and Birlasoft in the mid-cap space. Nuvama is also bullish on the Indian IT sector post the recent volatility. They say that FY25 estimates have been cut adequately post the last quarter, leaving little room for further downgrades from here. They're bullish on LTI Mindtree, Infosys, Coforge, Persistent, TCS, HCL Tech, and FirstSource. But not everyone is gung-ho on the Indian IT sector. Jeffrey says the recent management interaction and even Accenture's unchanged demand commentary suggests that there is still pressure on the IT budget, limited pickup in demand. FY25 guidance is unlikely to change, and therefore there is scope for earnings downgrades. They also believe the sector, which is trading at 28 times forward multiple, is rich, and therefore their advice is stay selective. They like Infosys. IFL also titles their report, valuations are rebounding but not demand. They say the sector will witness a muted Q1. They see limited scope to generate absolute returns in the sector, at least till the visibility for FY26 growth improves. On a relative basis, they like Infosys, Persistent. They're staying away from Tech Mahindra and L&T Technology. They've also upgraded Wipro to an add on limited downside. Back to you.
Okay, all right. Thank you so much, Rima. So that puts things into perspective. But for now, IT is seeing a big move on the upside. Let's slip into a short break. When we come back, we'll talk about markets and we'll connect with Sri Kumar Krishnamurthy of ICRA. The paper stocks, they are buzzing. So we'll just understand what's happening with the paper industry just after this short break. Stay tuned.
On startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS.
Welcome back. You're still tuned into Halftime Report. Well, one sector which is buzzing and has been buzzing off late is the paper space. Look at some of these stocks. JK Paper, that stock is up 12%. There's Sesha Sai Paper, West Coast Paper, all of them surging anywhere between 4.5% to 12%. And this has been the trend that we've been seeing in the month of June as well, and that continues for now. So let's try and understand what's happening with the paper industries. The stocks are buzzing in trade. Sri Kumar Krishnamurthy, Senior Vice President and Co-Group Head, Corporate Ratings at ICRA, is joining us now. Mr. Krishnamurthy, thank you so much for joining us on CNBC TV18. Well, you know, I was just going through FY24 numbers for some of these paper names. They've not done so well. Even JK Paper has seen just 3.5% growth in their top line. What's happening with the paper industry? Do you think FY25 will be better than FY24? Is there a change in demand, or is it the pricing which is working in their favor?
Sure. Thanks for having me. I'll give a bit of a perspective in terms of what happened in the paper industry post-COVID. Like everyone is aware that, COVID has been a tough period, more specifically for a sector like paper, where the consumption obviously falls down. Post-COVID, there has been a recovery. Here in the paper sector, we look at two subdivisions. Like one is your printing and writing paper. The other one is the packaging sector. The printing and writing paper, along with the newsprint, roughly contributes around 1/3 of the overall demand, while the balance 2/3 is largely represented by the broader packaging segment. Post-COVID, the first sector within the paper industry to kind of bounce back is the packaging because of your increasing e-commerce sales, etc. But more specifically, the kind of rebound that has happened post-COVID was more pronounced, starting with packaging, but then it followed with printing and writing paper, as well as the education institutions and also the return to office culture as such, kind of supported. Not only the volumes, even the pricing was quite favorable. I'm talking about a period like, financial year 22 or so. Following that year, while the volumes kind of stabilized, the realization still held high. It went in double digits. And we did observe an all-time high level of pricing. So that supported a significant growth on the top line for FY23 across the paper sector, including the packaging as well as the printing and writing. Coming to FY24, more importantly, this was a period where we saw a contraction in the pricing because of 2-3 factors. Here, to some extent, the packaging sector is also influenced by the movement in raw material prices, more specifically sector like, craft. So as the RM prices, because of the global slowdown in consumption fell, it has its own, demand supply inequation. So that resulted in a crash in the prices. And also we did see a good amount of increasing imports of paper into India, which were coming at a, kind of an unfavorable pricing. All this resulted in a double-digit reduction in the realizations for most of the paper sector, while the volumes were either flat or we saw low single-digit growth for a few of the players. So that's why we observed in FY24 across the industry, something like -3 to -5% kind of growth for our sample set in the paper industry. This includes both printing as well as the paper segment. This year, FY25, what we see is that the prices should kind of stabilize, and the volume growth should pick up as against the low single-digit growth that we have seen on the volumes in FY24. We expect the overall revenue to be roughly around 6 to 9% in FY25, would be largely volume-led driven kind of growth, while the prices will still remain at around the similar levels and will remain exposed to this vagaries of input price threat.
All right, so let's talk about two things then that you spoke about. You said that this industry will grow 6 to 9% in volumes in FY25. what is your outlook or prognosis for the input costs for FY25? That's one. And secondly, if you could break this 6 to 9% growth down for us among the sectors of the paper industry, how much do you expect the printing guys to grow at? How much do you expect the craft paper to grow at?
All right. So here again, the consumption is kind of, quite varied. At a larger picture, we see that, the per capita usage, is still very low, roughly around, 15 to 16 kgs as against a global standard of over 50 kg. So from a fundamental standpoint, the per capita usage remains low and will be supporting. Talking about PWP segment, the generic demand and also the adoption of the, say, a policy initiative, something like, your new education policy will obviously support the demand. For a packaging segment, we do see the, the influence of the specialized and the kind of conventional packaging that we see in sectors like something like FMCG, healthcare, and other pharma sectors. All these are kind of, supporting the demand growth. While we are expecting the volume growth to be higher for the packaging segment as compared to the printing segment, largely the fact is that the trade activities always will be supporting the growth over there. From a realization standpoint, while we say that it is likely to remain range bound, this largely comes from the fact that the threat of imports is very much there. Between segments, one will have to see. PWP segment has its own demand supply dynamics. Irrespective of the movement in prices, to some extent the players have a relatively higher organized share and they are able to kind of command a premium. But when it comes to the packaging, that kind of thing is not there. So it's largely influenced by the movement in RM prices. Here again, should the global consumption improve, that's when possibly one would see an improvement in the raw material prices. So till that point of time, we expect it to remain a bit subdued.
Okay. Two-part question here, Mr. Krishnamurthy. First, you spoke about raw material prices as well, and there have been some street chatter or channel checks that I would suggest. They said because of the raw material prices, there was some pressure in FY24, but now maybe those things could reverse. Can you give us a sense of how raw material prices are panning out right now? And with the new education policy and the demand improving, how much will capacity utilization go up from here on? Are we seeing more capacity addition in the industry itself?
Okay, from a capacity utilization standpoint, to answer you first, what we see is that substantial investments have happened more specifically in the packaging segment. This is just post-COVID. Sizable capacities have come in over there. Largely anticipating the sustenance of demand over a longer period of time. These capacities are currently getting absorbed, but unfortunately with the higher influx of imports, the capacity utilization was affected in FY24. One would like to see from our channel check, what we understood was that close to 7 to 8% of the sales is getting reinvested, in the capacities, either for upgradation of the technological requirements and also for the generic improvement in the demand. I missed your first question, sorry.
That was on raw material prices.
Yeah, on the raw material prices. So here, okay, so here when we look at the cost structure, it is like either your wood pulp or the waste paper and the energy costs. So last year when I said the PWP realizations came down, the writing paper realizations came down by 20-odd%. The RM prices fell down by over 25-odd%. So still, to that extent of, catch up didn't happen. This year, what we see is that, the prices are kind of holding up. We would expect that, the kind of activities to pick up and to support. Since it is also influenced by the global factors, it would be very difficult to comment on the movement in the RM prices on a long-term basis. But at this point of time, within the paper sector, we need to see what gets influenced significantly by the movement in the RM prices. One such segment is the craft paper, because this is a relatively commoditized segment and generally remains exposed to the very sharp movement in RM prices. Despite favorable demand supply dynamics over there, one big factor that influences their margins, etc., is the RM prices, which has kind of played out per se.
Okay, all right, Mr. Krishnamurthy, thank you so much for joining us today and making sense of what's happening in the paper industry. The stocks have been buzzing off late, so it's good to get some expert perspective as well. Time for a break now. On the other side, Manisha Gupta joins in with DS Pai of IMD. Stay tuned.
Electric is in the fast lane after receiving the market regulator's go-ahead recently. Ola is racing towards its IPO. It is going to be the first Indian electric vehicle company to go public on the Indian bourses. But before that long-awaited IPO, we're here at Ola's future factory in Krishnagiri in Tamil Nadu to tell you about how Ola is building its electric empire from the ground up. We're here at this colossal factory, which is where scooters like these are coming to life. Set up in 2021, Ola claims its future factory in Krishnagiri is one of the most advanced two-wheeler factories in the world, boasting of automation and cutting-edge processes. The factory is automated with modular and flexible assembly lines and an in-house paint shop. When at full capacity, the 10 production lines at the plant are expected to grind out one scooter every 3 seconds. However, at the moment, the future factory has one manufacturing line and is producing anywhere between 2,300 to 2,700 scooters a day. This Ola future factory where we're at is spread on a 600,000 square feet area and has an annual install capacity of 1 million units. It was built from ground up in less than 8 months in the middle of the pandemic, and there's a few things that really stand out as you enter this factory. The first, of course, as the name signifies, the future part in it, a lot of the tasks here on the shop floor are automated, with robots also deployed to carry out many tasks. The second and the most interesting thing I thought is that this plant is largely run by a women-only workforce, so kudos to Ola for that. And third, for a manufacturing facility, it is surprisingly quiet. The female workers on the shop floor total 944 on-roll employees, representing 100% of the shop floor workforce and more than 25% of the total on-roll employee headcount. After the future factory, Ola also plans to have...
Welcome back, and joining us now is Mr. DS Pai of India Meteorological Department. Mr. Pai, thank you so much for joining us. And June didn't go the way you perhaps anticipated it to be. What are the final numbers that you're looking at in sense of deficiency in June? And do you think July would cover all of those numbers up?
See, in June, the rainfall activity over northwest India and adjoining central India was significantly below normal. And that has actually, we were expecting rainfall to be below normal over northwest and central India, but it became slightly more deficient than what we expected. But overall, the rainfall activity country as a whole was 11% less than normal in the month of June. But yesterday, we had a very good rainfall activity. And as of now, till 1st July, the rainfall has become 93% of the long period average, which is in the normal category. And we also have seen that last 3 or 4 days, rainfall over northwest India, central India and northeast India has improved significantly. And this also has helped the monsoon to cover entire country almost 6 days before its normal date of 8th July.
Mr. Pai, as you said, there is deficiency that we've seen in east and northeast, also central part of India, various parts of Rajasthan, northwest, as you said. The only place that is seen above normal rains perhaps has been southern India, within which as well Kerala numbers do not seem to be adding up right now. So all these states where we have seen we are staring at huge deficiencies, do you see that getting covered up in the month of July?
Definitely. In the next few days itself, there will be improved rainfall activity along the plains of Himalaya, starting from Haryana, Punjab, Delhi, UP, Bihar, all this area up to northeast. you will find even neighboring central India, there will be improved rainfall activity, while in the southern peninsula, rainfall activity will be quite close to normal. But thereafter, the rainfall activity should continue. And by end of July, we are expecting that it will be more than 106%, which is above normal in the month of July.
Mr. Pai, also, how are you looking at the second half of the monsoon? Because this whole La Nina concept really seems to be working for the second half. How are August and September looking to you in that light?
See, La Nina, we are expecting that to develop in the second half of the monsoon season. So naturally, and also we had predicted a rainfall of above normal, that is 106, and more than above normal for the entire season. That June we are finding very close to normal. So, and July will be above normal, and we expect that the rainfall activity will continue in the second half also. Generally, we have seen that either El Nino or La Nina conditions, during El Nino below normal in the second half, and La Nina condition above normal in the second half. So, if you take together July above normal and also expecting good rainfall in the second half, we expect that next 3 months there will be improved rainfall activity of the country, and we should end up above normal rainfall.
All right, that's good to know. Also, Mr. Pai, the last couple of years we've seen a slightly delayed monsoon, and then it continues to stretch beyond September as well. I mean, is that becoming a trend now? Do you see monsoon rainfalls continuing beyond September?
See, in the 2021st, we had updated our onset normal date and withdrawal date. It had clearly indicated that over the central India, that last several years we have been seeing that after monsoon reaches over Kerala and further slightly into the southern peninsula, it gets slowed down up to central India, and after once it reaches to northwest India, the progress is very fast. So in fact, earlier monsoon normal date was 15th, now it has become 8th July, and this year, last few years, you might have seen that monsoon is reaching much earlier than normal date, and the withdrawal also has, now it is delayed withdrawal. So as a whole, you will see that northwest India, now days of monsoon rainfall has increased, compared to earlier, particularly over Rajasthan and the other parts of northwest India, neighboring northwest India. So that trend has been observed during the last.
Fair point that. Mr. Pai, as always, thank you so much for joining us and giving us some clarity on what to expect from this monsoon season. So June was minus 11%, but July is anticipated at 106%, and even better rains in August and September. So as far as rainfall goes, well, all those water reservoirs and kharif crop sowing are not supposed to be, or not expected to be, any concern going forward. But with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action forward.
In its cell manufacturing facility, the Giga factory as well.
The reason we set up the women factory was that we want to set up an example for the industry that in India, women can actually participate in the workforce.
Ola began the production of its second-generation EV scooters in September last year, and its founder says Ola will start the production of motorbikes in the factory later this year.
We are focused on the two-wheeler, Ritu. Scooters already has given us such a strong growth over the last 2 years, and last year we expanded our portfolio of scooters from the S1 Pro to multiple S1 platform scooters. Now we are working on the motorbikes. Like you said, we showed you motorbikes 15th August last year. Yeah. Those were early concepts, and we've been working on the R&D of those things. Okay. So through next year, you will see us launch some motorbikes, and I do hope that the consumers love them.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be...
Stocks see cautious trading after the recent run-up. Real estate as well as IT are the prominent gainers today, while the financials and consumer durables are the big drags. Mid-caps underperform.
And SEBI comes down heavily on volume-based, slab-wise charge structure of market infra institutions like stock exchanges, claiming lack of transparency and fairness. It calls for new and lower uniform charges based on existing realizations from the 1st of October.
Patanjali Foods buys the home and personal care portfolio of Group Arm Patanjali Ayurveda in a 5-tranche deal worth 1,100 crore rupees. The management tells CNBC-TV18 it is confident of growing the portfolio faster and more profitably.
Hindenburg reacts to a SEBI show-cause notice on the Adani issue that points to violations of Indian regulations, its connection with a short seller and key misrepresentations. The US-based research firm counters that it had disclosed short selling by a partner and that SEBI has no jurisdiction over it.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar. With me, as always, is Sonia Shenoy. So, Sonia, market has to take a breather. And today is probably the day where, the market is really in a pensive mood, 0.3% down on Nifty 50 at the moment. And remember, at lunch hour, Nifty 50 out of steam, closer to the lowest point of the trading session and trending just at 24,000 levels. So holding on to those levels at the current moment. When we talk about Sensex, that's also closer to 200 points loss. Bank Nifty is the one which is taking a bigger drag, more than 1% down in trade at the moment, and mid caps, that is showing a huge amount of underperformance and maximum amount of nervousness and sentiment drop in the market is seeing in the mid cap universe, 1.3% down there. So no surprises that the market strength, because of the broader markets being weaker than the key indices, that is really showing up in the advanced decline ratio as well. And definitely some of the counters still stand out today, like from the banking space, even though Nifty 50 as well as the banking space is dragging down. HDFC Bank as a big heavyweight is the one which is gaining tremendously in trade, and the IT momentum, Sonia, still continues from yesterday. So that's one pocket which is still holding strong today in an otherwise weakish market.
Okay, yes, absolutely. I mean, this is the IT space has come back in a big way, right? In the last couple of weeks. I mean, in the last 2-3 days, actually, and a lot of analysts have told us that the worst perhaps is over in terms of client spends, in terms of the IT headwinds, etc. And maybe in this quarter's numbers is when the pickup will start to show through. So let's see how it plays out. But let's begin Business Lunch by focusing on market regulator SEBI's new circular on transaction charges. The circular directs market infrastructure institutions to charge all its members uniformly and not based on volumes. Vamakshi is here with all the details. Vamakshi, over to you.
Well, absolutely, that's right. SEBI has issued a circular and has directed MIIs, that is market infrastructure institutions, to discontinue the practice of levying slab-wise fee structures. MIIs, by the way, include stock exchanges, clearing operations as well as depositories. Now, SEBI has advocated that the charges levied should be uniform and must not be based on volumes, and this circular will come into effect on 1st of October 2024. Now, just to give you some context, the current slab-wise fee structure, for example, there's a broker with a monthly premium turnover of over 2,000 crores. Now, the applicable exchange transaction charges should be 29.5 rupees per lakh of premium turnover charged on a monthly basis. But on the other hand, brokers in turn charge their clients 49.5 rupees per lakh, which is charged to them on a daily basis. Thus, brokers roughly earn rupees 20 per lakh in the process when the premium turnover for them crosses the 2,000 crore rupee mark for the month. For some brokers, that is specifically for some discount brokers, this transaction charges that they earn, the difference between them could amount to nearly 15 to 30% of their revenue, while for some deep discount brokers, this amount could be as much as 50 to 75% of their revenue. Now, with this new circular coming in, there could be definitely a big impact as far as their top lines are concerned. Investec, for example, says that for Angel One, the company earned 400 to 450 crores from transaction and depository charges in FY24, which represents nearly 25 to 30% of the company's FY24 profit before tax. Angel One could potentially mitigate this risk in case if it starts charging rupees 20 per order as brokerages. And in fact, that said, of course, there is a bit of a negative impact, but it will be interesting to see how the cost levers for companies may be able to offset this hit and the structural increase in trading activity that could take place if the transaction charges are lowered for the customers.
All right, Vamakshi, thanks so much for putting into perspective what this particular notification really means. And earlier, we also spoke to Rajesh Baheti, who's the MD at Cross Seas Capital Services, on the back of this news flow. Let's listen in to his opinion on this move.
Currently, the exchanges are following a graded transaction cost structure where they start with a headline number, and as you pile on more volumes, the next set of volumes will come at a lower cost, or you will be rebated certain amounts from the headline number. So if you're aggregating a lot of volume under your banner, you would end up with a weighted average cost of trading which is much lower than the headline number. So for the discount broking houses, this number was very, very significant because they were clearly aggregating a huge amount of volume. I mean, 2 or 3 brokers together were concentrating about 35% of all retail volumes in India. The total cost of trade for everybody will come down, but for those who are doing a very high volume and concentrating volumes either as a client-based trade, which is the discount broking houses, or certain algorithmic trading brokerages, for example, Share India and some other brokerages that were doing very high levels of proprietary volume, the weighted average cost for those brokers will go up.
Okay, that was a big issue. But apart from that, let's focus on Bajaj Auto. The auto major reported a 5% rise in total sales with 3.58 lakh units sold in June. Figures which were better than muted expectations. But two-wheeler sales came under pressure in the export market. Earlier, we spoke to Rakesh Sharma, the executive director of Bajaj Auto. Listen into excerpts from that conversation.
6 to 8% is a very good growth, right? And the key factor which is actually driving this growth is, at least in our type of customers, the economic recovery is finally reaching them. And there is optimism. We can also sense that optimism from the way the terms in retail financing are coming out. People are willing to take longer term loans, and which reflects a certainty of future income flows. I think 6 to 8% growth is a good growth too. It's a very large industry, and if it grows at 8%, it has got very good consequential impacts. Point is there that for this customer who's got 30 to 40,000 salary per month, and where a motorcycle or a two-wheeler is an absolute necessity, over there to have a 28% tax is, very harsh on the customer. Because don't forget one thing, The moment a person acquires a motorcycle, that person's productivity really increases, whether it is access to the farm or access to a job in a nearby town, a whole new world opens up. And therefore, from a social point of view, and even from an industry, triggering off an industry sort of growth point of view, there is a strong case for reducing the GST.
All right, so that's the word coming in from the management of Bajaj Auto. On that note, we'll slip into a short breather. But when we return, we'll focus on the big story of the day. Hindenburg, after it receives a show cause notice from SEBI with regard to the Adani case. Response, stay tuned for all the details on that development.
Also, availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but
Welcome back. You're still watching Business Lunch on CNBC-TV18. Well, for now, the market is very quiet, which is not a bad thing, actually. We've had such a strong run that now we're just consolidating with a bit of a negative bias, that is. The mid-caps are a little bit of a different picture because the mid-caps are under pressure right now. But the Ministry of Defence has taken an important decision in the first 100 days. The ministry has notified a fifth positive indigenization list comprising of 346 critical defence items. Sources tell CNBC-TV18 that the Ministry of Defence would like to move aggressively on defence indigenization, import substitution, exports and development of high-tech weapon systems for robotics and electronic warfare. Parikshit is here with the details. Parikshit, over to you.
Well, yes, the Defence Ministry has notified the fifth positive indigenization list. Now, this includes critical raw materials, spares, components, systems, subsystems, assemblies and sub-assemblies of weapons and weapon systems. A total of 346 items have been identified by Defence PSUs, such as Mazgaon Dock Limited, HAL, BEL, Bharat Dynamics Limited and BEML. The total import substitution value of these products would be approximately 1,000 crore. These items will be procured only from Indian suppliers after the timelines mentioned in the notification. For all these goods, the indigenization timeline is between December 2025 and December 2028. The MOD has already indigenized 2,972 items out of 4,666 mentioned in the 4 earlier indigenization lists. Now, this fifth list has items like diesel engines and integrated platform management systems for submarines, components for light machine guns, light field guns and Dhanush artillery gun, close to 100 components used in T-90 battle tanks, components used in LCA, Su-30 MKI, Dornier and Jaguar fighters, and shipborne unmanned aerial vehicles. Sources say the MOD is likely to put greater emphasis on self-reliance, innovation and indigenization in defense sector in the NDA government's third term. The government will move more aggressively with the indigenization and import substitution plans. The Defense Ministry is also targeting an increase in export footprint from 106 nations currently to 135 nations in the next few years. This is what sources tell us. The MOD and MEA will together intensify efforts to engage with friendly nations to export defense equipment.
All right, Parikshit, big story there. Thank you so much for all the details. To another big one, Hindenburg has received a show cause notice from market regulator SEBI over the alleged violations in placing bets on Adani issue. Sudarshan, our colleague, is right here with all the details of this development. Tell us, Sudarshan.
So Hindenburg today early morning has come out with a disclosure saying it has received a show cause notice from Indian market regulator SEBI in Adani Group case. Remember, in January 2023, this US-based firm had come out with a report on Adani Group alleging stock manipulation by Gautam Adani-led group companies. Talking about the show cause notice that Hindenburg says it received on June 27, three major topics that can be highlighted are: Hindenburg says SEBI notice outlines suspected violations of Indian regulations. It mentions its relationship with an investor that expressed short position in Adani, and the report contains certain misrepresentations and inaccurate statements. On the part of jurisdiction, Hindenburg says, and I quote, "Much of the notice seemed designed to imply that our legal and disclosed investment stance was something secret or to advance legal arguments claiming jurisdiction over us. Note that we are a US-based research firm with 0 Indian entities, employees, consultants or operations, and some of these arguments seem circular. For example, the regulator claimed that the disclaimers in our report were misleading because we were indirectly participating in the Indian securities market and therefore were short Adani. This wasn't a mystery. Virtually everyone knew we were short Adani because we prominently and repeatedly disclosed it." And talking about its relationship with an investor that expressed short position in Adani, Hindenburg says Kotak Bank created and oversaw the offshore fund structure used by its investor partner to bet against Adani after it highlighted in its report in January 2023.
Okay, Sudarshan, thanks a lot for that. We're moving on. In an effort to boost innovation and competition in the mutual fund industry, the Securities and Exchange Board of India has also proposed new regulations aimed at simplifying entry and reducing compliance for AMCs managing passive mutual funds and ETFs. The regulations, called MF Lite, also aim to ease net worth requirements for passive funds. Shivani is here with all the details. Shivani, over to you.
Well, SEBI has introduced a consultation paper for MF Lite, a streamlined version of the mutual fund regulations designed specifically for fund houses focusing on passive schemes. The goal is to attract more entrants by lowering the net worth and profit track record requirements. Now, what does the consultation paper say? It suggests relaxed financial criteria wherein sponsors would need a minimum profit of 5 crore rupees in 3 years of the last 5 years, down from current 10 crore each year. The minimum net worth of AMCs would drop from 50 crore to 35 crore initially and then eventually to 25 crore after 5 consecutive profitable years. Additionally, passive-only AMCs could conduct up to 10% of their transactions through associated brokers, up from the current 5% limit. The experience requirement for the top executives has also been relaxed. It would be reduced from 30 years to 20 years. Interesting part is that SEBI has also proposed a new variety of schemes called the hybrid passive funds. 3 sets of hybrid passive funds with varying equity to debt ratios like debt-oriented, balanced and equity-oriented have been proposed in the consultation paper. Currently, passive funds mimic the existing either pure equity or pure debt indices. Now, remember, these MF Lite regulations are for AMCs with passive schemes only, but most AMCs in the Indian mutual fund industry have both active as well as passive funds. However, SEBI has proposed that existing fund houses can segregate their passive businesses into separate entities, ensuring complete segregation of resources for passive fund management. All in all, SEBI has proposed to make passive fund management easier and more accessible. Back to you.
All right. Thanks so much, Shivani, for putting that together and explaining the rationale for this SEBI's consultation paper. Let's slip into a short breather on the show. But on the other side, remember, we'll take a look at what the French centrists and leftist parties are planning ahead of the second round of voting for parliamentary elections on Sunday. Stay tuned.
On efficiency and cost side. So, at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2%. 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI.
Welcome back. You're watching Business Lunch, and slight improvement in the market, and there is a fair bit of buying seen. So at the moment, Nifty 50 as well as Sensex inching towards the flat line. A lot of it is also led by Nifty Bank, which has also considerably trying to recover, but still 0.85% down in trade. So keep an eye out on the market and the improvement there. But remember, there's lots happening globally. So intense negotiations are underway between France's leftist as well as the centrist parties to cement a united coalition after the far-right party National Rally won a resounding victory in the first round of snap parliamentary elections. Now, Le Pen's National Rally won about 33% of the votes, while the left-wing Popular Alliance won 28% and Macron's centrist party won 22% of the vote in the past. Now, parties have struck agreements to stand down candidates from the runoffs to avoid splitting the vote, and a similar option could be on the cards this time around. So lots of excitement there when it comes to French elections.
Okay, well, as the United Kingdom looks to vote for a new government on the 4th of July, the Labour Party is looking to return to 10 Downing Street after a 14-year exile. As per pre-poll trends, the Conservative Party is staring at a crushing defeat right now. The Liberal Democrats and Nigel Farage's Reforms Party are expected to eat into the Tory vote bank. My colleague Sanjay Suri filed this story on the battle for Westminster.
A contrary pattern is beginning to emerge through the campaigning in the British elections underway. Face to face with Labour leader Keir Starmer, Prime Minister Rishi Sunak is coming across as the more forceful, even the more convincing candidate. We saw that in the first debate between the two leaders, and we saw that again in the last one just days before polling. There's just a glimpse that last round where the two leaders clashed over immigration, among the other usual issues.
And that is the choice for you. Do not surrender our borders to the Labour Party.
Steve, this is complete and utter nonsense.
On the numbers.
Why are record numbers still coming under your watch, Prime Minister? How on earth can you say it's working? You put the scheme in place. The flights could go off. I noticed you've called the election, by the way, before any flights could actually get off, and it could be tested. An interesting timing. But if this was such a deterrent, why is it obviously not working?
So when Keir Starmer says he's going to return people, Is he going to sit down? Are you going to sit down with the Iranian Ayatollahs? Are you going to try and do a deal with the Taliban? It's completely nonsensical what you are saying, right? You are taking people for fools, right? I think that these people should not stay in our country. They will be on planes to Rwanda. That's what I will do with them. You still can't answer the question. What will you do with them?
All the tens of
All
thousands
the illegal migrants who arrive will be processed and put on planes to Rwanda. And those savings we will use to cut your taxes. And what I want to do is cut taxes for people at every stage of their life.
But in the end, the debates may not count very much unless the polls are all wrong. If the polls are right, then too many people have already made up their minds against the Conservatives, debate or no debate. Returning to Parliament as Prime Minister is not impossible, but it won't be easy. And of course, Rishi Sunak knows that.
All right, so that was about the UK election. Sanjay Suri reporting straight from London. Now let's take it to the US, and in a major development for former US President Donald Trump, well, the Supreme Court has ruled that he has some immunity from prosecution in his federal election interference case, but has rejected his broader immunity claims, saying Trump has immunity only for his official acts as president. Now, the ruling party drew strong criticism over the Supreme Court's decision. US President Joe Biden called the ruling a dangerous precedent. NBC's Alice Barr filed this report.
The Supreme Court today setting a new standard for presidential immunity that effectively hands a victory to former President Trump. The High Court ruling the former president is immune from prosecution for official conduct related to his presidential duties while he was in office, though not for personal acts.
The tricky part is what is an official act and what is not an official act, and how are we going to decide it?
The case now heads to a lower court to sort that out, making it highly unlikely Mr. Trump will go to trial before the November election on charges he tried to illegally overturn the 2020 election results, culminating in the January 6 Capitol attack. The former president calling it a big win, while President Biden weighed in tonight.
American people must decide if they want to entrust the president once again, the presidency, to Donald Trump, now knowing he'll be even more emboldened to do whatever he pleases whenever he wants to do it.
The Supreme Court ruling states that a president cannot be prosecuted for actions related to core presidential powers, including Mr. Trump's contacts with Justice Department officials as he sought to reverse the 2020 results, and outlines presumptive immunity for acts on the outer perimeter of official duties, like his discussions with former Vice President Mike Pence. In the majority opinion, Chief Justice John Roberts writing that immunity for official conduct is necessary to safeguard an energetic, independent executive. In a blistering dissent, the three liberal justices said, quote, "The court effectively creates a law-free zone around the president, upsetting the status quo that has existed since the founding." Critically, the ruling not only prevents presidents from being prosecuted for any official acts, it also says that official acts cannot be used as evidence in prosecutions over unofficial acts, and that makes it very difficult to present a case against a president under any circumstances. In Washington, Alice Barr, NBC News.
Well, that's all the time we have on Business Lunch, but you have a good afternoon. Midcap Radar comes up next.
Two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the
45th year.
Welcome back. Now, Hindenburg has received a show cause notice from market regulator SEBI and they're over alleged violations in placing bets on the Adani issue. Now, Kotak Mahindra International has issued a response. Now, Sudarshan, who's been tracking this story closely, has more details on this. Sudarshan, what does the response entail?
So before I talk about the Kotak Mahindra International statement, let me give the background. So Hindenburg today early morning has come out with a disclosure saying it has received a show cause notice from Indian market regulator SEBI in Adani Group case. Remember in January 2023, this US-based firm had come out with a report on Adani Group alleging stock manipulation by Gautam Adani-led group companies. And talking about the show cause notice that Hindenburg says it received on June 27, three major points that can be highlighted are Hindenburg says SEBI notice outlines suspected violations of Indian regulations. It mentions its relationship with an investor that expressed short position in Adani, and the report contains certain misrepresentations and inaccurate statements. And talking about its relationship with an investor that expressed short position in Adani, Hindenburg says Kotak Bank created and oversaw the offshore fund structure used by its investor partner to bet against Adani. Now, Kotak Mahindra International has come out with a statement on this. It says company and KIOF state that Hindenburg has never been a client of the firm or nor been an investor. Also, the fund was never aware that Hindenburg was a partner of any of its investors. It has also received a confirmation and declaration from the fund's investor that its investments were made as a principal and not on behalf of any other person. And after this statement, Kotak Mahindra Bank, the stock has recovered almost 2% from day's low.
Oh, yes, there's been a massive recovery on that one. Thank you, Sudarshan, for joining us and bringing us all those details. And, you know, if we look at the Bank Nifty as well, there has been a sizable recovery from the lows on Bank Nifty as well. It's down around 0.7%, but considering the recovery that we've seen in some of these names, be it something like a Kotak Mahindra Bank, which is recovering from the lows. There's Axis Bank as well, which has seen a recovery. So that is an important movement that we have to track very closely, and it is led by the recovery that we are seeing in some of these banking names itself. If we talk about the other names which are off the lows of the day right now, we have something like a Hero MotoCorp as well, which is surging from the lows. There's Adani Ports, which gave its Q1 update as well recently. So watching out for all these names, but yes, for sure, the banking recovery is something that we should be tracking very closely. But let's move on. Liquor company Allied. Okay, so we'll talk about it in just a bit. There are other names as well. So, Ormaz, let's talk about the other names which are buzzing in trade right now.
DCX Systems is one of them actually, and that has seen a stellar move. Now it's almost the order that it received from L&T. That is almost a quarter of its market cap. So Upasna is joining in with more details on that. Upasna.
Thanks so much for that. Well, we can clearly see the stock soaring high in trade today on the back of significant order win. The company has received orders worth 1,250 crores from L&T, and the order is mainly for manufacturing and supplying of electronic modules, and the execution time frame is about 3 years is what the company has indicated. Last month, company has also received orders worth 32 crores from various domestic and overseas customers, and this order is mainly for the supply of cable and wire harness assemblies. Order book as of 31st March 2024 is around 801 crores is what the company has indicated, and FY24 revenue stood at 1,424 crores, which is the highest turnover in the history of the company, with an uptick of almost 14% on a Y-on-Y basis. Now, let us know about the company. DCX System is an Indian defense manufacturing player offering full service and manufacturing of electronic subsystems and cable and wire harness. The company aims to become technology-driven product company with a focus on transfer of technology, especially from Israel and US. Hence, so all in all, the stock remains in focus on the back of the significant order win.
Upasna, thanks a lot for that. 14% higher now on DCX Systems. At one point was up 16%. But interestingly, 1,250 crore order for a company whose market cap is just about nearing the mark of 5,000 crores. But moving on then, liquor company Allied Blenders and Distillers had listed on the last street today with a premium of 14% at 320 rupees a share. Manglam is here with more details. Manglam.
Well, you know, Allied Blenders is a company which is an Indian-owned, Indian-made foreign liquor company. It's the largest of its kind in the country right now. You know it better as the company that sells the Officer's Choice Blue and Sterling Reserve whiskey, which accounts for nearly 97% of its overall revenue. Whiskey itself, they have a capacity utilization of close to 64% as of 9 months FY24. This morning, the company joined us on the channel post-listing and did indicate that, you know, they would do close to around 3750 crores in terms of revenue. This is net revenue in FY25 with closer to 350 crore EBITDA, making it high single-digit margins as against 7%, what the company has reported earlier itself. Over the next few years, they target mid-teens sort of volume growth, early teens volume growth and mid-teens value growth. And Prestige and above, which is currently 50% of their value, they target this number to go all the way up to 70 to 80%. And they do not expect any near-term change in the status in Odisha or a price change in Telangana. So that takes care of some of the regulatory issues as well. Alongside that, their target in terms of volumes, cases, over the next couple of years is 45 to 50 million cases as against the 36 that they've done. What it means for their revenue is close to 5,000 to 5,500 crores on the top line. And because of them sourcing their own ENA going forward, and at the same time premiumization increasing with increased optimum capacity, they could do margins which are at industry levels of mid-teens as against the 7-8% that they're doing. Were all of these things that the management is saying, were all of that to come true, what is the stock trading at? Currently, FY25, basis what the management told us, is trading at close to 26 times. Compare that with USL or Radico, which are trading at 35 and 45 times. So it is at a discount to the industry. But then most importantly, management has to actually go ahead and walk the talk.
Mangalam, thanks a lot for that. And in fact, earlier we did speak to Alok Gupta, the Managing Director at Allied Blenders and Distillers. Listen to what he had to say.
Volume growth, we are looking at early teens, but the value growth in terms of revenue growth, we are looking at mid-teens, and that will lead to a better profile of sales and therefore a better gross margin and EBITDA. From a P&A segment, like I said, the focus is going to be on P&A. Therefore, we see the value share of P&A and premium and luxury to be north of 75%. Gross margins are currently at about 39%. We should see about 200 to 300 basis point increase in the gross margin. We did talk about the fact that we are looking at going captive on ENA. Currently, 30% of the ENA that we consume is our own, 70% is bought. We are looking at 100% captive. That should have impact of another 200 to 300 basis point on the EBITDA. So, I mean, the single point that we are chasing currently is to get to industry parity EBITDA, which is in mid-teens.
Allied Blenders and Distillers, the new kid on the block. But the sector that's buzzing in today's session is the paper stocks. And Sri Kumar Krishnamurthy of ICRA had joined us earlier in the day, and he said that he expects the pricing in the industry to stabilize this financial year. Listen to that as well.
As the RM prices, because of the global slowdown in consumption, fell, it has its own, demand supply inequation. So that resulted in a crash in the prices. And also we did see a good amount of increasing imports of paper into India, which were coming at a, kind of an unfavorable pricing. All this resulted in a double-digit reduction in the realizations for, most of the paper sector. While the volumes were, either flat or, we saw low single-digit growth for a few of the players. So that's why we observed in FY24 across the industry, something like, -3 to -5% kind of growth for our, sample set in the paper industry. This includes, both printing as well as the paper segment. This year, FY25, what we see is that, the prices should, kind of stabilize.
Paper stocks, the flavor of today's trading session. But with that, it's a wrap on this edition of Midcap Radar. From Sonal, me and the team that put this show together, thank you so much for watching. MF Corner when we return on the other side.
New milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Well, Ola Electric is in the fast lane after receiving the market regulators' go-ahead recently. Ola is racing towards its IPO. It is going to be the first Indian electric vehicle company to go public on the Indian bourses. But before that long-awaited IPO, we're here at Ola's future factory in Krishnagiri in Tamil Nadu to tell you about how Ola is building its electric empire from the ground up. We're here at this colossal factory, which is where scooters like these are coming to life. Set up in 2021, Ola claims its future factory in Krishnagiri is one of the most advanced two-wheeler factories in the world, boasting of automation and cutting-edge processes.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. Well, before we talk about the topic of the day, let's start the show with some important development. In an effort to boost innovation and competition in the mutual fund industry, the Securities and Exchange Board of India has also proposed new regulations aimed at simplifying entry and reducing compliance for AMCs managing passive mutual funds and ETFs. The regulations called MF Lite also aim to ease net worth requirements for passive fund houses. My colleague Shivani is here with all those details. Shivani.
Well, SEBI has introduced a consultation paper for MF Lite, a streamlined version of the mutual fund regulations designed specifically for fund houses focusing on passive schemes. The goal is to attract more entrants by lowering the net worth and profit track record requirements. Now, what does the consultation paper say? It suggests relaxed financial criteria wherein sponsors would need a minimum profit of 5 crore rupees in 3 years of the last 5 years, down from current 10 crore each year. The minimum net worth of AMCs would drop from 50 crore to 35 crore initially and then eventually to 25 crore after 5 consecutive profitable years. Additionally, passive-only AMCs could conduct up to 10% of their transactions through associated brokers, up from the current 5% limit. The experience requirement for the top executives has also been relaxed. It would be reduced from 30 years to 20 years. Interesting part is that SEBI has also proposed a new variety of schemes called the hybrid passive funds. 3 sets of hybrid passive funds with varying equity to debt ratios like debt-oriented, balanced and equity-oriented have been proposed in the consultation paper. Currently, passive funds mimic the existing either pure equity or pure debt indices. Now, remember, these MF Lite regulations are for AMCs with passive schemes only, but most AMCs in the Indian mutual fund industry have both active as well as passive funds. However, SEBI has proposed that existing fund houses can segregate their passive businesses into separate entities, ensuring complete segregation of resources for passive fund management. All in all, SEBI has proposed to make passive fund management easier and more accessible. Back to you.
Shivani, thank you so much for bringing us those important details. Of course, after the feedback, there could be some finality. Right now, it's just a consultation paper. But let's move on. Now we are going to throw the spotlight on momentum investing. For our viewers, momentum investing is a method of choosing stocks on the basis of price movement. But yes, we need to understand more about it. Which are the stocks here that the AMCs focus on? What do the fund managers think about this entire strategy? Should the viewers go for momentum investing? Is it for new investors? And is it a short-term or a long-term strategy? To discuss this and more, we have with us Kavita Menon, founder at Probitus Wealth, and Abhishek Kumar, founder and SEBI RIA at Sahaj Money. Thank you so much, Kavita and Abhishek, for joining us today. And we've been seeing a lot of conversations around momentum investing and also a lot of momentum stocks in general. Kavita, let me start with you. What is momentum investing when it comes to mutual funds? If you can explain it in simpler terms for our viewers.
Sure. So momentum, like the word suggests, it's like a pendulum. Let's think of price as a pendulum. So momentum strategy believes that if a price momentum is gathered in a particular asset, it will continue for some time in the same trajectory. For example, if it is a positive price movement and it has been positively rising for a certain amount of time, then such price momentum will continue for a longer period of time. Similarly, on the downside, if the prices are going into a negative momentum, the negative momentum will be sustained for a period of time. Momentum strategy aims to take advantage of this continuous price movements, capture them and provide alpha over and above the index strategy, a plain vanilla index strategy. This is what is momentum. It is a factor investment. It is a smart beta style of investment. It is also called strategy index, is also a word that we use for momentum investing.
Okay, all right. Take that point, Kavita. Thank you for that explanation. Abhishek, coming to you, we understand the basic here, but are there a lot of funds here? Do we have a lot of options to choose from when it comes to momentum investing?
So thanks for having me, Kunal and team here. With regard to funds to pick from this space, there are essentially 70 odd funds right now, out of which only 2 funds are in active space, namely Samco, and then there is one from Quant, AMC as well. Rest of the 15 funds are passive funds, and it's a mixed bag of both index fund and ETFs. So these are the fund option that one can pick for if they're looking for momentum investing through mutual funds. So that is what this availability in terms of the fund option exists as of now.
Abhishek, is this more of a technical indicator and not fundamental? Does it also mean it is largely for investors who want to invest only for a short period of time?
Necessarily, I would always suggest that not to do it for a shorter term basis, because trends are something which could change on a very short notice, and they could be held on to the wrong side of the trade. So if you have a longer term horizon, but you, as Kavita mentioned some time back, you're looking to generate some alpha, or looking forward to a kind of a factor investing, then you can look for this investment idea, but not on a shorter term basis.
Okay, all right. Kavita, what is your take here? Because when we say we are doing it basis stock prices going up, it is usually considered a technical indicator, because that's when we're not talking about the fundamentals of a particular company. Is it more of that? And is it largely for an investor who wants to invest only for a short period of time?
So very surprisingly, that's the notion that people have. But momentum strategy is, honestly, it is just a way of investing for long-term investors to get alpha. That's it. In the short term, any kind of investment strategy carries all the risks of the market, right? And if I'm assuming that this show is meant for mutual fund investors who are typically long-term investors. So while the word sounds very technical, please understand that this is meant for long-term investors. It is a strategy. It's a factor that gives you better returns than the index underlying. And momentum investing tends to work better during bull markets, and it tends to be an underperformer during bear markets. Okay, so if the market turns while you are thinking it's a short-term strategy and the market turns, you'll be in for a very bad surprise. You could lose money much faster than the market loses money. And I don't recommend, this is not a short-term strategy at all. This is for long-term investors who want to increase returns by using factor investing, using momentum as a factor for improving alpha. That's it. It's for long-term investors.
Okay, that is an important clarification, because as you said, in short term things can actually go wrong, and you don't know how wrong. At that time you need that cover, and long-term investing is what helps here. Then Kavita, give us a sense of how is this momentum calculated? Are there some aspects that is considered for this kind of investing?
So in a very transparent way, the NSE has a method for including stocks in its momentum index. If you look at Nifty 200 Momentum 30, which is a very popular momentum fund, what it does is, from the universe of Nifty's 200 top companies, it screens out 30 companies with the highest momentum score. This momentum score is calculated on the basis of last 6 months price performance, adjusted for volatility, and also weightage is given to 12 months price movement adjusted for volatility. Now, based on these two factors, a score is given to the companies, and they are then the companies with the maximum score make it to the top 30, and they make it to the index. Every 6 months, this index is rebalanced. So supposing a business has been in momentum and now it has suddenly lost momentum, it will automatically go out of the index in the next rebalancing, which happens every 6 months.
Okay, all right, take that point. So these are some of the factors which are considered safe for NSE 200 Momentum 30. Abhishek, let me come to you. What are some of the technical indicators? You very helpfully mentioned some of them in your notes that you sent us. Can you explain that to us as well?
Right. So take it from what Kavita mentioned so far. Momentum is calculated using various simple technical indicators such as rate of change or simple moving average or momentum indicator, to more complex indicators such as exponential moving average or moving average conversion divergence or relative strength indicator. The basic aspect to this is to observe trends in the price change of an asset over a specific period of time. So like entry and exit strategy could be determined, and that is what is momentum is calculated and then applied for, let's say, investment decision.
Okay, so some of them, of course, are technical indicators. But again, to reiterate what our experts said, it is still for a longer term period. It is not for short term period that you would look at momentum investing. So Kavita, tell us, one has understood that, okay, this is what momentum investing is. This is how I can look at a particular index or particular set of stocks. What should one consider before investing in momentum funds after they know that, yes, maybe this is the category that I would like to go for?
So the first thing you have to look is what is your universe that you want to invest in. If you're going to be investing in large cap momentum, your risks are obviously different. And if you're going to invest in a small cap momentum strategy, your risks are going to be different. So first, you must know your universe or your fund manager's universe or your passive funds universe. Okay, the risk comes from that universe. Market risk is a big part of your momentum strategy. Okay, so you first need to know what is the basic portfolio that you're going to invest in. The second thing is it going to be passively managed like in an index fund, or is it going to be actively managed? Like Abhishek mentioned that there are 2 funds already in the mutual fund space that actively manage momentum, but there are several in the PMS space also who are handling momentum. Now, in a mutual fund structure, the tax implication is really only when you exit out of the strategy. However, if you're in a PMS structure, momentum does involve a lot of transactions. There's a lot of churn in the strategy because of the nature of the investment. Now, every time there is buying and selling in the fund, capital gains will arise. Also, transaction costs are there. So your structure becomes very important. In a PMS, it is not a very efficient structure to run momentum because you're paying a lot more taxes in terms of capital gains. You will also end up paying a lot more in transaction costs. And in that sense, mutual funds are a better structure, right? So these 2 aspects you must keep in mind before you are investing in momentum.
That's very helpful, Kavita, and makes it more clear in terms of what to think about or consider before you're investing in this category, which could be new for a lot of investors, right? But Abhishek, then would it come with a lot of risk in that case? And also, should a beginner not go for momentum investing?
So to compare it with what SEBI has in terms of riskometer scale, these funds carry a high level of risk due to high volatility in returns of these funds. So, I mean, a beginner is trying to make quick gains due to fear of missing out, should take a pause and understand the risk involved, do their due diligence with these funds, and then decide how they want to go ahead with this based on the risk appetite, only if they have a longer term investment horizon. As we just spoke some time back, doing it for a shorter period of time is something which can, I mean, quickly wipe out their gains or whatever potential they are looking at it.
Okay, Kavita, your take on this?
So Sonal, I shared with you also, we had done an analysis from 2005 of all the returns, 3-year returns that have been given in momentum. Specifically, I'm going to talk about the Nifty 200 Momentum 30 index. We saw that this index has given superior returns per unit of risk. The Sharpe ratio is higher in momentum strategy as compared to other strategies like value, quality, low volatility, etc. And they have also done better than flexi caps that were existing since 2005. We compared them with two of the long-standing flexi cap funds that were there in that time, and it has shown superior performance, but with higher amount of volatility. But this volatility is comparable to what the managed funds were also having in their, in the same period. So if you're a long-term investor and you want to improve returns, momentum is not a bad strategy to have. And if you want to contain your risk, the advisors generally guide people to have momentum as a part of a, if you have a core portfolio, this should be a satellite portfolio. And you combine momentum with, say, low volatility, because low volatility is on the other end of the spectrum of momentum. It does very well in bear markets, while momentum does very badly in bear markets. And in bull markets, momentum tends to do very well, while low volatility underperforms. So generally, we ask investors to have a combination of these two and have it as a long-term strategy to improve returns and to reduce the risk in the portfolio.
Okay, that makes sense, and always better to do that asset allocation. Can't have all your eggs in the same basket, right? We'll just do one thing. We'll get into a quick break, but when we come back on the other side, we'll continue our discussion on momentum investing with Kavita and Abhishek. So stay tuned for that.
Mated with modular and flexible assembly lines and an in-house paint shop. When at full capacity, the 10 production lines at the plant are expected to grind out one scooter every 3 seconds. However, at the moment, the future factory has one manufacturing line and is producing anywhere between 2,300 to 2,700 scooters a day. This Ola Future Factory where we're at is spread on a 600,000 square feet area and has an annual install capacity of 1 million units. It was built from ground up in less than 8 months in the middle of the pandemic, and there's a few things that really stand out as you enter this factory. The first, of course, as the name signifies, the future part in it, a lot of the tasks here on the shop floor are automated, with robots also deployed to carry out many tasks. The second and the most interesting thing I thought is that this plant is largely run by a women-only workforce, so kudos to Ola for that. And third, for a manufacturing facility, it is surprisingly quiet. The female workers on the shop floor total 944 on-roll employees, representing 100% of the shop floor workforce and more than 25% of the total on-roll employee headcount. After the future factory, Ola also plans to have an all-woman workforce in its cell manufacturing facility, the Giga Factory, as well.
The reason we set up the women factory was that we want to set up an example for the industry that in India, women can actually participate in the workforce.
Ola began the production of its second-generation EV scooters in September last year, and its founder says Ola will start the production of motorbikes in the factory later this year.
We are focused on the two-wheeler, Ritu. Scooters already has given us such a strong growth over the last 2 years, and last year we expanded our portfolio of scooters from the S1 Pro to multiple S1 platform scooters. Now we are working on the motorbikes. Like you said, we showed you motorbikes 15th August last year. Yeah. Those were early concepts, and we.
Welcome back. You're still tuned into MF Corner. We still have with us Kavita Menon and Abhishek to talk about momentum investing. We spoke about what the basics are, how can one go about it, what are the possible risks associated with this as well. Abhishek, what have the typical returns been in momentum funds, say versus index funds or other categories?
So we spoke some time back about the two active funds in this space. These funds track Nifty 500 as total return index as benchmark, whereas rest of the 15 passive funds track 5 different indexes as benchmark, some of which Kavita spoke about a few minutes back. As these are relatively new funds, and although recent returns have been good, it's too soon to say whether these funds would outperform on a longer term basis without considerable performance history. So I'll wait for that thing to happen before I say that. But as Kavita mentioned, that these funds focus on factor investing and try to generate alpha. As the market has been doing good in the past few periods, the fund have also performed reasonably well in this recent past.
Okay, all right, take that point. Your take, Kavita, you've also helpfully You have helpfully provided us some details in terms of different categories. Tell us more about it.
So while the funds themselves are very new, momentum investing is, as in the form of funds available to investors, they are pretty new. But NSE did come up with the momentum index way back in 2005. So we took data from there and then tested that data over different market cycles. And we tested it over 3-year rolling periods, and we checked for sharp ratios and standard deviations. And we got some very exciting results. Momentum was the best performing category over the 19-year period that we did this analysis for. Yeah, you have it on the screen here, right here. So you can see the performance. It's it's more than the managed funds during that same period. HDFC FlexiCap and BlackRock FlexiCap were there in 2005. So we took data and compared. And but of course, if you don't want to put performance alone as the criteria, you would want to check risk as well. The risk-adjusted returns are also superior in the case of momentum. Thirdly, they do have more drawdowns. So when there are big crashes in the market, the momentum strategy tends to do worse than the market, and the excessive correction can be as high as 20-25%. We saw that in 2008 and in 2020 as well. So you brace yourself for higher volatility if you're a fan of momentum. But if you are a long-term investor and you can stay through these ups and downs of the market, then you would most likely end up with superior returns as compared to plain index investing. Or even if you're lucky, even better than managed funds in the similar category. As you can see, I mean, just see the table. HDFC FlexiCap and DSP FlexiCap have actually not done better than the Momentum 30 fund.
That makes sense. And as you said, it's always about the long term, because that is when you have those cycles of ups and downs, right? But at the end, it is about the longer term return. But Kavita, does it mean that the costs are higher in momentum investing, since we are talking so much of technical indicators being used here?
Naturally, so if it is an actively managed fund, there will be a lot more transactions. Transactions mean more costs. There's more buying, selling, there is more brokerages to be paid, more custody fees, more stamp duty, all those things do come in, right? And every time there are transactions, that leads to capital gain tax as well. So yes, if it is an active strategy and which is being done under, let's say, in your personal account, in your demat account, or you're running it in a PMS, you may end up paying a lot more taxes as well. But if it is in a mutual fund structure, then the taxation is not that much of a problem. You can skip that part. Passive index don't carry so much cost because the rebalancing happens only once in 6 months. So it's really not the largest amount of churn that is there. But if you're looking at actively managed momentum strategies, yes, the cost will be higher than a regular managed, fundamentally managed mutual fund scheme of a similar nature.
Okay. Abhishek, what is your take here?
Similar take. So what we also found that index fund in this category has generally higher expense as compared to, let's say, Nifty 50 index fund. To give a comparison, let's say if let's say direct plan of a Nifty 50 index fund has a TER of, let's say, 10 basis point or 15 basis point, correspondingly, index fund in momentum investing space, they have considerably higher expense ratio to the tune of 45 basis point or even 50 basis point. So the cost factors are higher on this side. As Kavita mentioned, there are lots of transactions to be done, and there are a lot of churns happen. So, impact cost is higher in this. But that is a factor which should not be considered separately, and should be considered compared to the kind of returns these funds provide over a period of time. Also, I believe that over a period of time, once these funds achieve a decent AUM size, due to that and economies of scale, the expense ratio would come down over a period of time.
Okay. So, Abhishek, is this a concept that has started picking up now, or has it been in practice for a long time? And which are the mutual funds that you've already answered? They offer this kind of investing, but what are some of the popular stocks that they have as their holdings?
Sure. So in India is a recent phenomenon, but these funds have been in existence in other developed markets such as USA for a while now. Kavita mentioned about that. NSE as a index had this for a while. But the funds were launched recently. So there are 17 odd funds, as I mentioned some time back, which offers momentum investing as a strategy. The index fund in this category invest based on the benchmark it tracks, and active fund in this invest based on their own research. So to give a comparison about one of the active fund, which is Quant Active Fund, the majority of the holding of this particular active fund is in Reliance Industries, HDFC Bank, Tata Power, IRCTC, and Container Corporation, which constitute almost 30 or 35% of their holding currently. Likewise, for the Samco, they should be similar, but the kind of stocks they might hold, they would be different because they would be tracking different set of momentum stocks.
Right, of course, it will be different for different funds. And Kavita has also helpfully shared the holding of Nifty 200 Momentum 30, which has HAL, Trent, there's Bajaj Auto, Bharat Electronics, to name a few. And the Nifty Midcap 150 Momentum 50 has PFC, HDFC AMC, Hindustan Zinc, there's Oracle Financials, Page Industries, Persistent Systems, NMDC, to name a few here as well. So thank you for that, Kavita. But we would have liked to chat a little more on this investing. There's so much interest here, but we have run out of time. So I would like to thank my guest for joining us today and explaining this to us and making it easier for our viewers as well. With that, we'll take your leave on MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
Of those things. So through next year, you will see us launch some motorbikes, and I do hope that the consumers love them.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness, or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. You know, this is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand. But there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
Taiwanese index is trading with cuts of around 0.4%.
Today, the patient and the hospital interest are at conflict.
Now on the Nifty, a decisive break above 24,174, which we did not do yesterday. It's 30 points now, would indicate further up move.
There's an attempt to sort of put a bit of a cap on this daily options activity which is happening.
We've targeted to keep a range of 12 to 15% growth at the minimum.
So first rates 24,189, almost 24,200.
It's a very large industry, and if it grows at 8%, it has got very good consequential impact.
The object of the issue is to pay off the debt, so we see that happening immediately.
Lesser bears, far more many bulls that we can spot on our screen.
Hindenburg says SEBI notice outlines suspected violations of Indian regulations.
MF Lite, a streamlined version of the mutual fund regulations designed specifically for fund houses focusing on passive schemes.
It's a big shade of red, and Nifty is off around 120 points from the highs of the day.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it's a unexciting kind of a day. Let me put it that way. This is Closing Bell. We're coming to you live as always from the CNBC-TV18 Motilal Oswal studios. And you saw that wrap of the day, right? And not very much has actually happened through the beginning, through the course of what we had. I mean, actually, the only excitement that we had, a bit of flutter, was right at the word go, the open, and that was basically the gap up, the day's highest point. And after that, it's been a very middling kind of session. I'm Prashant. With me, my colleagues Reema, Surabhi is back from a short break, and Nigel, of course, is joining us from the newsroom floor. Guys, hi, good afternoon.
Good afternoon. And since I'm back, I get to have the second word after Prashant. Prashant, unexcited. That's the problem with this market. It gets you used to seeing new highs every day, new flutter, new stocks, moving up in double digits. That's why our definitions change.
You can report on a market, roaring market. You can report on a market which is down and out. But to report on something which is, 10 points, 15 points, I mean,
but to be fair, the outcome is, 10 points here and there. Yeah. Through the day, at least in the morning, there was that volatility. The Nifty's moved in a 200-point range.
Yeah.
So it's not insignificant, the kind of moves that we've seen. First up, then down, then up, then down, and now flat.
Well, we had those when it was on. It just seems... anyway, okay, 10 points basically to show for it day on day. That's essentially what you've had. And the Nifty Bank will come up on your screen. Actually, the Nifty is okay. I mean, it's flat, right? Unchanged almost compared to where we left off. But the Nifty Bank is down more significantly. It's down 0.75%. It was in the morning, in the first couple of hours, it was just Kotak Bank. But then you got a bunch of others. ICICI is down a little bit and a few others as well. But it's the PSU Bank Index, the Nifty PSU Bank Index, the last I saw was down a 1.5%. Is the top sectoral loser, 1.6 now, top sectoral loser across the board. So that's the other thing. We are holding just above the 20-hourly moving average, 20-hourly simple average, beg your pardon, not moving, for the Nifty, which is about 24,060-ish, 61. That's the exact number. And that's the immediate support, right? I mean, you've got to look at some of these very short-term averages. But we're kind of respecting that. For the Nifty Bank, that is gone. The 20 is gone, and now we look at the 40-hourly average. That is a little lower for the Nifty Bank from where we are. So let's see if things stabilize over the next 60 minutes, or in the Nifty Bank especially, there is a bit of a crack, which means that we've got to start to look at perhaps lower levels. Market breadth is almost absolutely evenly matched. One stock up to one stock down, and that's what's going on. Mid caps are down about 0.4, 0.5%. I think the index, that is, small caps are not doing very much. So microcap index saw a big 2.5%, 3% move yesterday. That is taking a bit of a break as well. So, not really going on, not really that much happening as we begin the last 60 minutes here.
You know, banks are down 400 points on the index level despite HDFC Bank doing well. So HDFC Bank is a gain of 1.5%, adding on to the rally from yesterday. So if you pull up the banks, it's Kotak Mahindra Bank and IndusInd Bank and ICICI Bank where there is pressure, but HDFC Bank continues to see buying. Other than that, the two sectors where there is a fair amount of green. One is IT for the second day in a row, and the other one is real estate. And in IT, it's large cap names like Wipro, Infi leading the charge, and Coforge in the mid cap space where there is a lot of buying. And the top Nifty gainer today is Larsen & Toubro.
Absolutely, L&T's had quite a strong run throughout the session today. On the mid cap screen, I mean, obviously there is underperformance. The index is cooling off, dealing with a blow of about 0.75% right now. And if you talk about the stocks where sort of some of the fizz is coming off, you have names like Manappuram, IDFC, Vodafone Idea, about, you know, after the huge moves we've seen in the telecom space in the last few sessions. So these are the names on the lower side. But it's, I mean, on the price plus volume charts, there are no massive declines. It's just that some of these names, including some of the PSUs like BHEL, they continue to cool off. However, we've had some interesting moves today on the mid-cap screen as well in terms of news. There's DCX Systems, there's transformers and rectifiers. We actually spoke with the company in trading hour today, sounding extremely optimistic about their prospects and improving revenue and margin expectations for this year. So that stock, for instance, is up 5%. Today's listing, Allied Blenders, has had a decent start, 12% higher there as well. So not bad, but yes, at the headline level, it's a market that's consolidating. And Nigel, maybe, you know, not such a bad thing.
Well, that's right. You know, and if you're calling it a bit of a boring day, maybe you'll have to think again. The Nifty Financial Services Index will play out the weekly expiry in the next 60 minutes or so. So let's see whether or not it got some excitement for us. It's currently down. The Nifty Bank itself is down close to around 0.8%, but it's recovered a little bit from the low point of the day. Let's get in Mitesh Thakkar first for the call on the index, and then we'll get to his stocks. Hi, Mitesh. Good afternoon. Good to see you in. Well, what's the call on the Nifty? You know, we're in a flattish, you know, after a while, we're enjoying a bit of a flattish day. What's the trade out there?
Yeah. Well, Nigel, I think, you know, I've talked about the fact that the Bank Nifty was looking, you know, vulnerable in the sense that on the intraday charts, there was some signs of profit booking. I think that is the index which might face a bit more pressure and therefore keep the Nifty's movement into check, despite the fact that, you know, Nifty IT, Nifty FMCG is slightly on the stronger side. So the idea is that, you know, look for shorting opportunities either in the Bank Nifty, disclaimer, I have some positions over there, or look at the constituents of Bank Nifty where you would want to take some shorts. So I have, in fact, Bank of India as a recommendation right now. Excuse me. So Bank of India, the recommendation, sell here with a stop at about 120.5 and look for a target of 110 on the downside. While on the upside, I think, you know, we'll go with a buy on Wipro with a stop at about 530 for targets of 560.
Okay, thank you very much for that. Sell Bank of India, buy Wipro. We'll talk more about Wipro. There has been another upgrade on that. One by IIFL and the other one is by Nomura. But before that, Hindenburg has received a show cause notice from SEBI over alleged violations in placing bets on the Adani issue. Kotak Mahindra International has issued a response. Sudarshan has been tracking the story very closely, joins in with the latest. Sudarshan.
So Hindenburg Adani case is back in focus. So what has happened through the day? Hindenburg today early morning has come out with a disclosure saying it has received a show cause notice from Indian market regulator SEBI in Adani Group case. And remember in January 2023, this US-based firm had come out with a report on Adani Group alleging stock manipulation by Gautam Adani-led group companies. Now coming to the show cause notice details that Hindenburg says it received on June 27, there are three major points. Hindenburg says SEBI notice outlines suspected violations of Indian regulations. It mentions its relationship with an investor that expressed short position in Adani, and the report contains certain misrepresentation and inaccurate statements. On the issue of jurisdiction, it says, and I quote, much of the notice seemed designed to imply that our legal and disclosed investment stance was something secret or to advance legal arguments claiming jurisdiction over us. Note that we are a US-based research firm with 0 Indian entities, employees, consultants, or operations. And some of these arguments seem circular. For example, the regulator claimed that these disclaimers in our report were misleading because we were indirectly participating in the Indian securities market and therefore were short Adani. And about its relationship with an investor that expressed short position Adani, Hindenburg says Kotak Bank created and oversaw the offshore fund structure used by its investor partner to bet against Adani. Now, Kotak Mahindra International has come out with a statement after on this Hindenburg issue. It says company and KIOF state that Hindenburg has never been a client of the firm or nor been an investor. Also, the fund was never aware that Hindenburg was a partner of any of its investors. Also, it has received a confirmation and declaration from the fund's investor that its investment were made as a principal and not on behalf of any other person. So, after this clarification, Kotak Mahindra stock has recovered almost 2% from intraday low.
Sudarshan, thank you very much for that. Gurmeet, you want to add your comments on this particular story?
No, not much to add. I would probably wait it out. I think doesn't look like prima facie that somebody with likes of Kotak to be involved in something serious like this. But it's not been a great year for the bank. First, the RBI action on the digital onboarding on liability side, and then this coming up. And previously, I think they had issues with the RBI on the stake of the promoter. Then on succession planning, I think RBI was keen on an external candidate, and that's when Mr. Ashok Aswani from Barclays take over. So I think we'll wait it out, but the stock has been in this range now for more than a couple of years. So wait it out. I think at some point of time probably there'll be some value in the stock. But for now, I think it's something which is more regulatory in nature. It's not wise to second guess. There are banks. We made that point that financials were looking juicy when Bank Nifty was 48,000. We've seen a good run up led by SDFC, of course. I also think ICICI is due. It's consolidated in that 11,200 range for a very long time, and the operating metrics are industry leading. Amongst the mid-size, like Federal Bank, Kerala based, almost 1,500 branches, and now they're getting this wholesale retail mix right. It almost now 50-50, and now they're focusing on the high yield segment more. Asset quality has always been pretty decent, so that should ease off some pressure on cost of funds. And if their recommendation goes through, and let's say if we have somebody like, let's say, KVS Manian joining, it's speculative right now, but if KVS Manian ex-Kotak joins Federal Bank, I think the bank would see some re-rating.
Okay, so that is the take on a couple of those stocks, including Federal Bank. By the way, the run-up on IT continues. Wipro is 2.5% higher. Infosys, I mean, that's actually the only counterweight for the market. The weakness in banks has been quite nicely offset by the IT big boys today, along with, of course, L&T. That's been a tale of two cities, so to speak. Just, specifically on Wipro, Gurmeet, hi, good afternoon. And I know Rima is going to talk more about it as we go forward. But the market has been abuzz ever since we got this double upgrade from CLSA, right, on Wipro. And I think in general, expectations are running pretty high. Do you think stock prices are baking in the right level of optimism and enthusiasm? Because we've gone through this pattern. We go into the season with great hopes. Companies come out and say absolutely nothing. They just say no change in environment, and then there's a cool off. So it's become a bit of a trading pattern. Do you think this time it will be different?
I don't think so, Sulpi. You're right, actually. And when markets start looking at pockets which haven't gone up, also tells you that probably the legs are tiring now, right? So IT hadn't gone up. It was banks first, and now I think it's IT. I would want to wait for the management commentary. Is there any change in the yearly outlook, whether it is still flat or slow single digit? Because any optimism, if any, some of it is in the price. I think one large cap IT stock we like because of the diverse revenue stream is HCL Tech. Because their IT services continues to, it could be single digit this year. The software business is doing very well. It's almost $1 billion business with 25% kind of PAT, which is much higher than almost if I say 60-70% higher than the IT services. Also the ERD business, it's more diversified, and the non-discretionary spend mix, if you see the revenue mix, is a touch higher compared to normal IT services. And I think we like now more software and platform businesses, as I made that point earlier. The market will something like a KPIT, which continues to do well. It's been a great story. Something like platform businesses like Zomato, Policy Bazaar. So you got to probably move from IT services to software and platforms in IT. IT will remain dominant. as a theme concerned, but probably you need to do some bit of readjustments.
Right. Gurmeet, you like in the capital market space, you like CAMS, right? You own CAMS. Afternoon.
Yeah, Prashant, we own CDSL and CAMS both, and for a while now. And being in the industry, probably we have a bias also coming in. But valuations now are obviously as CDSL after obviously bonus announcement went up even more sharply. So it's for us, it's a very 5-10 year old story. It's more like buy and forget, and any meaningful dips, if you get, I think it will off. And I think other market participants, if there is any meaningful correction because of the recent SEBI guidelines on fixed charges and fixed slab should be charged rather than lot size based, that could give you some entry opportunities. But still, I said the valuations are pretty high, especially in brokers.
Vamakshi is here to detail those sort of directives to exchanges out from SEBI on fixed charges. Vamakshi, take it away, and then I'll come to you, Gurmeet, with specific stocks.
Well, absolutely. SEBI has issued a circular and has directed MIIs, that is market infrastructure institutions, to discontinue the practice of levying slab-wise fee structures. Now, SEBI has advocated that the charges levied should be uniform and must not be based on volumes, and this circular will come into effect from October 1st, 2024. Now, let me just give you a brief context. As per the current slab-wise fee structures, for example, if there is a broker with a monthly premium turnover of over 2,000 crores, the applicable exchange transaction charges should ideally be 29.5 rupees per lakh of premium turnover charged on a monthly basis. Brokers, on the other hand, mostly charge their clients 49.5 rupees per lakh of premium turnover, which is charged to them on a daily basis. Thus, roughly, brokers earn rupees 20 per lakh in the process, while this happens when the premium turnover crosses the 2,000 crore mark for the month. So this is one source of income for the brokers, and for discount brokers, this accounts for nearly 15 to 30% of their top line, and for some other deep discount brokers, it is a much significant amount of 50 to 75% of their revenues. And with this new circular now coming in, the brokerages, especially the discount brokerages, could see an impact as far as the top line is concerned. Investec has estimated that Angel One earned roughly 400 to 450 crores from transaction and depository charges in FY24, which represents nearly 25 to 30% of their FY24 profit before tax. However, they believe that the company could partially offset it in case it decides to start charging 20 rupees per order as brokerage, and therefore they could sort of negate the impact of the circular. But nevertheless, given the circular is expected to impact the top line of most of these discount brokers, Angel One particularly is in focus.
Thank you very much for that, Gurmeet. We've seen the day one reaction today, 9-10% gone on Angel One. Do you see this pain play out over the next, maybe 1 or 2 quarters? Because even though there are mitigating factors, they can go ahead and increase, the transaction value and the price. It will still take some time for them to compensate the kind of loss that they're going to immediately see.
No, absolutely. There will be near-term impact. So we are keeping on radar, as I said. So, like, for example, Motilal Oswal Financial Services is on our radar. They gained market share, almost 250 basis points in retail and wholesale as per our channel checks. Second, they have a very good AMC business, almost 30,000 crore equity assets. And AMC business has very high ROEs. You almost make an annuity kind of an income, and they are predominantly equity based. So obviously broking contributes the bulk, but AMC business is now picking up scale. They've made some good changes in fund management. But I would like to wait it out. There could also be SEBI action on derivatives. Now, if you see derivative volumes in India are now 99.6%, and only cash is just 0.4%. Compare that to US and other markets, I think they're far more higher, and I think the regulator is concerned, and rightly so, because there's too much speculation going on. So I think there could be some overhang there as well on both brokers as well as exchanges. So better to wait it out and probably, as I said, be on depository side more and market infra plays like CAMS of the world, even AMCs. Some of the AMCs are pretty reasonably valued, including Aditya Birla, etc. So be on that side right now on financialization and just wait this out.
All right. Hi, Gurmeet. Good afternoon and good to see you in. Now, what about solar industries? Now, I'm looking at our CNBC-TV18 page, and one of the articles out there state that solar industries is now 1 lakh crore in terms of market capitalization. That's been one of the stocks that you have been positive on, I think, for the last couple of years or so. But at these prices, what's the view?
So Nigel, I think sometimes you get lucky, and I think God is kind. We entered solar in 2016 when price was in 3 digit. It's almost been 15, 16 bagger for us. I think they have done well is the defense business as well as the basic growth in explosive business. I think recently this particular move today is related to CNBC 2, where they have developed a new explosive system which is much better than the conventional system where you use TNT. So that particular thing has got approved. Their defense book is still 12%, and I think my sense is it could be 25-30% in next 3 years, which is both which very margin accretive. So they are expecting a very large order in Pinaka rockets. They are in hand grenades. They are in ammunitions. They also have some exposure to few subsidies which are in the private rocket launch space like Skyroot. So it's a classic turnaround how a bulk chemical explosive company can become an innovative defense as well as other play. So we continue to hold, but I agree with you. Some valuation, obviously, the valuations have really rocketed. The near-term support could come from the Motilal Defense Passive Fund, which has almost collected 1,800 crores. And if you see the top three stocks, which is HAL, BL, and Solar, that's almost 60% of the index. So some of it could be flow-driven. I think the fund is supposed to get deployed this week. So near-term, I think the volumes, just the money supply will support it. But I agree with you on valuations. May not want to add more, at these prices.
All right, Gurmeet, how are you all playing telecom? These price hikes have come about, but actually the stocks are under some pressure for a variety of reasons. For Vodafone Idea, the street believes that maybe, in fact, most of the bullets are fired. At around 18 rupees, maybe it captures some part of the upside. On Bharti Airtel, there's another reason. There's a fear there's going to be a large trade. But I think maybe, in fact, since it's a promoter entity that people are talking about, it could possibly be we are already in silent period. So at least till the results, we may not see that large trade. For the time being, though, Bharti Airtel as well is down close to on 2%. What's your view on the telecom space, and if you could help us with how are you all playing it?
Extremely constructive. I think this tariff hike was long due. I think you will see massive re-rating, and this would be more medium term. Telecom has always been a capital guzzler. Continuously. So for the first time, if you see somebody like Bharti, their cash flows are exceeding the capex and the dues by almost 12,000-15,000 crores a year, which means they'll be deleveraging. So there is operating leverage played out, there is financial leveraging played out. The wireless business continues to be strong. I think broadband is something I'm extremely constructive on. We just have about 2.5 crore houses with broadband. The potential market size is 22-23 crore households. I think this number can get to 7-8 crores. There's some pricing disruption needed here. I think that's something in my view could be a big growth driver. Also, we are looking at the the telecom infra and the digital infrastructure. So one is is like a rental business of telecom, which is Indus Tower, where you just make rent and money through maintenance and OMCs through telecom. Second is the software part of telecom, where Tejas is trying to develop a technology which the way China and US did when they launched new technologies. A lot of smaller nations are still at 3G, like Africa and other places. So Tejas is actually, it's more of a bet, leap of faith. Will we be able to develop that or not? And then we have something like a Tata Communications. So we're trying to play the complete value chain in terms of not only the telecom operators, but let's say the infra providers, which are somebody like a rental business, the software business, as well as the overall, wireless and communication business.
All right, Gurmeet, got that. Good conversation with you as always. Thanks very much for the perspective on all the businesses and sectors and the companies that we have discussed. You have a good afternoon, and we look forward to the next one. We do have to take a break. On that note, we'll come back on the other side and then get chatting with Tushar Pradhan of Hexagon Partners on the other side, get some more perspective on the market.
So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. we are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at
Welcome back. Wipro is the top Nifty gainer today. It's a rally of more than 2.5%. Yesterday, it was the double upgrade by CLSA. And today, IIFL has upgraded Wipro to an add. They're saying there is limited downside. Nomura too has upgraded Wipro to a buy from a reduce, and their target price stands at 600 rupees. A couple of reasons. One, after 5 consecutive quarters of a top-line decline, in the current quarter, the company is likely to report a flat growth. We did a quick dipstick survey in terms of the expectations and flat revenue growth after 5 straight quarters of compression. Secondly, even the Q2 guidance, Wipro, remember, gives you a quarterly guidance, is likely to be positive. 0 to 2% is what many analysts are calling out. Third, remember the company won a large deal of $500 million, and this is the largest deal that the company has seen in the last 3.5 years. They haven't seen a $500 million plus deal in the last 3.5 years. So that's a positive sign under the new CEO, Srinivas Pallia. And fourth, is there hope of a buyback? The last buyback closed on the 29th of June, so the window is open. I just pulled up the Nomura expectations for the kind of revenue and margin rebound that at least they are anticipating for Wipro going ahead. So they're saying FY25, don't expect too much, flat revenue growth. But in FY26 and 27, you can expect growth to rebound to 6.9 and 8.5%. With progressive margin improvement. They closed last year with 15.2%, but in the next 3 years, margins can expand to 16.6%, closer to, they've always had an aspiration of getting to 17%, so they could get closer to that. That said, not everyone's convinced. Goldman Sachs today came out with their preview note. They have a sell call. Their target price is at 440. Morgan Stanley says Wipro stock has run up, making its risk reward relatively less favorable from current levels.
Right. One by one, right? I mean, stocks in the not just IT services space, but of course, rotation has been a constant feature across the market. But here, it's showing up in some form in IT as well. Tushar Pradhan is with us, director at HX Hexagon Partners. Tushar, good afternoon. Good to have you with us here. Thank you very much for your time. Since Rima was explaining what's happening with Wipro, and of course, she's kind of put out expectations for IT services, etc. What is your sense? I mean, is it just a trading kind of a move we are seeing pre-earnings, or as some at the margin have said that maybe H2 perhaps will mark the turnaround, real turnaround, not stock turnaround, but business turnaround?
I don't really know much about the specifics, but I would think that IT has overall been a little bit of an underperformer throughout this blistering period of stock market activity. But I would still think that, there is a reason for IT companies to be valued in the right sense, but may not be for the reasons that some of the other companies are being valued. So one of the things that stand out are industrials, say, for example, even the defense companies. I mean, they're standing out and the performance is because of substantial revenue increases, order inflows, which are of an order which we haven't seen before. Now, nothing like that is happening in the IT companies. So essentially, we have these very mature cash flow oriented companies, which are going to grow at a very certain state rate over a period of time. So I think these movements in stock prices, over a day or two, I think it's maybe people are just reading too much into it, or maybe I've just become a little more cynical about these movements in the short term.
IFL today titled their report, valuations have rebounded, but demand has not. So they're still taking a bit of a cautious stance. But I wanted to get your thoughts in on defense. Before that, the Ministry of Defense has taken an important decision in the first 100 days. The ministry has notified a fifth positive indigenization list comprising of 346 critical defense items. Sources tell CNBC-TV18 the Ministry of Defense would like to move aggressively on defense indigenization, import substitution, exports and development of high-tech weapon systems for robotics and electronic warfare. Parikshit joins in with the details on this. Parikshit.
Yes, the Defense Ministry has notified the fifth positive indigenization list. This includes critical raw materials, spares and component systems, subsystems and assemblies, sub-assemblies of weapons and weapon systems as well. A total of 346 items have been identified by defense PSUs like Mazgaon Dock Limited, Hindustan Aeronautics, Bharat Electricals, Bharat Dynamics Limited and BEML, among others. The total import substitution value of these products would be approximately 1,000 crore and more. These items will be procured only from Indian vendors after the timelines mentioned in the notification. For all these goods, the indigenization timeline is anywhere between December 2025 and December 2028. The MOD has already indigenized 2,972 items out of 4,606 mentioned in the 4 earlier indigenization lists. The fifth list has items like diesel engines and integrated platform management systems for submarines, components for light machine guns, light field guns, Dhanush artillery gun for that matter. Close to 100 components used by T-90 battle tanks are also mentioned in this list. Also, components used in LCA, Su-30 MKI, Dornier, Jaguar fighters. Also, shipborne unmanned aerial vehicles for anti-mining operations are also there. Sources also add that the Ministry of Defense is likely to put greater emphasis on self-reliance, innovation and indigenization in defense sector in the NDA government's third term. The government will move forward more aggressively with the indigenization and import substitution plan. The ministry is also targeting an increase in export footprint from 106 nations currently to 135 nations in the next 5 years. The MOD and MEA will be intensifying efforts to engage with friendly nations to export all kinds of defense equipment which is manufactured indigenously in India.
Parikshit, so for all these components, products, etc., do we know what is the aggregate sort of value of these products sort of purchased every year? I mean, to give us an estimate of what this is as a size of opportunity will mean if it's made here now?
Well, what the government has been indicating that these are products, all these 346 products which our defense PSUs use for different weapon systems, they are all imported from other parts of the world. And if we manage to make them here in India, we will be saving anywhere between 1,000 to 1,200 crores. So this could be the amount that we would save. The exact amount we're yet to know, but we do know that the orders will go to all the defense manufacturers in India, also component manufacturers. There are big MSMEs, startups, which are now joining the defense ecosystem. So all of them could benefit from these orders between now and December 2028.
All right, Pariksha, thanks a lot for that. Well, hi, Tushar, and good afternoon. Good to see you, Ben. What's your view on some of these defense companies? That's been a solid theme, if you played it and if you got in at the right time. But currently it appears that some of these companies are factoring in, maybe the next 2 or 3 years earnings as well. Your view at current reckoning, for someone is in, they stay invested. But if someone wants to get in fresh, then what would your advice be?
No, I think, generally the stock markets kind of discount future earnings or future possibilities. Now, in this case, I think the market has been fairly efficient in pricing those in those stocks. And definitely there was a surprise because many people did not understand the magnitude of which these orders are likely. We've had these efforts for these defense companies to start producing domestically. But I think with this huge thrust on import substitution and make in India and the whole defense, most of the market participants were surprised with the stock market movements initially. But now we are getting to the point where we now understand that it is really now based on solid orders which are likely to follow. Now, there is a gap between where the market discounts it and the actual news come. So the oldest adage in the market is to buy on rumor and sell on news. So typically, this is where we are coming, where the rubber hits the road and we actually see the extent of these orders. I think anyone coming in fresh needs to understand where the valuations are today. What is the expected earnings growth now as a result of these likely to reflect in the next 2 or 3 years, and then take a call. I think it's very, very important to understand that eventually the stock price is a measure of how many earnings are there in the future. And if these earnings are somewhat which can be modeled, you will get a fair idea of whether you're buying at a good price or not. So I think I would say caveat emptor, especially for people coming in fresh at this time.
Okay, that's the sense on the PSU space, given the huge rally. Tushar, great to have you on the show as always. Let me expand that thought on the market as a whole, because it's been a phenomenal year, right? 2024 so far, 6 months have been great, building on what was a fairly good 2023, and the market continues to move forward in uncharted territory. So, I mean, on a deeper and wider level, really, what are the possible risks, perhaps, that we should consider? Because I think a lot of people are grappling with how to make fresh purchases now. The smallest of dips are getting bought. There's so much of liquidity sloshing around. So is that becoming a bit of a challenge? And how should one sort of consider and wrap their heads around these things?
No, I think some time ago I heard an adage about the traders in the market, where they say brains and the bull market have very less to do with each other. So I think if you're trying to make sense out of what's happening today in the market, maybe there's not much there. But I must say that there are significantly important positives about India which are happening, which I think should make us realize that while we are trying to find out what could go wrong, maybe you're missing about the magnitude of this move. One of the things that has been announced, of course, is the inclusion of the bond indexes for Indian sovereigns. Now, what is that going to do is to bring in a very steady inflow of money, which is fairly visible into March next year, which is almost guaranteed. On top of that, the kind of interest rate movements which we're expecting in the US does indicate that an interest rate environment which is slightly lower than where it is now is likely to happen in the next 6 months. Now, typically when interest rates globally start to come off, asset markets generally react by moving up. We also have a significant continuation of political, I would say, imperatives in India, which means that whatever we thought about is likely to continue to happen on an industrial and a government spending scale. Now, when you put all of this together, and the fact that, yes, the last 2 years have been good on the basis of very significant earnings growth, could we imagine that earnings growth from here on is also going to be around 15 to 18% for the next 3 years? Now, nobody's really modeled that because it's too far into the future and it's too, I would say, wild to guess that that's likely to happen. But if that happens, I don't think the market is very expensive. So I think it is a matter of, I would say, perspective to say that are earnings going to go down or stay flat from here? If that is the scenario being built, then maybe the market is expensive. But what if we are talking about a sustained earnings momentum, which will take us the next 2 or 3 years to kind of plateau out? What if? Now, that is something which I think most participants at the moment are not really thinking of. There are, of course, models which indicate that earnings growth is going to remain robust for Indian corporates. But for how long? Most of the analysts and the research reports go probably about 6 months or 1 year into the future. They don't go beyond that. But is the market likely to benefit from the fact that these earnings growth numbers are likely to sustain so long? So I would think that investors need to understand that if they've chosen the equity asset class, they are in for the long run. And I think in the long run, even if there is a wobble or a drop in earnings for any of these years, I don't think the overall valuation is startlingly expensive. I think there are pockets of over exuberance, but I think that is likely because of the kind of earnings volume which we're likely to expect in those companies.
So Tushar, so what you're intrinsically saying, if I got that right, is that if you're going to imagine at least 15% sustained earnings growth for the next 3 years, then at a headline level, this market doesn't look that expensive. So let me just ask you a quick follow-up. Which are the sectors where you think we'll get the maximum of this earnings outperformance? Could it be banks? Could it be IT doing a certain turnaround? Will it continue to be these capex companies? So where will the earnings kicker be? And now we're talking a 3-year view.
So I think I've said that before, that we have domestic industrials, because what is going to really fuel this economy going forward? It's largely going to remain domestic-led. So anything which has domestic earnings growth inbuilt into their business models, I think that is something which looks very attractive. I just left out one more point on one of the things which have happened internationally for us, is that the FPIs have been fairly circumspect on India over the last few years, and that's not because they don't like India. It is the fact that the regional funds which have India in them have been very unpopular with domestic investors abroad. So as a result of which, there will be a time where the global investors will also throw in the towel and say, look, we can't ignore India. Let us put money now back in. And I think that is the last vector which I think over time, in addition to all the domestic fundamental factors, is probably going to remain a very, very large positive going forward. But coming back to your question, I think in a sense, domestic sectors focused on industrial manufacturing and essentially about capex are likely to remain very interesting sectors, because their jump in earnings is very substantial. And then towards the end of a mature bull market, 2 or 3 years into the future, is I'm sure FMCG consumption and all those sectors which generally try to come at late stage of a bull market will also stage a rally. So I think over time, you've got to be prepared for rotation. And any sector that you identify now is not likely to remain a perpetual favorite. So that's the caveat I will put in.
All right, final question, Tushar, before we let you go. I briefly remember that we discussed telecom. I don't think you were very optimistic on the price increases going through. What's your view on the telecom space? Because most of them have gone ahead and pushed through the price increases, though the stocks already ran up in anticipation. So I wanted your view on that now, since the price increases have come about.
Yeah, that's been a surprise for me. And I think in a sense, probably they're a little bit behind the curve already, because as you can understand that India continues to remain one of the lowest, or let's say the cheapest tariffs for telecom anywhere in the world. And counter that with the kind of capital expenditure which is needed to keep up with the advances in telecom infrastructure. So if you're talking about 5G and then 6G and God knows how many Gs later on, that you will need to continually keep putting capital to be able to sustain your earnings going forward. So which is a little bit like a treadmill. So while you'll get in between very large increases in free cash flow, because then the timing is such that you haven't invested so much, but your price increases dramatically increase reported profits. But as soon as these reported profits accrue, you will have another cycle coming up for capital expenditure, which is significant. So they remain somewhat, I would say, operationally leveraged, where something like an aircraft company, where after the investment is done and you have significant improvement in occupancy, you suddenly make a great upside. But then you need to add more aircraft, and then it continues to roll on like that. So I would think that it is definitely a part of an overall portfolio allocation. But to think that things have changed dramatically for telecom and then just rush in would not be my way of looking at it.
Okay, thank you very much for joining in, Tushar. Some PSUs are moving up. IREDA should come up for your new screens. A massive 4% up move on big volumes. NBCC has seen a sudden spike. And paper stocks, led by JK Paper, continue to move up. So Pudumji paper has a 16% gain. Andhra paper is 5% up. West Coast up close to about 8%, while JK paper is now approaching a 20% gain. We'll get into a break on that note. On the other side, a few BTST calls from our technical experts.
That's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
The market sees profit booking at record levels. The Nifty Sensex, they subdued in choppy session. The Nifty Bank underperforms, mid-caps under pressure.
After being named by Hindenburg, Kotak Mahindra International distances itself, says Hindenburg has never been a client of the firm. This comes after Hindenburg receives a show cause notice from SEBI in the Adani Group case.
Godrej Properties launches Bengaluru project with bumper response. NNBC falls on weak production and sales numbers for the month of June, while DCX Systems and Gandhar Oil get a leg up from order wins. Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you all the data points to gear you up for the next trading session. I'm Rajul D'Souza, and with me as always my colleague Surbhi Upadhyay. Hey Surbhi.
Hi Nigel, some red on the screen, some consolidation, and I think banks not quite playing ball.
Yeah.
So we had some flat trends by the end of it.
Well, that's right. We've got a lot to cover in the next 20 minutes or so. We'll get you all the top news, the key developments on the last year, some corporate voices, as well as the events to track going ahead. But let's get straight to the market action then. Overnight you had positive cues that came in from the Dow, the Nasdaq, as well as the S&P. But if you looked further into the data points, it made you a little bit uncomfortable at the start of trade. Why was that? Because actually the breadth of the US markets was under pressure. The Russell 2000 ended with a cut of close to under %. You had 3/4 of the S&P 500 stocks that were lower. The crude oil prices were higher and yields as well were higher. Normally, that's not a great recipe. And that's why after opening up gap up with a gain of around 50-80 points odd, we did see profit taking in today's trading session. The Nifty ran into resistance at around 24,250 odd. And from there, we did come in lower. What was the underperforming segment of the market? Well, Nifty Bank. That was the one that was dragging in today's trading session, ended with a cut of close to around 400 points. Despite HDFC Bank getting bid up, there are hopes that, in fact, the shareholding pattern, once it's announced, will give some kind of headroom for higher amount of allocation with regard to global indices like MSCI. But in spite of HDFC Bank doing well, you had the Nifty Bank under pressure because there was negative news flow on Kotak Mahindra Bank. You had SBI that was down close to around 2% odd, and that's what weighed on the index. What did the firefighting then from the bulls? You had IT index. The IT stocks did quite well. L&T, there was some confirmation of the order wins that they were looking for. So that's why, in fact, both those two were up in trade. Wipro, Infosys, L&T, all of them did well. And by the end of it, Surbhi, your portfolio will be more or less flattish by the end of today's trading session because the number of stocks actually that were advancing in comparison to the number of stocks declining, well, they narrowed down. So at the start of trade, you had way more number of stocks. At the end of it, well, they hugged each other, in fact, and they ended pat, even Stevens.
Absolutely. So a quiet day and maybe not that bad considering this market's made a habit of hitting all-time highs, new highs on a daily basis. So maybe some pauses. Exactly what the doctor ordered. By the way, that selling in banks, it was not limited only to the large big names on the Nifty. As we'll go forward on the show, you'll realize that a lot of other names as well, IDFC First, RBL, etc. Even the tier 2 banks, PSU, non-PSU, they were seeing a bit of a cool off. So that index was, so to speak, from the bulls' point of view, that was the big culprit of the day, and a lot of selling kind of continued over there. So let's, straight away get to the lineup that we have because it's a packed show as always. We're going to start off with all the top movers and shakers. We'll have Hormaz giving us details on the day's action. And Kotak Mahindra, of course, was one of the biggest losers on the Nifty today following revelations linking the lender's name with the Hindenburg SEBI response. Not only that, we had deep cuts on Angel One, a big decline in that stock due to SEBI's new circular in terms of the charges that are being paid to market institutions like stock exchanges. So we'll tell you more about it. And there were other stocks in news like DCX Systems, NMDC. They were all buzzing around. So we'll get to all of that in just a bit. And of course, also dive into the events to watch out for tomorrow. But as always, let's look at the movers and shakers up front with Hormaz.
A quiet day, but there were enough and more movers to keep the street interested within the broader markets and actually for the benchmarks as well. But the one sector that stole the limelight today was paper stocks, and they were up and away in today's trading session. JK Paper almost 19% at the end of trade, also ending at the highest point of the day. So a good day for them. Orient Paper also seeing a gains of around 11%. West Coast, TNPL, almost every paper stock had a very good day in today's session. What did not have a very good day on the flip side though were broking companies, and that was because of the SEBI circular. And you can see their Angel One ending almost 9% lower. At one point was down almost 11% as well. BSE, Motilal, Geojit, all of them seeing impact of anywhere between 3.5% to 7% in today's trading session. IT lent support yesterday, continued to do so today as well. But before that, PSU banks were a big laggard in today's trading session. They were the other ones that dragged the index lower. Bank of India, almost every constituent of the PSU bank index ending lower today. And I was mentioning IT, those stocks continue to have a good day ahead of the earnings season that kicks off next week. But the mid-cap IT was one in particular. Coforge had a good day. Wipro, a series of upgrades coming in before results. So another 2% added to Wipro there. Infosys, TCS, not much in terms of the percentage terms, but in terms of point contributors, they were right up there as well. And lastly, Solar Industries is one stock that I wanted to mention today. That's ending 9% higher, well above the mark of 11,000 now. A record high. The stock is up 10x since the start of 2020, and today it crossed 1 lakh crore in market cap. Back to you guys.
Okay, all right. Thanks a lot for that. Hormuz neat list of all the stocks that were bobbing around. Well, joining us on the show today, we have Jay Bal of CashTheChaos.com, who joins in. Hi, Jay, and good to see you again. Jay, on the Nifty, you know, we're going to around the 24,250, 24,300, and it seems there's a bit of a resistance out there. And that's because the Nifty Bank that made a high of around 53,000, it can't get back to those levels. Your view in terms of resistance on both the two indices, and how would you trade them?
Yeah, that's right, Nigel. See, obviously, still got to be, taking the long side for the markets. But first, let me take the Nifty Bank Index. You know, if you draw an internal trend line from the 2010 highs, 2008 highs, the record highs for the banking index is coming very close to a long-term trend line. It's a 14-year trend line. So that's like I highlighted last time, it's about 54,000 to 56,000. That's the reason why it's facing some resistance. And in particular, the Nifty PSU banks, they seem to have possibly topped out. But it's a bit early to talk about it. But there is a potential for it. But within the private sector banks, HDFC Bank and ICICI Bank, both seems to have at least one more sequence of higher highs to come through. So in that sense, the banking index could stay lower than the all-time high or push towards 54,000, but it could be just ICICI Bank and HDFC Bank which could take it there. When it comes to support for the Nifty, it's 23,300, quite far, but that's what the market is saying. Until 23,350 on a closing basis is taken out, the trajectory remains up, but very stretched. So caution, but on the long side.
Okay, all right, Jay. So just stay on. We'll have more questions for you in just a bit. Let's start also addressing some of the big newsmakers of the day and straight away get to our top story as well. And that was, of course, the revelations that came in on the Hindenburg front. Now, Kotak Mahindra Bank was down a little over 2% in trade today. Hindenburg has received a show cause notice from SEBI over the Adani controversy, and it hit out at the market regulator. After being named by Hindenburg, Kotak Mahindra Bank International has distanced itself from the US-based short seller and the research firm, saying that it was not aware that Hindenburg was a partner of any of its investors. Sudarshan is here. He's been tracking this story right from the morning. So Sudarshan, this is of course fairly sensitive and complex. So just run us through different aspects of where matters stand now.
So Hindenburg-Adani case is back in focus, and what has happened through the day? Let me explain. So Hindenburg today early morning has came out with a disclosure saying that it has received a show cause notice from Indian market regulator SEBI. And this, remember, in January 2023, this US-based firm had come out with a report on Adani Group alleging stock manipulation by Gautam Adani-led group companies. Now, coming to the show cause notice details that Hindenburg says it received on June 27, there are three major points that can be highlighted here. Hindenburg says SEBI notice outlines suspected violations of Indian regulations. It mentions its relationship with an investor that expressed short positions in Adani, and the report contains certain misrepresentations and inaccurate statements. On the topic of jurisdiction, Hindenburg says, and I quote, much of the notice seemed designed to imply that our legal and disclosed investment stance was something secret or to advance legal arguments claiming jurisdiction over us. Note that we are a US-based research firm with 0 Indian entities, employees, consultants or operations. And some of these arguments seemed circular. For example, the regulator claimed that the disclosures in our report were misleading because we were indirectly participating in Indian securities market and therefore we are short Adani. And this wasn't a mystery. Virtually everyone knew we were short Adani because we prominently and repeatedly disclosed it. And talking about its relationship with an investor that expressed short position in Adani, Hindenburg says Kotak Bank created and oversaw the offshore fund structure used by its investor partner to bet against Adani. Now, there is a statement from Kotak Mahindra International on this. It says company and KIOF state that Hindenburg has never been a client of the firm or nor been an investor. Also, the fund was never aware that Hindenburg was a partner of any of its investors and has received a confirmation and declaration from the fund's investor that its investments were made as a principal and not on behalf of any other person. And after this statement, the stock of Kotak Mahindra Bank has recovered almost 2% from intraday low.
Okay, all right, got it. Thank you very much, Sudarshan, for bringing us up to date on that important story. So Kotak Mahindra Bank, of course, in focus. Let's go across and say hi to Mayuresh Joshi, who's with us on the show as well this afternoon. Mayuresh, good to have you on. So, you know, what do you make of this? Kotak's name being called in, and obviously there was some kind of a sentiment impact on the stock, then the statement from the bank. Just your views on it, or even on the Adani Group stocks. What is your suggestion and how would your approach be?
Afternoon, Surabhi. I think to a certain extent, after the clarification that has come through, I think it has soothed the nerves of most investors on the street. And largely, I think going forward, I think it's numbers that will now do the talking. I think whatever happened in terms of a knee-jerk reaction has probably transpired into the stock. And therefore, I think the management take in terms of their core parameters, how their advances are expected to be. Management sounds very, very hopeful in terms of a solid advances growth over the next 4 to 6 quarters. They're also seeing stability in terms of deposit mobilization. And therefore, the other key parameters that Kotak has already delivered upon in terms of GNPAs, NPAs, NIMs, PCR, cost income, risk-weighted assets, I think that will very well continue as the economy keeps on growing strength and key pockets within the economy also recover. So I think we maintain our positive stance on that. For Adani Group stocks in particular, I think cement as a pack within these group of stocks, in our opinion, should continue doing well. Obviously, you've seen a lot of consolidation, a lot of news related to a lot of players within the industry itself. But expectations of supply-demand dynamics should support cement manufacturers at some point of time. Even if input costs start inching higher, I think pricing will probably remain in their stride. And therefore, I think operating leverage in terms of utilization levels expected to go higher will probably start playing on in terms of the operating leverage of balance sheet. So I think remain positive on the sector. For Adani Group stocks, ACC approach is something that we remain constructive.
All right, cut that, Mayuresh. Stay with us. The other stock on our radar is Angel One. Well, SEBI's new circular on transaction charges that directed market infrastructure institutions to charge all its members uniformly and not based on volumes from October 1st. Well, on the back of this piece of news, Angel One tumbled 8%. Vamakshi joins us to fill us in with a complete analysis on this. Well, Vamakshi, give us details with regard to SEBI's circular. And how will this move impact discount brokers? Go ahead.
Well, absolutely. SEBI has issued a circular and has directed MIIs, that is market infrastructure institutions, and this has been done to discontinue the practice of levying slab-wise fee structures. Now, keep in mind that MIIs include stock exchanges, clearing corporations, as well as depositories, and SEBI has advocated that the charges levied should be uniform and must not be based on volumes. And this circular will be effective from October 1st, 2024. Now, let me just give you some more perspective on this. Now, the current slab-wise fee structure, for example, if there's a broker with a monthly premium turnover of over 2,000 crores, the applicable exchange transaction charges should be 29.5 rupees per lakh of premium turnover, and this is ideally charged on a monthly basis. But brokers mostly charge their clients 49.5 rupees per lakh of premium turnover, which is charged to them on a daily basis. So thus the brokers earn rupees 20 per lakh of premium turnover in the process when this could take place when the premium turnover crosses 20,000 crores for the month itself. So this income that the brokers earn, especially for discount brokers, accounts for nearly 15 to 30% of their revenue, while for deep discount brokers the amount is significant, coming in at 50 to 75%. Naturally, with this new circular coming in, the top line for most of these brokers will be hit, and especially for Angel One, Investec estimates that in FY24 the revenue that came in from transaction and depository charges amounted to 400 to 450 crores, and this in turn represents nearly 25 to 30% of the company's FY24 PBT. Now, one option with the company is that they could go ahead and increase their, they could maybe start charging 20 rupees per order as brokerage, and this could in turn help them offset some impact that could come through from this circular. But that said, it will be interesting to see how the cost levers for different companies are able to offset this hit, and the structural increase that could actually come through in the trading activity if the transaction charges reduce will be another important factor to watch out for. But as of today, on the back of this new circular, Angel One was down in trade.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's also take a look at some more stocks that were on the news. Godrej Properties, DCX, Gandhar Oil, all of them gained, while NMDC was under pressure post their business update. Upasana joins us to fill us in with a quick wrap. Upasana?
Thanks so much for that. First up, let me start with Godrej Properties. The company sold over 200 homes worth rupees 3,150 crores at the launch of Godrej Wood Spaces project in Bengaluru. The company says it has robust launch pipeline in FY25 and it aims to further strengthen its presence in South India. Next up is DCX System. The stock saw a stellar up move in today's trade today on the back of the order win, and companies received order worth rupees 1,250 crores from L&T. The order is mainly for manufacturing and supply of electronic modules with an execution time of almost 3 years is what the company has indicated. Next up is Gandhar Oil. Even this stock remained in focus today and saw a stellar up move as company announced that its foreign material subsidiary, that is Texol Lubritech, won an order from Abu Dhabi National Oil Company. An estimated annual value for the contract is about 375 crores for 2024, 2025 and 2026. And on the flip side, NMDC, the company reported a weak June business update with the total production saw a downtick of almost 3% on a Y-on-Y basis. Total sales saw a downtick of almost 9% on a Y-on-Y basis. And the company has cut prices of iron ore lump by 500 to 5,950 per ton. And it has also cut the prices for iron ore fines by 500 to 5,110 per ton. So all in all, these are the stocks that remained in focus.
Okay, all right, got it. So lots of stocks in news today, Upasa. Thank you very much for running us through that list. Jay, let me come to you. Actually, on real estate in particular, of course, Godrej was in news today, as our colleague was just telling us. But overall, I mean, real estate stocks have had a terrific last couple of months. Do you still see a trade here, maybe a specific view on Godrej, or maybe any of the others that you may like?
Yeah, I'll answer that broadly. You know, as long as the real estate sector remains above 933, there is some of the real estate pockets will keep doing well, and Godrej Properties in particular is probably the strongest within the space. But this is one of the vulnerable sector for me. And if the Nifty were to enter a corrective decline, it'll probably be contributions from the real estate sector. So exercise some caution. Godrej Property is definitely strong, probably upsides to work with somewhere close to about 3,500, 3,600. But DLF, the market leader, that is showing signs that it may have topped, and we'll get that confirmation only if the Nifty real estate sector goes below 933. Until that point, maintain trailing stops.
All right, got it. Jay, thank you very much. And Mayurish, thank you as well for being with us. Appreciate you taking out the time and joining us on the show today. We do have to take a quick break on that note. Come back on the other side and we'll get you all the key events to watch as well as some of the top corporate voices we caught up with during the course of the day.
Ola Electric is in the fast lane after receiving the market regulator's go-ahead recently. Ola is racing towards its IPO. It is going to be the first Indian electric vehicle company to go public on the Indian bourses. But before that long-awaited IPO, we're here at Ola's future factory in Krishnagiri in Tamil Nadu to tell you about how Ola is building its electric empire from the ground up. We're here at this colossal factory, which is where scooters like these are coming to life.
Set up in 2021, Ola claims its future factory in Krishnagiri is one of the most advanced two-wheeler factories in the world, boasting of automation and cutting-edge processes. The factory is automated with modular and flexible assembly lines and an in-house paint shop. When at full capacity, the 10 production lines at the Delhi.
Welcome back. You're tuned into Markets Forward. Well, let's get you some corporate voices that we had earlier today. First up, Bajaj Auto says that demand has picked up in the domestic market and they expect 6 to 8% domestic retail growth in the second quarter of FY25. The management also said that the efforts are focused towards the upper end of the industry and very smart recovery in export markets like Latin America as well as ASEAN. We spoke to the management of Dixon Technologies as well. The company's order book in the mobile phones segment looks very, very healthy. They're guiding for around 28 to 30 million units in FY25 and 35 to 40 million units for FY26. The company adds that a joint venture with HKC Corporation will be significantly margin accretive, and they also plan to foray into automotive and industrial electronics.
Next on our radar is Patanjali Foods. The company says that the acquired home and personal care business of Patanjali Ayurveda will grow at 12 to 15% with margin improvement from 18% to 20% over the next 18 months. Finally, let's move to the new kid on the block. Allied Blenders and Distillers made a strong debut on the exchanges. The management believes that the company can achieve 3,750 crore rupees in revenue and 350 crore rupees EBITDA in the current financial year. The company is targeting early teens volume growth and mid-teens value growth over the next few years.
Well, before we wrap up on the show, let's get you all the key market events you need to track for tomorrow's trading session. Vamakshi joins us to fill us in for just that. Vamakshi, take it away.
Well, absolutely. We'll be watching out for Nazara Technologies, and that is because an investor day is scheduled tomorrow. We'll be watching out for the kind of commentary that comes through from the management. Airtel and Reliance Industries, both of these counters again will be on our radar. Keep in mind that a couple of days ago, both of these companies announced some price hikes in their tariffs, and the price hikes will be effective from tomorrow onwards. So watch out for these counters. We will be keeping an eye out on Dalmia Bharat and Deepak Spinners. They will be going ex-dividend. Jyoti Labs will also be on our radar because along with going ex-dividend, there is an AGM that is again scheduled for this counter. Two new IPOs will be hitting the street. Bain Capital-backed Emcure Pharma is seeking to raise 1,950 odd crores. Bansal Wires IPO is also expected tomorrow. It'll be opening for subscription and they're looking to raise 745 crores. And lastly, on the global front, we will be watching out for the FOMC meeting minutes.
Okay, all right, got that. Vamakshi, thank you very much for getting us that list in terms of what to watch out for tomorrow. For now, we have to take your leave. It's a wrap from the team that puts this show together. Thank you so much for watching. News and updates continue after the break.
Expected to grind out one scooter every 3 seconds. However, at the moment, the future factory has one manufacturing line and is producing anywhere between 2,300 to 2,700 scooters a day.
This Ola Future Factory where we're at is spread on a 600,000 square feet area and has an annual install capacity of 1 million units. It was built from ground up in less than 8 months in the middle of the pandemic, and there's a few things that really stand out as you enter this factory. The first, of course, as the name signifies, the future part in it, a lot of the tasks here on the shop floor are automated, with robots also deployed to carry out many tasks. The second and the most interesting thing I thought is that this plant is largely run by a women-only workforce, so kudos to Ola for that. And third, for a manufacturing facility, it is surprisingly quiet.
The female workers on the shop floor total 944 on-roll employees, representing 100% of the shop floor workforce and more than 25% of the total on-roll employee headcount. After the future factory, Ola also plans to have an all-woman workforce in its cell manufacturing facility, the Giga Factory, as well.
The reason we set up the women factory was that we want to set up an example for the industry that in India, women can actually participate in the workforce.
Ola began the production of its second-generation EV scooters in September last year, and its founder says Ola will start the production of motorbikes in the factory later this year.
We are focused on the two-wheeler, Ritu. Scooters already has given us such a strong growth over the last 2 years, and last year we expanded our portfolio of scooters from the S1 Pro to multiple S1 platform scooters. Now we are working on the motorbikes. Like you said, we showed you motorbikes 15th August last year. Yeah. Those were early concepts, and we've been working on the R&D of those things. Okay. So through next year, you will see us launch some motorbikes, and I do hope that the consumers love them.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night. And
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty end with marginal losses after hitting record highs in early trade. Bank stocks and mid-cap see sharper cuts. Hindenburg says it has received a show-cause notice from SEBI over the Adani controversy, hits out at the market regulator. After being named by Hindenburg, Kotak Mahindra International distanced itself from the US-based short seller, says it was not aware that Hindenburg was a partner of any of its investors. SEBI directs stock exchanges and other market infra institutions to charge brokers uniformly and equally starting the 1st of October, says volume-based discounts could impact transparency and curb fair access to all players. The move is expected to have a significant impact on the revenue of discount broking firms.